Charts always lead the news. Yeah, I'm live right now. Yeah. Full disclaimer, everything's being recorded. Gotcha. Yeah, what we'll do is once the room gets a little, busy, not now. Save the sauce for the good time. Um, then go ahead do your spiel. Obviously alpha only. Obviously you know that. Yeah, and then once King gets on, he's got the floor, and I want just whatever's going on. Once he gets on, it's full on him because he always brings alpha, and he doesn't do spaces. He never does. He hates being on spaces, to be honest with you. So it's like pulling teeth, with him, and I gotta respect that. That's not his niche, and that's not his thing. So I will respect his time when he's on, and I just like and love what he has to say always. So, yeah. Yeah. Okay. All right. Let me put the speaker on loud right now. Let me just get ready. You too.
I'm trying to talk louder.
All right. I am live. Let me just go ahead and post this as well, and then we'll get started. I just got back from my trip, and now I am in my office. All right, posting the YouTube in my thread, then putting it in spaces, and then done. We're good to go. What's going on? Good morning, mother effers, depending where you are. Everything's being recorded. The YouTube is in the net. Good morning, everybody. So everything's being recorded. Everything's in the nest. YouTube is live. We're gonna run through some tickers, and then King Kent will be live at 2:15. The floor will be all on him. He's got 3 great tickers he wants to talk about. I mean, the man has been calling out a bunch of stuff, and he's been hammering it, and he's been killing it. So, when he's on, I like to hear him talk. Rarely does he have the time to speak on tickers. With that being said, let's just run through the mill, see what other tickers we're looking at as we prep for him to come in. What were you saying, KP, KN, you said? KP? Kura?
K is in kind, N is in Nancy.
Okay, N. Oh, and then also, oh man, there's like 2 days ago, I was on Spaces with Ray, a really great add-on to the Discord team. He's always finding like these weird corner tickers, Pepsi. He did fucking, I don't know, there's like 3 or 4 other ones that no one really, McDonald's. Anyway, the ones that are stapled in the economy we never look at, and they're the ones actually potentially thriving. So anyway, let's take a look at KN real quick. Wow, it's actually breaking out.
It's kind of come down a little bit, but this one's been really nice when it comes down to kind of electronic technology and semiconductors. Just no name talks about it.
Yeah, I see that. Guys, if you guys want to see what I'm looking at, again, YouTube link is in the nest. You get to see what I see. Real quick, let me post this in my Discord as well. I forgot about that. Whoops. Oh shit. And then we'll take a look at it.
This is more. This one's been more for long term, just so I can clarify that, right? So.
You know what I love the most? That you're above. I'll tell you right now. Hold up, almost there. The fact that you're above the 0.5 leads me to believe this thing's going to $40. You're above the golden pocket. You got a nice little range. Oh my god, this thing is absolutely looking stunning too. Yeah, this looks really good.
Looking so far good, but when I'm done with the month, right?
Yeah.
The weekly is looked a little weak last week, but like I said, it wouldn't shock me if we get a reversal because we've had more than a 2% drawdown right? That doesn't mean it has to happen, right? But usually semis will lead most times when it comes down to this. So yeah.
Well, arguably, you can be also inside a three rising valleys, right?
Sure.
Let me check the
Sure.
weekly here. Yeah, we got. Ooh, there's a bunch of harmonics.
This might be that double bottom that Blonde Capital was talking about. So if you see the second bottom is the week of January 26th.
Yeah. No, I like it.
The double bottom right there, man.
You got the golden pocket here. If it doesn't break the 0.65, 2376 here, I think this is a really good consolidation range. It should bounce off. Hopefully, if it doesn't, then yeah, there's some pain to keep going. But let me see here real quick from the low to the high.
And disclosure-wise, like I do own a position in this. Clients do own a position. But you know, it's in medical technology too, so they're in.
Metals technology.
No, OCC. Are you doing with us?
You're breaking up. You're doing that choppy shit again with the fucking connection. He's coming back. All right, taking a look at the 3-day on this ticker. Yeah, I definitely want to see a bounce here at the 0.6 ratio, at least a consolidation, and then rip Reno off she goes. I like this.
Can you hear me now?
Yeah.
Mr. Trace 2G, are you down with OCC?
Then you know me. Fuck yeah, I'm down with OCC, baby. What are you kidding me?
Yeah. So I think X is like a fickle girlfriend. Like I had YouTube on another app that was open, so that's when you get glitchies.
But don't you have like the new fucking iPhone 23 or something? Fucking.
Hell no, dude. I'm still rocking a 12.
Wait, the iPhone 12? Did you really?
Yes, sir.
I gotta respect that. Yeah, I think King is gonna talk about OCC. That's for sure. Yeah, just like how he did with GLW, he might go in on that as well.
I might expand my coping leaps this week. I'm just holding on to a lot of things. The only thing that really I'm gonna continue to accumulate is probably IRDM and maybe laser if we get a little bit of a shock down. But IRDM, I wanna increase my sizing a little bit. I'm only at less than 1% of my ports in IRDM.
Oh, you just reminded me about this ticker. I was waiting for a pullback. I'm still waiting on it. It looks like it might get there. But this thing just makes lows and then another high, low and then another high. It's been doing that literally consecutively. And then look at this beautiful fucking upward channel. I mean, it's holding up here. It's holding.
Yeah, I'm in April cons and September cons. I'm up about 30% on my April cons. I might pull a shoot if I get to 50% of that, and then dump more into September. Because the real hit's gonna be this summer on that name.
Oh yeah, okay, I remember now.
Yeah, but Copen, I think with this Andro news, I'm looking closer for like a validation of the IBAS project and get Copen to catch another bid. They've been coiled for quite some time. That stock's been pretty dead, but I really, after talking to the CEO, really have a lot more confidence in their IBAS and IBAS positioning as far as like how much the Defense Department has been pumping into that bag. You know what I mean?
And isn't the the defense budget increasing to 1.2 trillion, or is it already there?
That doesn't happen until like October, until fiscal year changes, when we actually see the change in the defense. Everything else is just messaging. Like Trump's said that he wants it to go to 1.5 billion. It's all negotiation right now. But we're not going to actually know where the chips fall. But if Iran keeps staying frothy, it'll probably increase spend, I would bet. But we still haven't had Senate buy-in on the whole conflict.
Okay. I see Copen. I also see an area of support here, and it's got to fucking hold this. Like, it needs to hold this.
With the $20 billion news for Andro, everybody's going to be picking apart that supply chain. So keep an eye on OUST, Kraken, of course. All the crackheads are already on that. OUST, OPTX, VLO, and Copen are the ones that I'm watching for sympathetic players, but I'm not in OUST.
I'm looking at OUST right now. Oh, okay. Weekly looks interesting. What don't you like
They
about
do
OUST?
No, I'm just not it. I just have too many. I have too many girls at this dance, man. I can't keep picking up bitches.
Yeah.
My band only holds so many.
I got you, man. It's only one man can do so much.
Yeah, but OUST does the LiDAR systems for their Ghost drone as well as some other ones. But when you're talking about like, when I'm looking at the supply chain stack, I'm looking at inputs and outputs. OUST is one of the inputs as far as like LiDAR and mapping. And a lot of their tech was really kind of showed during that Eagle Eye demo of how the Ghost operates. And it's using a lot of visual and LiDAR and infrared, of course.
Oh. Huh, interesting. It kind of wants to do something special. But
Yeah,
it's
put LightPath in there as well, of course. But that's my biggest bag, so I'm definitely pumping my bags here. So everybody take that with a grain of salt.
I actually have a target here on LPTH. I actually been drawing this for quite some time. I'm looking at the I don't know if you can see the chart on YouTube. Let me see.
I can't really toggle back and forth because it'll fuck up everything else.
I got you. So long story short, there's this green box I'm keeping an eye on, and if it gets there, I might just dabble a bit.
Levels? What's your levels on the box?
That box is literally $10. Wow, here we go. $10. It can go a little lower without question, right? I can definitely get. Then the next tier is $9. So if it doesn't break, if it doesn't bounce off that 10, then definitely 9 will be the next area of support.
Yeah, 10 is pretty close to my toddler target. I buy cons around that level.
Yeah, but remember, always place your stop. Always not financial advice. Place your buy order where you would technically place your stop order. So, rule of thumb, they might go down another maybe 0.5 point or a whole percentage point because liquidity sweeps and all that bullshit, all that jazz. So maybe 980. That's a thing. 980, 970.
Yeah, I'm a holder on this one. I don't really try to play it in and out. I will play in and I only play in and out on cons. I keep my primary holdings.
Yeah, full disclosure, I don't give financial advice. I'm not responsible if you lose money. Please seek a professional if you decide to take a trade. I'm not responsible. Anyway, that being said, yeah, I like LPTH a lot. I love this fucking ticker, dude. I'm just waiting for the opportunity on this thing. It's fucking granular. I love this ticker. But like
did you see Iran started to deploy FPVs?
No. Is that hitting the tape right now?
First-person drones, like kamikazes, they attacked an airport, I believe, in Iraq, and they were flying FPVs at it.
Are you?
So they're starting to play from the Ukrainian-Russian playbook. They paid a lot more attention than we did, of course. But I'm thinking we might see something similar to Spiderweb come out here pretty soon.
What was your whole vibe on the conversation with George and his space? Like overall, like what do you think?
Narratives mean nothing, man. I gotta rethink everything. I'm having an existential crisis. So, in order to solve my existential crisis, I'm going to pay $100 for a ticket to a conference where they can tell me that energy is good.
You're gonna have an AA meeting regarding your narratives.
Yes, exactly.
I don't know.
Jesus.
It was interesting. I mean, your narratives are sticky, dude. Like we definitely need fucking defense, right? So I don't know. I don't even know if that falls in line with a narrative talking point.
Yeah.
I don't know.
Well, I didn't even get my question out because I wanted to talk about the lower value semiconductor players. Because a lot of them have run off like ADI. Yeah, the chart doesn't look great on ADI, but look at TEL.
I'm looking at it right now. Yeah, it's dropping like a fly here.
But I'm saying as these start to drift off, as the narrative subsides, the American foundries still have a lot of gas in the tank when it comes to defense contracts and FCC regulations. So I'm looking at, I'm not in any of these at all. Like I'm not in Analog Devices or TE-Con or Amphenol or any of the other ones I'm looking at, but that's just where I'm starting to scratch the surface on.
I see this. There was another one you mentioned. Was it laser or something like that? It was something
Oh
relative.
yeah, that's for the fuck you lasers.
Yeah, I mean, we're gonna need them. And the chart literally says fucking rip dick only. You know what I'm saying?
Yeah, I'm down a little in my positions because I got tired of because I was looking for an entry on this thing for fucking months. You know what I mean? Sorry if I'm cursing on YouTube.
No, go ahead. You can
But
say whatever you want.
for months I was looking for an entry, but I wasn't watching it close enough to start accumulating. But with this thing popping off, and you see the iron beam in Israel, it's just I don't care if I'm really buying a top right now. I'm just gonna start accumulating.
Okay. All right. Well, there is a if I may, I don't want to be doomer over here, but there's a short candle at the impulse on the monthly here, so we'll see. It still has 16 days to close this candle. But if it does seem to be the top, it's just something to consider regardless. But anyway, every ticker that you mentioned always has done nice for me. So give Crispy a follow, folks. This man has fucking incredible knowledge and knows what the fuck he's doing. Yeah, laser just continuously ripped. And obviously with the overall narrative being short-term bearish, we're still not in a bear market. If everything, pivots, yeah, laser seems to be another ticker that could potentially continue onward. I mean, it's obviously overbought territory, but when you have things like this, look at fucking SNDK, right?
Well, my perspective too, when I start buying at a top here, like what I'm doing with laser,
Right.
if we do get a drawdown, I'll buy more, reduce my cost basis, and if we get back up, I'll sell my higher tax lots. You know what I mean?
Right.
So I'll either take the loss on the higher tax lots, or I will take a minimal gain just to protect from going from short-term capital gains to long-term capital gains, because I'll plan to hold this for near a year, you know what I mean? So that when I'm playing in and out of these, because I'm a longer term time horizon than you or maybe some of your audience, I see the higher price stock lots that I'm purchasing, the higher price tranches, as protecting my future lower price tranches, if that makes sense.
Yeah, I hear you. Bro, take a look at SNDK. I don't know if you're in this shit.
Nah, I don't play the SanDisk memory either. Everybody's looking there, you know what I mean?
It's interesting because it's inside a descending right angle broadening formation, and typically these are, 5 touches for the to the trend line, up and bottom end. But anyway, point is that this fucking thing looks like it just doesn't want to die. Interesting. I thought memory was an issue. Apparently, it's not.
No, it is an issue, but the thing is how much is priced in and how much momentum is in it. And I don't like looking at the places where everybody and their dogs are looking. You'll probably have George Noble talking about memory next week, But these things are all toppy in a lot of ways, even though they're drawing down. And yeah, they'll probably still gain back. But in the broader ecosystem, I don't find a lot of value chasing the names everybody's looking at. You know what I mean? I'm trying to get ahead of the curve there.
Right.
I'm trying to be at least 2 to 3 months ahead of Serenity.
I literally just got the fucking joke.
Yeah, she's posted about rare earths now. I've been out of that since summer, but I am actually looking at another entry in rare earths. I've been talking about it in a couple spaces. Primarily NB, if you want to look at that chart.
MB?
But it's
Michael Berry?
So Nancy Bravo.
Oh, Nancy Berry. Okay.
So NioCorp, their Elk River deposit just got their assays back, so it's got some promising. I'm waiting for it to dip down long because they're not hitting the production side of the curve, of the Lassonde curve. But they're not quite at the bottom of the belly from the first wave of the Lassonde curve. So they've got their Momo. But I think for the overall narrative of defense spending and materials, I don't know if the Lassonde curve is going to be apt for this particular player, just because of the needs we have for scandium, niobium, dingalingadongalongium, and tantalum, and all those other ones,
Yeah, I got you. It's only at $4. Targets is 1 year out at 1150. Strong buy from the analyst rating, and they are in value acquisition, exploration, development of mineral deposits.
Yeah, they got 10 millis from the Department of Energy or one of the fucking. They got a little teeny tiny scale up. but that's probably just to qualify the resource. If they get a bigger scale up, that thing's going to pop. But everybody's looking at, you know, MP, USAR, AREC. This one, I think, for space and semiconductors in general, this one's a little bit more interesting. The rare earths is a flyer because that's just kind of like a byproduct of the stuff that they're getting, like in terms of titanium, scandium. I'm just trying to think of all these goddamn names off the top of my head, but
Right.
they're doing a lot of other critical minerals that's outside of like Mountain Pass or Energy Fuels or USAR.
Yeah, it's interesting why it's dipping. When did the news hit the tape on this thing? I'm just curious.
Well, no, they had the same Momo wave in October. So if you look at the outlier kind of like froth for rare earths, for high beta, for the Russell, that October like explosion and then the implosion that was triggered by the crypto collapse on the over leverage around October 10th, October 15th. Then everything Momo got melted down. You'll see it across drones, materials, all that stuff. So they follow the same curve as all the other like high beta speculative assets.
Okay.
But whether they're at the bottom of their channel now, because if you look at, you know, UMAC has gotten to higher highs. Lightpath hit higher highs than that October benchmark. Like a lot of these companies have recovered and surpassed those October levels. This one hasn't, and a lot of the rare earth names haven't either. Some have gotten close, but I think there could be some re-rating here across this sector. Now that Serenity is interested, I think we could see some Momo waves.
Oh, yeah, she likes to show that VLN bullshit, and look how far that she's gotten with that. Like, she doesn't really give out good call-outs. But respectfully, I got to give her some credit where credit's due. I mean, she does do a lot of call-outs. So maybe some are sticky, some are not, but I got to respect the hustle, so.
Thing is, she's often late, but she carries weight.
Ooh. Hold on. That one is a fucking... Hold up. Okay. That's a fucking banger right there. She's often late, but carries weight. I fucking love that, bro. Fucking crispy the fucking flesh, dude.
You might have gotten a call.
Wait, can you guys hear me?
Yeah, you're back now.
Yes.
Holy shit, crispy, that was a banger, bro. That was a banger. Oh, speaking of bangers, you know, in George Space, Ghost, I'm gonna give you a chance, bro. Just give me a second. You know, the more we keep talking about critical minerals, commodities, why does ABAT seem interesting?
What I was talking about was that DOE release, particularly recommend people read that out. But there's a lot of talk of batteries and lithium in particular, but also of recycling in particular. So the language that I'm reading that in, it makes me look at ABAT and AREC, ERIC and ABAT. Those two kind of like, if you do like a semantic search between like the business operations and like that particular press release, you'll see a little bit of overlap in the strategies.
And it's all about that second facility that if they do execute, I mean, that they have zero debt, whatever have you. You know, I'm not a finance bro, but, you know, I keep listening to the fact like, hey, we want to start, you know, mining our own shit here in the United States. They're literally...
These things take 5, 10, 15, 20-year time horizons, you know? You don't stand up the mines overnight. And with ABAT losing their grant got pulled, and then it was a will they won't they for a while.
Right.
I've never really had investment into that company. It could be like an opportunity, it could be some like dumpster juice, like potentially to pick up. But it is interesting considering that particular press release or whatever you call it. It wasn't an executive order, but similar.
Right. No, I hear you. I'm gonna try and get this ABAT quant. He is like, if you just search ABAT, his name is Waggett Jaggard, and he's in my Discord, and this guy just follows ABAT to the T, and he's been in it since 70 cents. So I'm gonna try and get him up here to talk a little bit on ABAT if he wants to come up. Other than that, you know, ABAT seems like a great candidate, especially if this whole China fucking United States narrative, if we stop buying from China, we're gonna have to start looking internally in the United States for, you know, companies that are already doing the whole mining business. That being said, Ghost, you said you raised your hand. I'm sorry, but go ahead. You can speak on what you want to speak on, Mr. Ghosty, if he's there. Get.
Yo, what's up, Sammy? Yeah, sure, no, man. No, I was listening. I heard you mention actually McDonald's MCD,
Right.
but right now more on a shorter term like potential trade, not a long term hold for me. I'm checking QSR. So QSR is basically the holding company that has Burger King, Popeyes, Tim Hortons in Canada, and Firehouse Subs as their main brands. And I was checking the pair analysis between McDonald's and QSR, and I think like another thing, like QSR hasn't retested its all-time highs back in 2024, so maybe we'll get like a short season of potential outperformance on QSR.
What do you?
And if you see that,
Go ahead.
no, go ahead.
No, I mean, I'm seeing a pattern here, but what do you potentially see? It's a restaurant brand, international business. Okay. Target's had this at $80. Interesting.
Yeah, that's the company that holds Burger King and Popeyes and the other brands.
People still buying Burger King, especially when RFK in the fucking house. We still doing this? Let's fucking go. Let's see. It bounced off the 0.5 ratio and the 382. Now retesting the 236, 7254. Having a hard time breaking above the 7254. That being said, that is a key area of resistance. Interesting. It is inside an ascending wedge pattern, which is technically good. And it's been bouncing off this trend line. Everything's on my YouTube. Hate it, love it. Hit the like button on that damn thing. I would appreciate it. Yeah, trigger some algos. 7254. If it breaks above that, dude, this thing is actually going to do something special here.
Where's King? I thought he was gonna be holding court.
Yeah, he's coming on right now. Let me get his ass in here, bro. Let me get him in here. I think he's getting home right now. Get on. You're live, bro. Let's fucking go. Yeah, this one, Ghosty. Tú siempre sabes buscar una vaina, loco. Esto parece que quieres romper. I like this chart, bro. Huh.
No, thank you, man. No, I mean that's more like a shorter term potential.
Yeah,
But
swing the trade, man.
The real one that I'm really watching, and I've been like talking about this, is like I think like Neo is poised to have like its outperformance season, like NIO. That's the one I'm really watching right now. I'm positioning myself into, because the last time Neo had its parabolic rise back in 2020, oil was like $100 or something like that. So now we're like repeating the same thing. Like now oil is super high. Neo's fundamentals in the past 4 years like have been like improving in terms of revenue, in the narrower losses, all of that. And in terms of the chart on a technical basis, like, yeah, man, like Neo is like making this high time frame like rounding bottom, and I think it's gonna go and retest. $8 has been like a key resistance in Neo,
Right.
which has been rejected 2 times. And yeah, man, like I think that's gonna break out eventually.
If it gets above 627, I have my YouTube up, but the 236, if it sustains that number above that ratio 622 and consolidates there, you have an 80% chance to get to a 382, and then from the 382 to the 0.5, 60% chance. But we got to really cross that 622 line, because it just absolutely gets ass cheek clapped from there. I mean, we tried multiple times, and it just hasn't done anything, especially on the weekly time frame. I'm looking at this thing, but yeah, interesting setup here. It does look like I want to make some moves to the upside, but it's that 236, bro. It's having a fucking pissed off drunk day every time it hits that. And pivoting away from this, King Ken is in the fucking house. What's going on, brother? Good to see you again. Where the fuck you been, bro?
What's going on, y'all? How y'all been? How's everybody?
Good, bro.
I see you.
Listen, I had to do the spaces, bro. It's been what 4 or 5 months since we last had you on.
We need trumpets and minstrels like.
Yeah, bro.
Get on my nerves, bro. I miss you, Crispy. Get on my nerves, bro.
I like King when I like you shine in these opportunities, bro. Especially when you talk some out of the wall fucking tickers. Because when you called out SNDK at 80, when you fucking called out GLW at 84, and then there was like another ticker WLDN. Like you're on fucking point, bro. Especially when everything's against the trend, you look for the trend. You know what I'm saying? You look for the trend, bro.
You gotta notice that when Sammy's talking to King, like the New York comes out a little bit thicker.
Of course, sometimes I gotta put on my little white mask, and then I gotta put on, my little where I come from vibe. So King knows where I'm from, bro.
That's facts, bro. That's facts.
So
man.
talk to me.
All right,
How do you want?
get to this? Let's do it.
Let's do it. Where you want to touch on first?
We just start off at the top, right? We'll start off at the top. All right. Everybody saw the growth with GLW, right? Corning. Corning cannot take every contract for every data center that needs optical cabling. It's just too big. It's too much. So somebody else has to fill in that gap. Right now, we got a company, OCC, Optical Cable Companies, who has been dormant for the past 20 years.
24 to be exact. Go ahead.
Yep, there you go, 24 years. I'm going to ask Sammy to pull up the chart as we talking about it. All of a sudden, they had a $1 million backlog at the end of 2025 in December. Here we are, 3 months later, now they have a $10 million backlog. All right, this company is small, right? They've been doing this for a long time. So that means most of the people in the industry know them. But the problem they had was what? Nobody cared about optical cabling. We connect our cable boxes to it and we move on with our life. Nobody cared about that specific niche forever. Now all of a sudden, we got AI. Now all of a sudden we're building data centers and hospitals need faster cabling, and now our buildings all of a sudden need faster cabling. Now all of a sudden the company that nobody cared about for 20 years, all of a sudden now they starting to get some shine. Right? So right now we are early getting in. All right, Sammy, can you pull up the chart?
Absolutely. I'm about to post it on the Nest. I posted this. I actually posted it, I think, a week ago. You can also see me charting on my live stream posted in the Nest. The YouTube link is in the Nest, but I'm also going to post the chart as well. Go ahead, King.
All right. So they did their earnings report a couple of weeks ago, and then all of a sudden they was finally able to break through resistance. They've been in the same $5-7 range for 23 years. So, with that being said, we understand the moat of the company. We understand what's going on right now in the world. We know that infrastructure is not slowing down, no matter war, no matter, how we feel about, the global economy. None of that matters. We are always going to be building. That's just who we are as a nation. That is just what we do. That is what we will always do. And the smart money is moving into infrastructure. As we look at that tech, every one of the main infrastructure companies, their institutional ownership in the last months has grown by at least 30%. So I think we're missing the boat on this one, guys. I think we're looking in one direction and the big money's moving in another. And as we go further along, I'm going to bring out a few companies that I want people to look at. Right? We already know that VRT is moving into the S&P 500. I think we need to start paying attention. Right? We're not paying attention to infrastructure, but all of a sudden infrastructure programs and infrastructure companies are starting to get the credit that they've been lagging behind for a little while. So I got two of them, and I think it's going to be joining the S&P in the next 6 to 9 months, but we'll talk about that after we finish with OCC. Sammy, what do you see in the charts?
VRT, I mean, it's about to hit a resistance line all the way up here at 330. I'm almost done charting this roughly. But yeah, looks like it wants, I don't like the star where it's at right now, but again, with momentum tickers, you know, when you think when you think it's done pulling back, it wants to, you know, find another low, another higher low, and then make another new higher high. So let me go ahead and finish this chart here real quick. And then, you said this one's going to the S&P 500?
Yes, that's what I wanted to talk about. And I told Crispy to help me out with this too, right? When companies join the S&P 500, it changes the direction of the company. Okay? Now, when you look at infrastructure companies, the thing that's most important, beyond the revenue, beyond the numbers, is what is your backlog. As your backlog continues to grow, it shows the future trajectory of the company, right? If you look at companies like Vertex, they have massive backlogs. Massive backlogs. That is years and years of business.
What was the company
right?
name again? Say that one more time.
Vertex? Oh, VRT you talking about?
Okay,
yes,
go ahead.
VRT.
Got it. Go ahead.
Mm-hmm. When you talk about a company like VRT crossing into the S&P 500, you look at the other major companies that are in their moat, that are in the S&P 500. Who do you have? You have the big daddy, Fix. Right? We know, for most of us who know anything about infrastructure at all, we know that Fix is the big daddy of the big daddies, right? $1,400. They're about for their stock price right now. EME is right under them, right at somewhere around $850 right now for their stock. As you can see, over the last 2 years, if you look at the trajectory, all of the infrastructure players are just running up, right? While we're looking at NVIDIA and Meta and all of them, they can't actually build these buildings, right? They're not the ones that's actually pouring the concrete, putting the cabling in, putting the cooling systems in. Those are the players that's gonna make the most money in the midst of all of this. And we seem to just miss it because it's not sexy. Nobody wants to talk about the picks and shovel guys and the ones building these things, but that is where all the big money is moving, guys. Right? So I think it's time we start to pay attention to where the big money is moving and follow it instead of fighting against it. Crispy?
Yeah, this is definitely interesting for me. It's a little pricey for my usual plays, but they got a book to bill ratio 2.9x, so that indicates super high demand. Their organic orders, their backlog orders have increased 252% year over year. They've got the demand just stacked up for them, so they are interesting. I don't know if they've already ran or how much juice is left in it. But it does look
they just started.
Yeah,
they
15.
Just started.
Their market cap's about $1 billion, and they got about $15 billion in backlog.
Yeah, their market
That's
cap.
what everybody's saying, Crispy. Their backlog is 5 to 10 times bigger than the company is. That means they just starting.
Yeah.
And they joining the S&P 500, and they just starting. Right now, you have some analysts that are saying, "Hey, this company could go to 350. This company could go to 400." But then you got some other analysts out there that's already talking about $1,000. Now, this is my thing. Fix. If you look at FIX,
Let me just
they had 1,000.
Let me just say something regarding what Crispy just said,
Please.
and then
Please,
then you go ahead
Let
and
me step back.
No, it's fine. So I thought the same with fucking SNDK Crispy, and I remember him talking about it when it was fucking $80, and he's in my stream, whatever. He kept pounding the table on this fucking thing. Anyway, long story short, a week later, the damn thing went 130. Then he comes back on the stream, then 230. Then it went up another, and I said, okay, just wait. Crispy, I kid you not. Like, I don't know with these fucking momentum takers, bro. It's just so hard to try and capture shit that's already like just monstrous moving. Like when you think you might get that pullback, it just continues to rip. Now you're always gonna have your pullbacks, right? It's just the timing is very, very hard. No one can ever ask for a perfect entry. There's no such fucking thing. It's just when it comes to these kind of plays, is the conviction there? Okay, if you find and you do your own due diligence, make the move, and you better hold on to your dear life, and hopefully you're right. So to your point, it's just hard timing these things because the backlog keeps increasing. The companies are making all-time highs. It's up only and to the right. It's just really holding on to conviction at that point. And I yield the floor. Go ahead, King.
Yeah, and that is the question, and that's why I love having somebody like Crispy here, right? If you can tell me when NVIDIA was at $70, and we say, oh, a pullback is coming. When Sanders was at $80, oh, a pullback is coming, right? If you take away the noise, if you take away the noise and you look at the data and statistics, Crispy just gave you the data and statistics, right? The company has basically 15 times the backlog as what the company is actually worth. So what does that mean as the company continues to grow? As the company continues to grow, at some point they got to catch up to the backlog, right? So are we behind where the company should be at now? All the analysts are saying yes. All the analysts are saying it's about 50% under what it should be based on this backlog alone. Right?
Yeah,
I don't
definitely
understand how they how they look at the numbers and project those things out. But as me being the average person, I just know that, hey, you got 15 billion more than what you worth. Let me get in now, because when you get there, I want to be a part of that. Because that's some big growth, right? And then the fact that the S&P 500 agrees in allowing this company to join the biggest index and the most famous index in the world, that tells you the momentum is definitely ahead of them, and we just getting started. Crispy?
Yeah, and that puts them in everybody's 401ks. That puts them in in a different investability class, like in terms of like the overall broader market. This is not my sector, and I'll definitely defer to you in terms of like following these plays. OCC is a little more interesting to me right now because I see like a more rapid growth trajectory, and primarily because of the mil spec ratings on the OCC. Like they're going after the niche as well. And when I did a Porter analysis, this might be handy for you too, King, is the Porter's 5 forces analysis. That's where you look at like where a technology company is positioned in the broader ecosystem. They look pretty solid there. So they do have high competitive risks as far as like other players in that sector. Their competitive rivalry is high. Everything else is moderate to low. So, but they have really carved it out by being the niche player as far as these, mil spec optical connectors. And if we're looking at the overall narrative of niche players in terms of edge compute, like you got your OSS, your one-stop solutions, you got like SPAI is kind of playing in that place. Everybody, Anduril, Palantir, they all want to have these little mobile military hardened data farms that can go in the back of a truck and that can serve drones, AI locally. And if you're going to be connecting all this stuff up with fiber optic cables, you're going to be needing those spec ratings. And I only see OCC as a player in that market. Like I don't see any other people that are really carved out that particular niche. and they can use that as the launch pad for like the bigger data center plays as well.
And if I may add on to that, somebody also said since silver, gold, and copper are on the rise, that means they might have to prices are going to be upped here, and especially when they're doing fiber optic cables, those little strings, yeah, they're going to cost a couple more bucks. So they're probably hitting margin on top of that. I mean, aside from the financial perspective on OCC, there's a fucking monthly rounding bottom, and it just broke out of it at I have the charts in my nest. But remember TE rounding bottom, rippity dick. Robin Hood rounding bottom, and now it's at triple digits. Palantir rounding bottom. Now it's at triple digits. So ABAT rounding bottom went from 80 cents to $11. So when I see patterns like this, just from a technical standpoint, OCC is like the underdog. I'm telling you, 24 years of consolidation. Literally 24 years, 8,600 something days, it finally broke a key resistance. And when I see rounding bottoms, I'm paying attention to it. And then it pushes that narrative even further. We need fiber optic. I mean, we need fiber cables, whatever have you. It's in the industrial. It's in the oil and gas. It's in the military. It's literally in cybersecurity. It's in the data center. Like, this fucking ticker is trading at $7.40. And you mean to tell me no one's paying attention to this?
And as some of my other like kind of like peers or like mentors often talk about, you have like your theme, dream, and meme. Like I got this from Mike and Bruno and V, and everybody kind of like looks at these companies in that spectrum. They have the theme, they have the dream, but they haven't popped on the meme yet. So with everybody looking at OSS, with that being a stock talk darling, with that being like if you look at all the posts on X, like that's getting to Ondas levels of froth. You know what I mean? Same thing with Kraken and all the crackheads out there that love Kraken. Like when they stumble on OCC. When they stumble onto OCC, that's going to be another little narrative ripper. It could be worth it for a swing, like because we could see like a pumpy dumpy on that one. But if you can catch the pump, there you go.
Well, maybe, but at the same time, their earnings were really good, and that's another thing that kind of. Yeah, this one may or may not be pumping dump.
There will be a lower floor, as far as like it's not going to go back down to the base, but you're going to see like a step up. So you're going to see an overcorrection to the upside as the memes pop in, as like Serenity makes her post. Then you're going to see probably so you'll see like a 50-60% run. Then you might see a 20-30% fade after that. But the overall base is going to be a step up. So if you're a longer term holder, it'll work out well for you. But if you're like trying to catch the momentum swing, I wouldn't ride this too high if you're trying to just date this girl rather than marry her.
I agree with you. But this is the thing about OCC, right? That I find to be very interesting when I look at certain tickers, right? OCC's niche is so strong right now, and as I'm transitioning into infrastructure, I'm understanding how hospitals are built, right? How these police stations are built, how our government buildings are built, right? And then I started looking into larger buildings. Right, and as our larger buildings are being built, all of these places now they all want fiber cable, right? And like I said, Corning we know is the big daddy, GLW, right? That's the big daddy. But the problem is, the big daddy can't carry everything. There's room in this sector for multiple companies to launch. And the thing about OCC, which is different, is that OCC's been here for 23 years, 24 years. You know what I'm saying? They're not new to this game. You know what I'm saying? They didn't just get $10 million in 3 months of orders out of nowhere, right? They got some shakers and bakers that we don't understand or know about yet. That's underneath them, right? That's in that.
Why are they losing money?
Why are they losing money? Because nobody cared. Nobody cared. For 20 years, nobody gave a damn about no optical cabling. You know what I mean? Except for our cable boxes. Right? But now, when you have data centers, now, when internet speeds are the highest it's ever been in history, right? Now, when we're having all these satellite communications and all this other, shit that got to go and everything got to be about speed. Now, all of a sudden, oh my God, this company that's been dead or left, on its last leg for 20 years, that means it was 20 years ahead of the game. Not behind the game, we just didn't realize it.
Or 20 years of surviving the game, because think of how many macro environmental like apocalypses have happened in the last 20 years.
Why you had to talk about that, though?
That's funny.
Listen, that means, but he's right. That means to tell you that this is a company that has survived every single downward forcing situation in the last 23 years and still on their feet. Right? This company has had 300 plus employees for 23 years. Right? And they haven't been able to grow. What are they going to do now that they actually got $10 million back orders and they can actually start building things out and hiring more people? I can't even imagine where this company's going to be in a year from now, let alone 2 years from now, right? As we looking, they still not profitable. If you looked at their last earnings report, they almost there. But you know what happens when it turns green? This thing is gonna rip. If the next earnings report makes them profitable by 1 cent, this thing ain't gonna be $7 or $8 anymore, right? And that's the thing we talk about when we talk about, does the company have a moat? Does the company have something that we need now, right? If that answer is yes, I ain't talk about meal specs. I left that to Chris because I knew he would find it. I had to give him something to cook up on, right? But if you're looking at this thing and you're saying to yourself, is this a company that could continue to grow? Yes. Do I think next week they're going to hit $100? No. Right? But do I think in 2 years from now, they'll be in $18, $20 range? As long as they keep getting deals, as long as these AI data centers and these government buildings and these hospitals continue to be built in America, they're going to continue to get deals. They're going to slowly continue to climb. This is one of those type of tickers. All right, Sammy or Crispy?
Go ahead, Crispy.
I would say like net income has been improving as far as like it's on that trajectory. We have a 4.2 mil loss in 24, and now we have a 1.45 loss on 25. So if we're like looking at that trend line, it is in the the appropriate direction. Same thing with EPS. So it's like if you're looking for like excellent deep value like cash printing operations that are like have high levels of revenue that aren't reinvesting into capital expenditures to capture a broader market segment, then maybe look at like a bakery. I think this company is pretty interesting in terms of their forward potential and the way that the trajectories are aligning.
And from, again, the TA side of things, this company, I'm going to have to repeat this one more time. It's above a 236 monthly Fibonacci retracement level. Again, the more we stay above the 236, I'm just going off of ratios and probability, guys. I work on probabilities. It's got an 80% chance to get to 3.2, which is the target at $12.74. I mean, this thing has been sitting above the 236 for literally maybe since February 6th, and it just, obviously, after earnings, it just made another new leg over here. So back up to 918, now down at 740, and that's a scallop on the daily. And if you guys know what scallops are, those are continuation patterns. Obviously do your own due diligence, always backtest what we say. I'm not a financial advisor. Please, always backtest what the fuck we say up here. And respectfully, don't listen to anybody on Spaces unless you do your own homework and make the conviction that you want to put money in the company. So based off what my experience with King Kent, he's been calling out a lot of good ticker. He looks at sectors that no one's looking. And that's what I love about him in general. He looks where no one's looking. I love that about him.
One other aspect of it, just like net sales up 9.5%, we're looking at gross margin improvements of 360 bips. So they're above 30% gross margin now. They were at 27.3 in fiscal year 2024. Backlogs up 28%. But King, what can you tell me about Latera?
The hell is that, Christy?
I love the pivot. What is this?
They took a 7% stake in OCC in 2025.
Oh, yeah. Sorry. Yeah.
I don't know if I'm pronouncing it right. Is it Litera? Is it Clitera?
From what I understand, but this is the thing, right? From what I understand is that there are a lot of people who's trying to buy pieces of this company right now, right? So I don't want to overstep, I would say, because if and that's the key word, if they get bought out, which I didn't want to talk about, thank you, Crispy, but right, there are some companies that are definitely trying to front run this run up. They're trying to buy them out piece by piece. Apparently, they're trying to position to do that. Apparently, ownership does not really want to do that. But if the price is right and the right offer comes in, and apparently, they're saying some rumors about $25 a share, he would consider even think about a buyout. So, let's see. I know they offered him a lot of money to get that small percentage, but right now he has no thought about truly selling. But he seems to be a smart man, been around a long time. Apparently, if somebody give him $25 a share, he'd consider it. So that would be huge for anybody holding the stock. If an offer came through $20 to $25 a share, I don't know, but just keep your eyes open on it. I didn't want to talk about that side of the ball game yet.
Ken, do you know? Do you have any idea why it fell in December pretty badly from 9 to 4, and then it ran back up? Do you know what?
Of course.
Or what? The earnings.
It was just it just went with the market sentiment. No, it just went with the market sentiment.
Just anti-data center type of sentiment.
There you go. Yeah, and not only that, but you gotta also remember, until they hit, I would say probably $11 to $12, they're gonna swing with the overall market, right? Because they don't have a big enough
It's high beta,
to not swing with the market.
Do you have any idea what their edge is? What's their competitive moat or edge? If you could just sum it up.
Yeah, honestly, the biggest edge is mil-spec. Their cable and mil-spec is higher than the majority of companies that do this. And because of that, they can go and be installed into military applications, right? Government buildings, right? They have a moat that's a little different, but it also is the thing that's kept them afloat all of this time, basically, right? And as long as they continue to keep that standard, they're gonna be fine no matter what.
Yeah, I'm looking at that particular catalyst that you're talking about, Fashion, that is December 17th to 18th, that corresponded with earnings. They had a gross margin drop to 24%. I'm not looking at all the numbers. That's just the first one that popped out at me right there. But if they can hit revs around 19 to 20 mil, like that's when they hit their kind of break-even costs. They're projected at $76 million for this year. But I don't know how much that's considering like backlog conversion and their book-to-bill ratios. But they're just right on the cusp of profitability here in terms of like what the targets they need to hit. But they're like one or two big contracts away. I would keep an eye on the Department of War contracts listing. I might even set up some alerts on this one if I do see Optical Cable Corp pop into this. With Andrew getting a $20 billion contract, you got Palantir getting these. Like they're going to be building a lot of these edge compute stations, and like what King, what you're talking about with hospitals, universities. You also got to think of military bases and how many of these are going to be doing upgrades to fiber optic with how much Emil Michael and Hexeth are pushing AI. All of these military AI systems are deployed on military infrastructure. They're not going to be running it on an Amazon cloud or a Google cloud. They're going to be running it on their own clouds. That's why they're using older versions of Claude. They're using like Claude 3.6, instead of like using the top of the line current models, because they're hosting it on their own infrastructure. And so as these other data center players are maybe converting from fiber optic to over cable, they're doing that primarily because of cost constraints. Like if Ethernet cable costs so much to do this, and that could be affected by the price of copper, of course, but fiber optic might be a step up in some directions. But like if it's worth it for, depending on the distance from server rack to server rack, CPU to CPU, the amount of losses that you get from copper, Department of Defense is going to make a different calculation there. They can spend the extra money and just go fiber all over the place just to be more forward. I'm trying to think of, to
be ahead of the game.
Forward, like risk, be ahead of the game, essentially. Yeah, but like they don't have to worry about pinching pennies on like multi-billion-dollar data centers to be cost competitive. They just have to worry about long-term resiliency.
And that's the last point I want to touch on too, bro. That's the last point I want to touch on. Right? When you look at OCC and their cabling compared to others, the reason why they stand out is because throughout time, their equipment is a little bit stronger and a little bit tougher. Right? So when you are dealing with, like Crispy said, when you're dealing with a penny pinch, this is 40 cents, this is 70 cents, right? When you're not dealing with that and you want the best, you call Corning, GLW, or you call OCC. That's the bottom line. You want the best. You call Corning, GLW, or you call OCC. That's it. That's it.
What does it say about
this one?
And something to your point, what does that say about people wanting, or at least companies trying to buy out the company itself, right? I mean, they wouldn't just want to throw money at a company that doesn't have any legs. So that says a lot about where this company is in terms of who they are, what they do as a business.
I mean, yes, but you got to remember the value of the company. Okay, so think about it in these terms, right? If you've been a $6, $5 company for 23 years, nobody cared about you, right? Nobody cared about you. These other companies understand that, hey, they about to become profitable. Let me try to buy them before they become profitable. Why? Once they become profitable, yesterday's money ain't today's money. I'm gonna say it one more time. I Crispy would tell you this.
Yesterday's
price.
price.
Say it a different way, but yesterday's money ain't today's money.
There you go. Yesterday's price ain't today's price.
Hit profitability. Right? You can't come to them and say, "Hey, I buy 7% of the company with $20 million." Now that 7% of the company is gonna be $80 million. Right? So, Crispy, can you speak about buying out companies and the difference between when a company is just before they hit profitability and what happens after they hit profitability?
I usually work on the pre-rev, like the pre-profitability. I work on the distress stuff. I'm more on the theme and the dream than waiting to catch the meme. So, but when you start hitting profitability numbers and there's a lot of funds, a lot of hedgies, a lot of institutions that cannot invest in companies that are not profitable. So, like, if they hit to that $19-20 million, if they start flipping that switch to having positive numbers, then, and I think you have to have it for like a certain period of time, but like then, like
it's 3 straight quarters, Crispy. It's 3 straight quarters.
But then you start getting index funds, ETFs, institutions, hedgies, capital managers, like private funds. Then those people start to look at it because it becomes investable.
Right. And to your point, Crispy, I do want to note, like, when everybody's chasing the tail end of a move, we have these conversations. We're potentially seeing, again, this is potential, not financial advice, a company that is just about to break. It's actually going to make new higher highs and higher lows, especially after a 24-year consolidation phase. So you see in certain spaces, oh, companies are already fucking ripping. You guys are assed out, and now you're hoping that once you go into a trade, it doesn't come right back down. This fucking thing is literally at all-time lows, at all-time bottoms. From a risk reward, do your own due diligence. Again, everybody. Again, I cannot stress this enough. Consolidation of 24 fucking years, ladies and gentlemen. And it's just finally breaking out of key resistance. It's actually under it right now. But if it breaks above that area, 760, 760-ish, I mean, look, I'm just, again, Fibonacci's. 80% chance getting to that $12.74. I'm telling you that this company, in terms of charting alone, it has some legs. It has some legs. For me, from the TA side, not financials, but the TA side, I really like the setup here. So, King, you always find these little fucking gems, man. So I always, I appreciate you a lot, man. I do.
Yeah, listen, I appreciate you having me, Crispy. I appreciate you always being in and supporting me as well. Like I say all the time, I just say the same thing. All I want is for everybody to become green. Just become green. That's all I care about, right? So if you find a ticket like this early, and we all can look at it, do our own reviews and due diligence, and if this is one of those tickets that get you from red to green, then congratulations. I'm happy I came up here and said something.
There was
the floor.
No, and there is one more company. You said VRT, OCC. What is that third ticker that you were looking at?
Well, for me, I was looking at two of them. Right? I was looking at GLW while we in the midst of this chaos, and the ticker is going to be moving around, getting it at a low while you could before it run back up to 160 again. And then the last one was Mastech, MTZ. But I can save that for another time.
What was the ticker name?
Oh, MTZ?
Mastech, okay. I never heard you talk about this ticker.
Now, again, that is an infrastructure play. But the analyst targets are extremely high, and the financials are looking really good.
Holy shit.
The backlog is looking really good. And now that Crispy is here, I was going to ask him, hey, Crispy, can you look at the backlog and the financials on MTZ?
While he does that.
What? This thing's down near $300, man. What do you want me to do? Take out a second mortgage?
But hold on. Wait a minute. Hold on. Now, this is where we start. What I'm having to shift in my mindset. Okay, now, we all say, hey, I want something stable. We all chase the dream. I just, the what do y'all call it? The volatility, right? And all this other shit, right? All that's cool. But have something in your back pocket that is green. Have something in your back pocket that is growing, in the sector that is growing, right? Where big money is moving, right? And I'm not saying you go buy MTZ or VRT, right? There are tickets that's $40 in this sector. There's tickets that's $30 in this sector that have been going straight up for the last 3 months. What I'm saying is the big money is moving into infrastructure for a reason. Do not get left behind. Do your due diligence. Now, for me, in my little portfolio, I'm saying to myself, wait a minute, am I missing the boat? And then, once Crispy talks about the backlog, I realized, wait a minute, I didn't miss the boat, not yet. Just like VRT, they probably haven't even gotten started yet. Crispy, what do you see?
Yeah, we got a 33% increase in backlog over prior year. We got a 19 billion back. We got a 19 billion backlog.
Jesus Christ.
Q4 revenues up 15.8% year on year. Fiscal year 25 revenues up 16.2% year on year. Let's see, pipeline infrastructure segment particularly on this one, and you know what pipelines do, right, Sammy?
Go ahead.
Pipeline is, Sammy.
No.
Oil and gas, a pipeline, a big tube, a big straw that you install to move shit from here to there.
Okay, well then then yes. I thought you were talking in like another reference, like another point of conversation.
Okay. They had a 50% revenue surge in pipeline infrastructure in Q4 last year. That was pre-Iran.
And now they're rippy dicky.
Then now they could be rippier dickier.
Huh.
No, Sammy, you're not getting what he's saying. I know you, bro. You missed it. Listen to this. They build pipelines, right? That's part of what they do too. How many pipelines have been destroyed?
You talking about the, okay? We're talking about hold on.
War.
No, I hear you. You're telling me they're also working outside United States?
Yes.
See, that changes things. Huh.
But all infrastructure companies mostly work all around the world. This ain't nothing new. This just ain't your sector, but it ain't nothing new.
Okay,
So
but
you
Sam,
tell me.
when they're rebuilding these things, if shit gets squashed, do you think they're going to be putting those into a European contractor or an American contractor?
We already know America's better.
There you go. There you go.
You already know America's better. So you're telling me this thing still has legs?
Yeah, when they're building infrastructure in Venezuela, do you think they're going to put in a pipeline that's going to be a Venezuelan contractor or, a Caracas contractor or Colombia or anybody?
Or
Or
Sinaloa?
do you think it's going to be an American company that gets that contract?
Obviously, but it's gonna be us. Interesting. So this is what they do, huh?
And that Q4 50% increase was before Venezuela, was before Iran, was before any of this.
Good job, King.
And remember, but that is not the entire amount. That's only, I think, 20-something% of the amount. Right? They still doing this. They still, yeah. That's only like 18 to 20%. Right? They still doing data centers. They still doing infrastructure. They still doing all that on top of that. That's just an extra bonus on top of this.
I got a target at 600 on this thing. 662. What the fuck is this?
And wait a minute. Wait. How did you get that target when the analyst target is 650?
Are you serious?
Did you just cheat?
No, I don't know what the fuck this. I'm looking.
Is that on the fibs?
I'm looking at my fibs. It broke out of the golden pocket in the 0.5 on the monthly, literally on the 3-month time frame. And typically when you break above the golden pocket, hold up, and I cannot believe what I'm seeing. This thing is going to fucking 660.
Okay, I have their book of business here broken out. We have clean energy and infrastructure, CE&I. That's 33% of their business. We have power delivery, electrical transmission. So you think of power lines, shit like that. That's 30%. So like a third is clean energy. That clean energy also covers their AI data center, hydrogen, solar, wind, all that stuff. Transmission, so grid modernization, all that fun stuff. And then we have comms and pipeline infrastructure. That's only 15% of the book of businesses in the pipeline. So that's essentially a call option on this play if you're holding this over a year.
Bingo bango. Jesus Christ. Mr. King. What are you doing, King?
So I gotta get third mortgage now, King. They love me out of the bank.
Dude.
I come in with my property like it was a fucking debit card.
I would want to wait. I want to wait for a pullback on this thing, to be honest with you, because it is just too fucking, like, it's just been up only. like literally since fucking April. The bottom on this is going to be very hard to time. Shit. So typically it's literally been retracing. I'm just going to take from the previous high to low. It retraced 17%. After April, it only retraced 17%. There's another high-low retracement here. That retraced 13, we can say 14%. So the average is 15%. So if it retraces roughly around that range, I want to, I would love 20, 25%. But if it does the 15% average off of the two retracement levels I'm seeing here, that would be, some way to DCA, not financial advice. I'm not a financial professional. So I'm just going to go off of previous price action history. Very interesting. So it's retraced on average 15%. After making new higher highs and higher lows on this fucking thing. Jesus Christ.
Yeah.
Interesting.
Boomer basket.
Yeah, so if I do the average 15%, that number gets me back at 260.46. I would love to catch this at 237, right at my fib level, but, one can always wish, but never get. So I'm looking at 260 for a retracement here. Hopefully touches at 237, but we'll see. I'm going to keep an alert on this one. It is showing signs of a little bit of weakness here, but, with that kind of backlog, dude, and then people now catching on to this fucking thing, one can dream, right? So we'll see. But nice one, King. Jesus Christ. And the fact that I got a target at 6 aligns with this analyst, 660 aligns with the analyst 650, whatever the fuck he said. So, yeah, this thing is just making legs after legs after legs. Interesting, bro. What else? Anything, any tickers? Oh, I do see a request here. Oh, King fell off? Go ahead, King. Dude, he's got an Android.
I think he's stuck in the matrix. He may have to cycle out completely, exit the app, wait a couple minutes.
Yeah, King, you gotta get out and then come back in because Android just sucks ass, dude. It's like even Shaw has problems pinning charts on his space, and it's fucking ridiculous. Yo, Star, come up here, guys. If you guys want to know about commodities, I mean, this is the fun. He's up there with fucking David and George. Let me get his ass in here while we wait for King. I like Star's take on commodities and, some other things he talks about. Let me see if he wants to come up.
You know when Jesus was born and they brought like frankincense, myrrh, and gold? With the second coming of Jesus, they're going to be bringing vanadium, tungsten.
My fault, y'all. I got 15 calls in a row. Sorry.
King, just want to say, so, in case you missed it, I'm looking at a 15% retracement on average. It's retraced 13 and 17% from the previous highs and lows. So that target is around 260, you heard?
Mm-hmm.
All right, so MTZ,
Yeah.
we already did the homework on that. Let's pivot now. I want to hear what Star has to say. I know he's a little bit more on the other side of the trade. What's going on, Star?
Two banks side of the trade.
Yeah, dude. You look at things where no one's looking, bro.
Yeah, well,
We love you, bro. We love you, Star, man. You the truth.
I appreciate the love. I love the love. So yeah, I love all of the ideas that are being sent out here. It's really it's what we're doing, right? We're building stuff, and I think Blondie said it best the other. They're baking a cake, and you need flour, you need eggs, you need sugar to make your cake, right? You can't just make a cake out of nothing, out of air. And so with all these plays and all this infrastructure being built out, and look at the stocks, like I sent one through the thread here in the spaces. I mean, the stock, and 57 times earnings, right? The stock is straight up. And Corning was very fully priced up until a week ago. So it's not like right and trade it 57 times. For me to say, listen, there's a lot of action going on right here, right? That's all I need to know, right? And these infrastructure stocks, you need raw materials to do the things they're doing, right? They're A1A, we need raw materials. And that requires money, and that requires the price of raw materials to behave. And, nobody's planning on spending $80, $90 an ounce in silver. And what we're starting to find out is that, like in the case of Amazon, where they went direct to a copper miner, as we found out with 3 of the silver miners, First Majestic, Hecla in particular, people aren't even going to the exchanges anymore. They're just directly corresponding with the mines and contracting out raw materials. And the price is a lot higher than what's being traded on these fugazi exchanges. So we've actually entered into a situation where the exchanges are actually being overlooked, and in some ways, just by action, not by words, their legitimacy is being questioned. So people might say, oh, what's the price of gold, or what's the price of copper, or what's the price of silver, or platinum, or palladium, or whatever raw material goes into these things, and they'll look on the screen and they'll say, oh, it's $80. But that's not what the people are actually paying for it. They're paying 95, or they're paying 102, or platinum says 2,000. They're paying 2,200. Why? Because they want to guarantee that they get it, because they don't believe that the exchange can provide it for them anymore. So now
they'll do a percent to contract and then a percent to spot.
Well, sure, but the exchanges in particular are running lower and lower on inventory of the commodities that they're trading, in particular the metals. And so these infrastructure companies run the risk, as we saw with, I think Blondie and I both posted it one right after another, that Bahrain shut down exporting aluminum. So, we're going into maybe a phase of time, which none of us have ever lived through, where people just like hold on to their shit. And I'm just like, yeah, I'm not giving you my gold or my silver or my platinum or my aluminum or my cobalt or whatever, because I don't really know how things are going to play out, and I'd rather have it than not have it, right? And so people who are building things, right, have a real fucking hard time building things when that shit starts going on, right? So that's point number one. And all I'm saying to everybody is tread cautiously and pay attention to the charts. The price doesn't lie, right? You see the chart, it looks like you love the stock, but the chart's telling you this fucker's going down. Just listen to the chart, right? Or vice versa, right? Point 2 is when you get into buying things that are straight up and to the right, that are trading at 57 times earnings, right, that rely on raw materials to make their stuff, right, you got to pay attention to what's going on in the credit sector, right, because we've been having these private credit moments since last August, and it just keeps getting worse. And so now, a guy I follow, I love, North Star, he's a great follow on X, and he just noted that Bank of America went into a bear market versus gold for the first time since right before the GFC. And it doesn't matter how good the company you own is, or how great the stock, or what a great price you got at, or whatever. When they flush the toilet gets flushed, and everything goes down with it, right? It's just how that works. Because what happens is money seizes up, just like the guy who's holding on to his aluminum doesn't want to let go of his aluminum, right? The people with money hold on to their money, right? And our system relies on a lubricated system where just money's sloshing around all over the place, right? That's why things went so good for the last 5 years. They dumped $8 trillion into our markets alone via COVID stimulus, right? And that's notwithstanding all of the money that they dumped all over the fucking world, that 80% of it ends up in America anyway. Right, so we were just awash in money, but during a time period where credits are being questioned, right? And I sent something out about the London Exchange looking to source $3 billion, I think it was, in corporate debt, and noticed like Meta did it, and Amazon sent out their debt, and everybody was borrowing money all recently, right? To the Mag 7, they're doing it because credit spreads are really tight, and now, the London's doing it, and they're doing it. And Amazon did it a week ago because when money gets tight, it doesn't matter how good a credit you are. Nobody lends anybody any money because they want to see what happens first. Because, and I can speak from experience, during the GFC, everything traded at between 10 and 20 cents on the dollar. So take the most perfect thing you own and think about it, cut it in fifths, and take away 4/5 and throw that in the trash. And what it's worth is 1/5 of what you had it for, right? And that is only if it's an amazing thing. If it's not an amazing thing, it's all in the trash, right? And what everybody starts.
What's
doing
going
is
on,
that people
Coach? I mean, another day, another
hang
trade.
out and wait for
You feeling gapped down,
everything to
Coach, on
trade for
ES?
almost nothing.
To be honest
They
with
just
you,
accumulate tons of really good stuff for like cents on the dollar, and then the whole cycle starts over again, and those people just get
I feel
more
it.
wealthy. And those places are banks because those are the places with all the money. But that being said, Bank of America going into a bear market versus gold, I think last week or the week before, not a good sign, right? And that's, within the context of a private credit situation, right? Where over the summer, I think Blackstone was trading at $170. It's $100, right? I had a small KKR, fixed income holding. It was $22 over the summer. It's $10 now, right? Blue Owl can't stop going down, right? And now Bank of America's in a bear market versus gold. So none of those things are pointing to anything other than, upcoming liquidity event. How that goes, totally unclear. Those things are wildly unpredictable. But the one thing I could tell you is, safe stocks are stocks with lots of money, huge moats. People who don't make money, who require financing, right? And when it's a lot of it's, shorter term, we're going to need to refi, our debt. Those places, like, they have a hard time finding money. And they have, problem with, we have debt coming due. So we need to find money or we don't have a business. So as you're doing your stock picking and you're thinking about companies, look in the next 2-3 years of financing for them, their debt structure, and see when it's coming due, and say to yourself, if it's coming due and they haven't refied it, like I have a nice position in Crescent Energy. They're a Permian driller, and they're a real good company. And I think they just sold some convertible bonds the other day. We got diluted a little bit, and I was a little pissed off. But what they took that money and they wiped out some debt that was coming due, I think, in 2027. So I say to myself, ooh, I love that move, right? They extended out their debt till 2031, and they got rid of a potential problem in 2027, right? You want to see companies doing that kind of shit right now, because once you have your financing locked up for 5 years, you don't got to worry about a liquidity event. Yeah, your stock price is going to go down, big shit, right? Your company's not going to go under, right? So as you're right now researching all your tickers, look at the liability side of the world and look at when they have their debt coming due, and think in terms of, okay, is this going to be a problem or are these guys good, right?
real quick. Crispy has his hand up. Go ahead, Crispy.
I just wanted to, just for you, Sammy, or other people, I think Arun from Velo is seeing the same exact thing. That's why he did that massive debt to equity deal this last week. I think the smart operators are seeing this coming, and they're trying to convert debt, minimize debt, refinance debt, and get ahead of like any type of impending thing.
Yeah, no, and to be clear, as you're going through your tickers and you're looking at these companies,
look at that triple bottom.
Into any of the
look at that
CEOs
fucking thing.
CFOs that are giving any types of interviews or anything you could find, and see if they're making moves like this, because that means they're smart, right? You want to be in those types of companies because they're, you're not investing in a company, you're buying people, right? And those people that are making good decisions or bad decisions, right? So I really liked what I saw out of Crescent. So I just, I have a lot of their stock now.
I love that you said that. You're not investing in the company, you're investing in the people. Wow.
Yeah, 100%. When I look at I like founder-led companies. When I look at operators, because I do interviews with CEOs, that's the main reason why I'm doing these things is to get a one-to-one conversation, get a feel for how they're viewing the future, how they're viewing the present, and I think it's a critical thing. I compare CEOs on Chris Kemp to Peter Beck scale. And if you watch the documentary Wild Wild Space, it's about the history of Planet Labs, Rocket Lab, Astra, the first wave of commercializing space companies. You will kind of understand that because Chris Kemp was one particular style of leader and Peter Beck was another particular style of leader. And the contrast between the two of them was clear throughout the whole movie.
Star, what do you think about George's comment? I was in Spaces earlier this morning. Crispy, correct me if I'm wrong. He said when bonds fall, gold goes up. Commodities, critical mineral, gold and silver go up. What's your take on that?
Basically, when there's you got to think about bonds and gold in two. I think about them in two ways. So, I'd have to hear his comments because some people say when bonds go up, they're saying when yields go up, but that's not a bond going up in price. That's a bond going down in price. So when you see yields going up, those bond prices are coming down. It's inversely correlated. Okay, so if he means that yields are going up and gold is going up, right? That's a very frightening scenario. Because when yields go up, what's supposed to be happening is real yields the yields are adjusting higher to make real yields go higher. And what a real yield is you take your market yield that you buy your bond at, you subtract out inflation expectations over the life of your bond, and that's the yield that your actual yield you're getting on your investment, right? What you're getting from the bond minus the inflation that's eating away at your return. That's the difference is the real yield. And so bond prices have been going up recently because wars are expensive and inflation and oil prices have gone up and, it's inflationary. And so yields have to adjust to compensate investors for the rates they're getting. So think about it on a number line where 0 is your middle mark, right? If real yields actually go negative because inflation is outpacing your market yield, which does happen, you can look at a 10-year TIPS curve. That's the 10-year real yield, okay? 5-year TIPS is a 5-year real yield, right? There are time periods when they go negative, okay? Well, gold is 0, right? Gold doesn't give you a yield. It's 0 yield. But 0 on a number line is greater than a negative number. Right? So why do people flock to gold sometimes? Well, because the real yield just went negative. And I'm better off in gold than being in something where I'm actually losing money. Right? So one reason why mathematically people rotate, you see algorithms even rotating into gold because of that, right? Well, the other thing too, though, is, you can get into a situation where there's just huge problems in the world and there's a trust factor, right? Like, what is this worth really? Right? And sometimes people say, I just trust, that with all these disasters going on, that gold is going to be a safer environment. One, because gold has literally the longest track record of any asset. And two, also, because a lot of times when we have epic fucking disasters like in the GFC, the governments tend to come in with monetary policies and they make a lot of extra money. And they put it in the world, right? That's very inflationary, right? So real yields collapse, and gold becomes very popular then. And
you started talking precious metals, and we have summoned trend.
Yeah, so essentially, what Noble's saying, I'd have to hear him in his context,
right?
Because bonds, not everybody talks bonds the same way, but gold. In a situation where you have banks failing, I can't imagine gold is a bad idea. Some people say this, and this is kind of where I push back a little bit. They say, well, sometimes people in a liquidity crisis, they have to actually sell their gold to repatriate dollars so that they can make settlements on things. And what I say is, well, one of these times that's not going to happen. People are going to say, I'm not giving you my gold. So you can, whatever is going to happen with whatever I owe, I don't really care, but I'm keeping my gold, right? And a lot of people might start saying that. And the reason I say that is like, look at what Bahrain's doing. They're keeping their aluminum. You're going to, if you start seeing that shit going on around the world, right, it becomes less likely that people are going to part with their stuff, right? In an event, in a very uncertain sort of like global event. And we're not there, but like we're kind of pointed in that direction, and like as this war keeps going and going and going, it just becomes more fucking problems. We add in a private credit situation. Yeah, the gold going fucking crazy.
I appreciate that take. No, and I'll try and get the recording. I think he recorded it, but I don't think nobody has access to it. I think you have to pay for that. But no, it was an interesting take because, like you said, as the war continues, there's really nothing positive going on across the market. That being said, I do see futures coming right back down to 65.82 at the 886, pretty much creating a double bottom here right at that March 9th low. Hopefully we bounce from that low and then up we go. But, I digress. Who knows how long this war is going to last, and if it continues to last. There's I'm looking at the MACD on SPY, especially on the monthly. That is concerning to me, and I won't touch on this. But we're looking at potential COVID-19, fucking like literally. Oh man, I don't want to say it, but there's an event that might happen, and it's gonna be fucking worse than COVID-19. And I'll leave it at that. Okay, what I'm seeing on the MACD on SPY on the monthly looks fucking horrendous. That it's probably going to topple COVID-19 levels. That's all I'm saying. So with that being said, anybody else?
You didn't one more comment because this is also important to understand.
I wanted to say something too, but go ahead.
Just because it's kind of adjacent to my previous point, and then I'm done. I read today that Dubai was worried about its financial sector and people taking their money out of that financial sector and going somewhere else with it. And they were talking about Katie barring the fucking bank doors and not letting you withdraw your fucking money. So when that starts happening around the world, people were saying that they were converting money just straight up into Bitcoin, right? And if that spreads into other places, okay, you will start seeing really funny shit going on, right? So correlations of everything will break down, right? And how, I don't even want to talk about how do you protect yourself, because at that point you're either set up for it or you're not. And if you guys want to have a separate space on how to do that, we can do that. But just be mindful that when governments start stopping people from having access to their money, right, that's usually not a one-place thing. And when that starts being concurrent in other jurisdictions, correlations for all kinds of things will totally break down.
If you don't mind, can you post that article in the Nest when you get a chance?
I will.
Thank you so much. King, you had a comment? Oh, or Crispy, you had a comment?
On that, just real quick before King goes, chart SWBI, because I think that's what he's referring to. So that's the ticker there.
Oh yeah, I already hit on that one. But I'm not even talking. I mean, that's one of the things. But like the idea that something like Bitcoin, which has been a total barometer for risk on, risk off type of appetites, right? All of a sudden might change correlation and stop being like a risk off thing because people are just unloading their money because they keep, into Bitcoin. They're like, listen, they're not going to give it to me at a bank, so let me convert it to Bitcoin and I'm going to get the fuck out of here and I'll open up my Bitcoin shop in some other country. You might start seeing bids for things that you never thought you'd see a bid for just because it gave somebody the type of liquidity that they needed. So correlations might start doing things that you didn't expect them to do. That's all I'm saying.
So I just quickly want to say the use case on this already happened when Russia started invading Ukraine.
Good point.
A lot of Russian men who didn't want to get drafted did exactly what you just did. They moved their money into Bitcoin. They left the country by car and foot, and they re-domiciled themselves in Georgia and neighboring countries, and then traded that Bitcoin to the local currency, because what Russia did was it prevented anyone from moving their cash abroad. Plus, the rest of the world to ice them out from the financial system.
Regarding SWBI, dude, we're talking about SWBI, right?
Yeah.
Yes, sir.
Okay,
Samson, Waffle House, Bravo, Indigo.
So if this goes up, my dumb brain, this means not good, right?
Yes.
Okay,
Do
there's
you
a
know what SWBI? You know what company that is?
no. I just found out about this thing, bro.
Smith and Wesson.
Smith and Wesson, dog.
Bro, there's literally a fucking inverted Adam and Eve on this fucking thing.
Look at when the war started. Look at that pop.
Yeah, no, I see the fucking pop.
Well, they had great earnings. I own that. I had a bunch of calls in that thing. They had great earnings, and they noted an uptick in handgun sales in their previous quarter.
Oh, the fucking gun. Okay, I thought it was. I'm looking at fuck. I thought it was a bank, bro. Oh, I'm a retard. Retard alert.
You're killing me, Sammy. You're killing me.
Smith and Wesson. Oh my god, I thought it was the fucking bank.
Well, Sammy, you were close, but this is the universal debit card to pull a deposit out of any bank.
Got you. Retard alert. Thank you. Yep, I see it. So there's a target here. Literally $37.98, 38 bucks here. If it breaks this valley, 1750. If it breaks 1750, there's a high probability it can get to 38 bucks. It's a key area resistance. I mean, obviously you got your short term 382, 1443. But if you break 1443, 1750 is next. And if you break 1750, holy shit, there's a fucking $40 target on this thing, 38 bucks.
And look how something like that performs in midterms here, like metals.
Shit, dude. Yeah, this looks good. Yeah, this looks really good. Huh.
I'm glad Starpunk brought up metals here because Sammy knows plata o plomo.
Plata o plomo. You too, bro. Stop your shit. He's a. You know, I'm not even gonna say because I'm live. Never mind. I was gonna say something. Never mind. It begins with a C, and I don't want to. Don't
be filling out my my doxability database algorithm.
Yeah, you got it, bro. No worries. Pivoting from that. King, you had a comment. Go ahead.
I had more than a comment. I like the whole floor for about 1 minute. Alright? For 1 minute. Alright, I want to talk about something that seems to go over the head of so many people and why we miss wealth. Alright, now, I believe when everybody is panicking is when I'm calm. When everybody's calm is when I start panicking. Okay? Now, I know that every war in its history, every cataclysmic episode has made billionaires and generational wealth. Now, what do we do every time there is war, every time there's COVID, every time there's some kind of world situation? Everybody goes and runs and panic sells everything, and I'm going in the gold, I'm doing this. And as we're doing all of that, institutions continue to buy and buy and buy and buy. And when we wake up and the markets finally start moving again, the wealth gap in this country grows by 40 to 50%. Right? This is every time we go through one of these things. So I'm starting to stand on this. Don't tell me about panic selling. Tell me how we're going to make money when the market is going down, just as like we're going to make money when the market is going up. Right? That is where you make wealth. That is the difference between panic selling and having a plan. And everybody needs to start having a plan. Right? I don't want to hear nobody telling me about the price of gold, or this things, view ratings, or don't tell me about none of that. How am I gonna get my $200 account to $400 if everything is selling off? Tell me that. Right? It's a reason why all of a sudden we got so many 2x ETFs on the long, on the short, on. Do your homework, pay attention. If the stock market continues to go down, generational wealth can be made. And with that, I yield the floor. I'm done with it.
I appreciate that, King. So 2 things. Fashion Invest. I think in the Purple Pill. Did you post it in the Purple Pill, Star?
I'm looking for it. Give me a sec.
You got it. All right. SWBI chart is literally in the nest. There's the chart. There's the Adam and Eve bottom. There's the fucking Ripper and the Dicker, dude. This thing's absolutely fucking beautiful. I mean, you break 1777. This. Oh, what a year. 1777. Was it 1776? Or was it 1777?
Yeah, 1776, bro. You know that.
There you go.
That's a revolutionary number.
Yep, that's a lucky number. Wow. Irony. And we're talking about guns. Smith & Wesson, so there's a chart on that thing. Fucking beautiful chart,
Yeah,
dude.
I'm looking for that thing to cook up, man. Star right on that one. I'm telling you. That thing gonna cook up.
Yeah, that makes a lot of fucking sense. God damn. Anybody want to come up in the panel and go ahead and, any takers you guys want me to chart or just have a conversation, please come up. I will give the space another couple.
Hey, you should look at Kopin for me. KOPN.
All right, let me see.
That's the one I'm in the leaps going into next year. I'm wondering if I want to size into it a little more, but I still think that's going to be a second half of this year narrative play out. But with this Andrel money, I think that the Eagle Eye program, the Lattice, the Ouse, the OPTXs, the Krakens, like everybody's going to be digging through those this week. So
you don't think? I mean, we're talking about military budget spending. You think $20 billion is going to last them? Like?
Oh no, this is a 10-year term. So the $20 billion goes till 2036.
Jesus Christ! And then the option to also to reinvest, right?
Oh no, this is just their contract is to like pretty much build AI, build weapons systems. This is pretty much like the government giving them prime status, essentially, but not quite prime status, but damn near close. This is them putting the sword on the shoulders and minting them as like the first neo prime.
That's fucking crazy. Well,
that's a fact, though. He's 100% right.
Can you
make a lot of moves and pull a lot of strings?
Can you imagine when they IPO, if ever?
Oh, he plans to.
Oh my.
Yeah, he's already said publicly multiple times that they're planning to IPO. Right now, SpaceX is getting all the IPO kind of like speculation because like they're changing the rules on the 100 index to bring in SpaceX like at record speed, essentially. Michael Burry's been up in arms about it. A lot of people are up in arms about it. So yeah, that's going to be interesting. That's going to be a major like catalyst in the space industry in general. But yeah, I really like space. I really like defense. You guys everybody here who knows me knows that. Those are my sectors that I fucking love. And there is a lot of economic there's a lot of wind in those sails, I'll tell you that much.
I see KP, you got your hand up. I'm charting Kopin while he talks, and then I'll give you the chart. Go ahead, Kay.
So you already mentioned SWBI. Yeah, Smith & Wesson's been good. Seasonally as well, right? Usually that one's seasonally stronger on this time of the year.
Hunting seasons as well. Like hunting season, and also in summer when the murder rate goes up, we see a little bit of a pop.
You can get effects, especially going into possible midterms, right? But they speculate, if there's going to be a shift when it comes down to.
Oh yeah, any significant election, you're going to see movement in the gun names.
So RGR is the other one, right? When it comes to Stern Ruger, right? Vista was already split off.
RGR, okay.
Yeah, that's the other one. I'm looking
Is
at.
Browning listed? Because Browning's the local company here. I don't know if they're listed though.
No, so I think Vista used to have a whole bunch of brands under them, right? And then they were sold off 3.3 billion strategic value partners, and then a Czech company when it came down to their ammunitions or the ammo manufacturing. So Browning, I don't think they are unless they're part of a conglomerate.
All right, I'm about to post the Copen chart. Crispy, I would rather you just, not financial advice. I'm not a financial professional. I'm also not responsible if you lose money. Anyway, with that disclaimer being said, we broke the weekly 50. We're below it on Copen. So I would just wait, especially with this little bearish narrative across the board. I would probably wait to 172. A target area. If it breaks 172, I got a harmonic completion. A bullish harmonic completion at the golden pocket 140. I'm gonna post a chart right now so you understand what the hell I'm saying with my Fugazi chart squiggling commentary. So I got you.
Yeah, I'm probably just gonna keep tossing loose change into the leaps.
Yep, do what you gotta do. But posting the chart in about 30 seconds. Go ahead. Okay.
Oh, no, I'm just saying RGR is the other one you want to take a look at when it comes down to Smith & Wesson as well. So they typically run together, not the same way pattern-wise, but they're not bad.
Yeah, I have my boomer basket, and you've got your boom basket.
I'm starting to look at the boomer basket after George space. I have a commodities guy. I got a guy who just strictly trades grains, and I never really took a good hard look at it. But now he's piqued my interest. This conversation this morning. So he said almonds, soybeans, whatever have you. That's typically not our niche. If we never talk about this sort of shit. But now I'm really gonna take a second look.
Yeah, a lot of the people I consider mentors or like people I look to are in wheat.
Yeah, wheat. Yep.
And the wheat adjacents, but I don't mess with the commodities, the softs, the ferts, but there's a lot of money to be made in a lot of little corners. But there's also a lot of hedging potential coming in. Yeah,
there's always a bull market somewhere, as they say. So I never knew who the hell David was. I mean, he was the chart quant on George's space, dude, and I fucking love that. You know what I'm saying? Like,
yeah, you gotta follow him for especially Vermilion research. He looks at a lot of cool areas. He primarily deals with bigger stuff than I like to play with, but he's always good. Like, he came into my space yesterday when I had my morning space, and he had a lot of good insights there.
Fucking love it. So,
what up?
What's up, Papa? Que lo que? You missed out
in the hards.
Go ahead.
What? The hards?
Yeah, because we were just talking softs.
I know. I know
you don't like the softs.
I heard you talking about softs. Ironically, I might take a position in a ticker called Hard, which actually is mostly made up of softs, which is weird, but it is what it is.
There really is a ticker called Hard. It's literally fucking called Hard.
Yeah, it's an ETF, and I think it mainly tracks softs. I'm more in the fertilized portion of that trade than I am the actual softs, but there's definitely money to be made in the softs. It's just I don't understand that enough. I've played in that sector before, and I know enough to stay away from it, but the longer this goes on, the worse prices for food are going to get. So there's definitely a trade there.
Yeah, when I start my firm next year, you're going to be running the commodities desk, so I'm just warning you now.
Nice.
Fair. As long as you don't make me do softs, I'll hire somebody. I'll subcontract that part out.
I'm posting the chart on Hard right now. I got a target at 37.60 on this fucking thing. What the fuck?
There's a guy. I've mentioned befor, Zoltan Pozar. If you want to talk about hard commodities, who basically was writing all these notes for Credit Suisse before they let him go, and then he started his own thing. I saw something from him today talking about, and Peter Schiff is doing this now, where they're tokenizing gold. And what you're starting to find is that when things like this pop off and shipping lanes and traffic are messed up, gold is not the greatest way to be able to,
it doesn't move. One, and two, it's not the greatest way to do transactions. So people are tokenizing gold, right? There's a company called ABAX, ABXX. It has been absolutely ripping. I didn't look at the chart, but he mentioned it. This is all part of this new world order situation where geopolitics is being restructured and currencies are about to go under a major restructuring. As you can see, the Iran situation, they're talking about, well, you know, they're doing yuan for dollar stuff. So ABXX, I would take a look at that because that is it probably has a lot more upside.
Okay, I'm looking at it right now. I would suggest you take a look at it before I comment on this. It could be forming a scallop on the monthly, by the way, and on the weekly also. I just broke my 236. I got a target at 27.77.
Yeah, I'm not saying enter it now. I'm not giving you any price targets or entries. I'm just saying keep an eye on it because I think it's going to be the future of how some of these gold-based transactions happen. It's not going to just be shipping gold around, right? It's there. You need a layer of representation on top of it that's easy to transact in.
Love you, bro.
But if it's going to be transacting on gold, wouldn't we want to have a pretty high level of attachment to the price of gold? Like, you wouldn't want to have more torque. Or is this the company that's doing the tokenization? Or,
that's what they're doing, yeah.
Okay, so this isn't the stable coin or the tokenization itself. This is the company that's managing that.
That's enabling it, correct.
Oh, okay, gotcha.
Huh.
So hold on, they're the front end? Is that what you're basically saying? And the people who store the gold and do all that, that's the back end?
Right.
Got it.
Huh. They got a target at 750 analysts. Obviously, that's a 1 year out target. Interesting.
Yeah, you got to wait for an entry here. Obviously, I agree with you. I just looked at the chart. We'll see if it bounces off the daily 200.
Yeah.
This looks like a topping pattern to me, at least in the short term.
Absolutely.
They do have earnings March 26th, so that's like a week or two away. Might not be a bad trade opportunity there if you play those things. But yeah, I see what you're talking about.
Is this in the tech? I mean, it's technically considered a tech sector. It's in the tech sector, correct?
Right.
All right. So yeah.
Hey, so did you see Serenity's coming after the critical minerals narrative now?
Yeah. I mean, he or she has had some absolutely amazing picks, but I think he or she probably is starting to venture out of he or she's lane a bit here, if I'm being honest, just based on the tweets that I'm reading. From the tech side, that person is very good at what they do. But when they start getting involved in the geopolitics and oil and commodity sector, the shit that I'm reading, I don't agree with.
But it's enough to move, like what was I was telling Sammy earlier, like, she might be late, but she has the weight. If that makes sense.
She does have the weight. Yeah, she has the weight. But, I mean, you know, moving a photonics company with a small market cap is not the same thing as talking about the oil market, which is however many $1 trillion market cap, right? Because they're very different things.
Yeah. Well, I mean, just specifically these rare earth miners and like some of if they're dumping into this supply chain, he, she, it, whatever, will probably start, like jumping into like energy fuels, USAR, Eric, like some of these smaller cap players might be catching a little bit of the Serenity limelight. And I would just say, if you're in any of these plays and you see that Serenity pop, like try and drop it, and then just wait for the retracement, because a lot of her plays I've just watched, because I've been in them like ahead of the Serenity wave, like coming in.
Yeah.
And it'll usually form a higher base after the fact, but either way, there's usually some significant torque that gets applied in that little short-term range when she drops it to the insiders and then posts it to the broader public.
Yeah, there's a lot of people that are like that in the commodity space that I know of. Koala, some of the Tin Baron people, they have the propensity to move small market caps. Cuppy even at times. I don't know if you follow any of these people, but these are the people that are like that in that space.
What's going on, Godwill? You want to add on to something?
All right, GM, everyone, and happy Sunday to each and every one of us. My host, first and foremost, let me really appreciate you for hosting down this space. It's really, really a great pleasure and privilege, for me to join like minds of people like you. Please let me give you a standing ovation and a clapping rotation. All right, can anyone hear me, please?
You got literally 5 seconds to get to your point. I'm curious what you have to say. Make it quick.
All right. For me, regarding to the topic and the discussion, I feel that the stock market is going to be reversible, because you could actually see the charts that Bitcoin is actually doing. A lot of people are actually expecting, or a lot of people are actually speculating that it's being manipulated. And I probably get to see that most bloggers are actually reporting the fact that Bitcoin will get to 200 to 400 or 500, but for me, it's a fallacy. And it's...
Crispy.
What are you tokenizing and what are you selling?
Crispy, what do you say? Kick him?
No, what is he tokenizing and what is he selling? I'm just curious of what that little corner of what he's getting to here.
Fair enough. Go ahead, God.
I'm not actually projecting any coin, sorry. If you get me very clear, I am only contributing to the subject of the discussion here. My host, are you there?
I'm listening to you. Go ahead. You start speaking Bitcoin, it sounds like a sales pitch. So maybe you want to change the tone a little bit.
No. I am only using Bitcoin because as an example, because a lot of people have actually been speculating the fact that this is gonna get to the bull run. This is more like the Q2. We're actually approaching the Q2, so a lot of volatility is going to be pumping into the stock market, just like the last time we had gold, being, how do I call it, what's the right word to use?
All right, you have a good day, God. We're not going to touch on Bitcoin later, bro. All right.
What's going on?
What's going on, Alpha?
Looking at XBio and DAR.
DAR. Fucking conversations, bro. Holy shit. What do they do?
DAR is I believe it's a spice company, bro. Look at this fucking thing.
Yeah, I see. It's dick up only. The fuck is this? 64? Shit. Yeah, an ascending scala formation here. So I would wait for 30. Not financial advice. I'm not a financial professional. Please seek one out. I would wait for a 32% retracement off of this massive rip. Holy shit. I would watch 30. I mean, if it ever gets there ever again, I doubt it, but god damn, bro.
Do a sector check on packaged foods, bro. Whenever war's involved is...
Yeah, oil. Yeah. Blonde, she said it best. Plastic goes up when there's war. Oil. What is it that you mentioned, Blonde? She can go deep dive on that.
So, all things plastics. So, packaging. So, you're right, packaged goods. Things like home cleaning products are in plastic bottles. And one of the bigger items is sneakers, you guys. So, Nike, Adidas, Converse, all the shoe manufacturing consumes crazy amounts of plastic. Clothing, a lot of clothing now is like 40% polyester. That's plastic. Pretty much everything.
Polyethylene, PVC pipes, things that are required for infrastructure, anything that's refined. Refiners, if you look at the sector of refiners, they are absolutely ripping. So petrochemicals, yeah. Chemical companies are doing fairly well, depending on which ones you look at. there's been some serious strength in that sector.
I was looking at BAK. Actually, we've been talking about that one for a little while.
I'm long as fuck.
Soul got me. He introduced me to this. Never got involved. So this thing's fucking. It's just been ripping. Where is it now? I don't know where it's at right now. Let me see.
It's been pulling back. I think once it might struggle a little bit while the Strait is closed, but once it opens back up, they're gonna do very well. Polyethylene prices are going through the roof. The last time polyethylene prices were close to where they are now, Braskem was closer to $15 or $20. So, yeah.
BAK, yeah, got a pullback. I do see a target right back down at 413 if it fucking survives that thing. Interesting. 431, then 413.
Yeah, well, we know they do that. That's what they do. Plastics and resins. You know, they do all of the biochemicals, and you know that's actually what they do. So I'm figuring if everybody's right, this is one of those companies that might go from $3 and $4 and may make a little move in this situation.
Yeah, but just somebody look at their financials. I think it's their financials that's the problem. I don't think it's
the financials are dog shit, but they will get better with higher polyethylene prices. The problem is that, or polypropylene prices, sorry. The issue has been that those prices have been extremely depressed. Now you're in a different environment. So those numbers are going to start to look better. But by the time everybody realizes that those numbers are going to look better, you will have missed the move. Now, I'm not going to say that debt isn't a problem. And the way that I've always talked about Braskem is this shit is either a zero or a home run. So position size accordingly.
I love that.
Do they have any debt coming due that they need to refinance?
Financial advice, by the way.
Do you have any of that?
I'm sorry? They just did refinance some of the debt within the past 2 or 3 months.
Okay. Do they have any more coming due within the next 6 months to 18 months?
That I would have to look at. I'm not sure off the top of my head.
Because that's the danger zone for me. Is anytime between now and 2027, if they got a pile coming due, that would be a problem.
They do have cash, but I gotta look again because it's been a minute since I've really dug heavy into the financials. But I do follow the news flow on it. Like I said, because I am very long this company, and I've been building a position in this company for 3 or 4 years now.
Okay.
So. Yeah.
2028 and 2031 notes.
Okay.
No, there's no debt coming through to 28.
Okay.
Yeah, I think they just refinanced the shorter term debt within the past 2 or 3 months. But I didn't want to say without knowing for sure.
No, 2028's out of the zone, so that's okay. All right, cool.
Hey, Sammy, take a look at NERV. N-E-R-V. Look at this thing, bro.
N-E-R-V. All right.
Yeah. Take a look at the tech on that, please.
Hello, Mississippi. This thing got a impending golden cross on the weekly. Holy shit. She wants to fucking find out. Yeah, give me a sec. I'm going to chart this thing. But, wow. Already, just taking a look at the chart up only. Very nice. All right.
Another place you guys should be looking is definitely in utilities. There has been a lot of strength in utilities. You have to be a little bit careful. There are some that are still trading at 12, 13, 14 PEs. Some of them are trading up at 21, 22, 23 PEs. I would stay away from some of the more expensive ones. But there are a lot of good companies there, and they pay dividends.
And they're the only thing that didn't get smashed when inflation went crazy. Like, so the staples got smashed because the staples margins are getting crushed because of the price of oil, as stated by Blonde. But utilities, I own a lot of them. I aped in like a month ago before they made this big move. And you want to look at utilities. You want to look at, number one, the debt structure, but moreover, how well covered are their dividends, number one. If they're very well covered, that means they got a great cash position. And you want that. The other thing you want in utilities is you want a good place in the country, right? So I have AEP. That's like middle of the country, right?
That's one that's fantastic. Yeah, I co-sign that. Go ahead.
I like Southern Company. They've done well for me. I got them in the 80s or close to 98. I also bought their perpetual preferred. It's like a convertible note, but it's not really. It's kind of like preferred, but it's not really. It's kind of in between. It just pays a nice dividend. It's SOJF. And I paired those two together. And then the other utility company I own is I got Constellation, but I got it at like 250.
Full disclosure, guys, all the tickers, everything's being recorded on my YouTube channel. It's on the first slide of the nest. So if you're missing a ticker or you didn't hear right what ticker they're referencing, this is all being recorded on my YouTube channel, just in case, guys. So go ahead, Stu.
So the interesting thing about utilities is, they're what I would have called essential service. So you can't have a world without power, right? And so the scarier things get, the more money rolls into this kind of stuff because it's the safest place. Because you got to turn the lights on, and people will pay whatever they got to pay to turn the lights on. Right, so as things get crazier and crazier, more torque, more everything into this place, and the margins, they're not selling packaged goods, right? They're not making sneakers, right? They're pumping out power.
So let me ask you a question, right? So Southern Company is definitely a phenomenal company, right? It's been paying out dividends too, with dividend increases for, I believe, more than 20 years. What do you think about NextEra, right? Because they're heavy when it comes to nat gas usage as well.
I used to own NextEra, but I owned NextEra when it went to like 49 or 50. Now that it's up here, like I'm pretty price conscious investor.
Okay.
So when I did utilities, I was already out of NextEra. Not that I like NextEra, but I saw AEP, Southern Company, and Constellation. I got at the prices that I wanted to get them at.
So back to your thing real quick, and then I think somebody has their hand up.
Sure.
The grid, right? When it comes down to the age of it, right? It's over 4 years old. Like you're talking about, everybody needs energy, especially data center build out, electrification in general.
Yeah.
So grid infrastructure is pretty nice. There are a lot of good tickers in an ETF, GRID. Okay. There's one called MYR Group. Check that out sometime. It's a mid cap because it deals with grid maintenance and then grid upkeep as well. So,
I love it. You're perfect.
Yep.
Go ahead, Joe. You have something to say?
Yeah, thanks for the mic, guys. I'm new to the space here, and I'm excited that you guys brought up the concept of utilities. I didn't know if you guys were just looking for the bigger movers out there and ignore that space. But my largest position is actually in the midstream energy, and I think with everything that's happening right now in the Gulf, there's going to be more and more stress on oil production here, and the pipeline companies in particular. They're basically the toll roads, right? So the price of oil and natural gas really don't have a huge effect on on the price of these companies. And to the point of dividends, you look at a company like Enterprise, EPD, Enterprise Partners, and the yields is right around 6% now, because they've had a nice move up over the last couple of months. But in the low 30s, we were picking up like a 7% yield, and I think they're probably one of the aristocrats now, dividend aristocrats, because I think they've been raising their dividend for the last 20 or 25 years or more. But that's one space that I like. But my original question was going to be about the plastics. It's interesting concept that you guys are brought up there, but my thoughts would have been if the price of oil is going higher, that's their raw material. That squeeze margins, and how are we looking to play that?
No, because it drives up the price of the refined product. So that if the input cost goes up, then the output cost goes up as well.
Okay, very good. I'm definitely following trades, and I hope to pop into the spaces again. Appreciate what you guys are doing.
Yeah.
I'll give up the mic.
I happen to agree with you on midstreamers, by the way. I have a lot of midstream exposure at the moment. I have for a while because of the dividends, but I agree with you on that thesis.
Are there any other names that you would throw out there now that you think might be at a good point, or are they all elevated?
We just touched on one. King, what was that ticker? MTZ? That might be an area you want to look into.
I'm about to bring up one right now for everybody that's in the energy sector that they pretty much should all probably have their eyes on by now. I think it might be giving them something they should all have their eyes on, but that's Prim. Morris.
Prim, PRIM?
Yep.
Okay.
All right. They one of the big daddies in they industry, and they do utility segments. They do maintenance on infrastructure and energy infrastructure. So I'm figuring most of them will be able to tell me even more than what I know about Prem, which I'm trying to learn more, even though I'm already, looking at them kind of hard. So since they in that sector and do that, I was hoping they'd be able to help me out too, to be honest with you.
All right, we'll take a look if anybody wants to comment on that. MTZ, Joe, maybe take a look at that as well. I think we touched on that earlier in the segment today.
Okay, I jotted
Is anybody trading Prem? Is anybody even trading Prem?
No, I'm not in that one. And I have a lot of exposure in this sector, but I wish I could help you. I'm not in this one.
Prem is a monster, so you might want to look into them, okay? Kamara Services, they're a monster, and they got their targets already at 350 and 400 for their analyst targets, and they trading at 130, 140 bucks. It's one of them I'm looking for in my infrastructure side, but they keep popping up, so I'm starting to pay them attention now.
I have a chart on this thing. I didn't realize I had. So 150. If it comes back to the 115 and bounces from there, there is a real world scenario. If it breaks above 231, there's a target at 457 on PRIM. But a lot of things need to brew up before we even touch that number. So this could be like maybe 2-3 years out. But again, it's got to survive the pullback at 115. Fail 115, this thing's probably coming back down to 84 is what I'm seeing here. So it's interesting. So yeah, I didn't realize I had a chart on this thing. Interesting.
Yeah, we talked about it one time, but yeah, like I said, it's one of them stocks that everybody keeps saying it's part of the electrical sector that's just a monster, but it hasn't hit the floors of EME and fixed yet, but they're coming. You know what I'm saying? They're coming, so I'm taking a look at them, as one of those companies that all the other companies under them, this company might be able to pull that sector forward even more. So I'm keeping my eyes on them, because if they do, all their stocks that they're talking about will continue to rise even faster if Prem is successful.
Okay. I appreciate that. If anybody else want to come up, please, any tickers, I can chart them, and then we have the analyst, obviously the panel talk about, whatever ticker you're looking into. I do want to switch it to Blonde. I know this is probably a left field thrown pitch at you, but again, I love her segment on water and what that could bring about in the next 5 to 6 years. Like, she has a really great thesis on it. She's actually written a Substack on it. I think she has. I would love for her to touch on it if she can. I'm sure she's always busy, but while we have a couple eyes and ears in here, maybe water, where no one's looking into, and now that we're talking about it, maybe that segment or that sector might brew and something can cook up. But she does have a really great thesis on that.
So the Substack hasn't been published yet, but they are estimating that the global freshwater demand is going to exceed supply by 40%, you guys. So the need will supersede what we actually have by 2030. So the biggest component of this is in the United States, in Asia, in India, and in Southern Europe, because there is a quiet drought happening in Southern Europe. That being said, I would look into water infrastructure tickers, water processing tickers, companies that specialize in building desalination, because the Middle East already is mainly on desalination, but parts of the United States, Europe, and Asia may have to get, and India may have to get on desalination. Some of this is going to be due to infrastructure needs, movement of populations into regions that haven't been there prior before. Some of this is through weather pattern changes where they're just not getting the same amount of precipitation, whether it's snow or rain. as well as increasing heat in certain areas where it's evaporating water really quickly. So be on the lookout. I'll be posting that sometime in April. I actually have an interesting tweet coming at 2:22 that's calling out the private credit area. I'm going to name names, so be on the watch out for that. But thanks. I'm right now in the process of doing taxes, so bear with me.
That's 2:20 Mountain Time, by the way, guys. So
yeah. So in about
let me help her out. So there's a nice ETF we were talking, because her and I've been talking about this, I think, for even a few weeks back. PHO. So like a bowl of pho, right? If you've ever had a nice bowl of pho, it's nice during the winter time. So PHO is a water resource ETF. You have PIO as well. That's a global ETF by Invesco as well. So a lot of good names in there: American Waterworks, Consolidated Water. You even have Ecolab in there when it comes down to what they do. So more on the process on that side. But desalination-wise, usually just something to keep in mind when it comes to these purification systems, right? Especially the desalination-wise. You need about 800 to 1,000 psi to push it through. So they're trying to look for energy-efficient solutions there. So there's a lot of new technology coming out in the next few years as well, involving graphene. So yeah, the industry's also kind of going through this little technological change.
Well, I'm gonna add something too, right? So Erie would be one of those companies, right?
real quick, guys, I just posted the YouTube. Again, these people are mentioning tickers. If you missed it, or maybe sometimes the mic sounds a little foggy, whatever have you, it's all being recorded. It's in the nest. Go ahead, King KP.
Kent, which one are you saying, sir?
If I'm looking at this, right, because I know I heard her talk about it, so I started doing a little research on it myself because I want to give it to her. But if we're talking about it, I would look into XYL.
That's Xylem. Yeah.
I would look into Erie, right?
Yeah, that's the one you're trying. Okay, all right.
Yep. CWCO and VLTO. Those are the main companies that can go around the world, right? Because she's saying around the world. She's just not saying in the U.S. or in this particular place. Mm-hmm. So who could get around the world and make this happen? Those are the 4 tickets I would be looking at, honestly. Those are the big dogs.
So regional-wise, you also have other players like in Europe, like she was talking about Southern Europe and then Asia. So there's a lot of the desalination technology is Israeli, okay? They're some of the pioneers when it comes down to some of this. So Australia is big in it as well, right, when it comes down to Australia. So I would definitely sit there and be wary of that, right? So they're using a gelatinous material too when it comes down to the purification.
I gotta learn about all that, but
what about
listen,
water rights?
A lot. Yeah, and what about water rights? Is there water rights for like countries and all of that, where like certain companies can go to certain companies and certain countries and all that?
Some Middle Eastern companies own, well, I should say their entities own, like Southern California water rights. So they started trading water in California as well already on the public market. So yeah, you can buy water rights. Colorado has some good opportunities. A few other states do. Here in the U.S., it's a little bit different internationally when it comes down to how they do that.
Water rights are going to be one of the things that cause the problem and are actually going to drive prices of water up. There are hedge funds and PE firms that are already looking at this shit, and they're trying to buy as much fucking water as they can.
Can we just dumb it down what that means, water rights?
So rights to clean water sources that might have been private or owned federally or owned state-wise, they're being sold to companies.
So what, we're gonna have a fucking monthly bill payment? I mean, we already have it on we already have it in our homes. Are they gonna jack up the prices? Is that what you're telling me right now?
It depends on the region, yes. Yeah, it's going to get bad in some places. And bottled water is going to be considered a luxury. Mm-hmm.
It depends on who's buying them, right? Like if if PE and equity firms are buying it and their main incentive is profit, then yeah, it's going to get bad in those places where those water rights are sold.
So spring water going from $1.50 may one day be $3 to $4 a fucking bottle of water.
Yeah.
Oh my god.
Sure.
And we're not just talking spring water. We're also talking the refined water, the purified water.
Yeah.
Yeah. This is why the water companies have been positioning themselves in various parts of the planet as they have been, because they knew this was coming.
Yeah, that's why Bill Gates spent all the 2010s buying fucking farmland, because farmland has water on it. That's what he's doing.
And water rights.
Yeah. I own a company called Limonera, LMNR. They own like 36 water rights in like the Central Valley in California.
We need to do a deep dive on this, because now this is piquing my interest. Go ahead,
You know
Joe.
who is really good with this? John Murray.
John Murray? Okay.
Well, he understands the water rights. I don't know if he's as familiar with the plays, but yeah, we should definitely get him in here and have a conversation about
Yeah, because
water.
he's familiar with obtaining water rights. He buys land with water rights, so he knows the nuances, which then can feed into which companies actually may have them.
What's that ticker? What is it? PHO? Okay.
Yeah, I've been in that since 2018, my friend.
He chose the ETF,
What's
yeah.
up, brother?
Yeah. How's it going, man? Having a good Sunday?
Absolutely, man. I've been looking for you.
I've been hiding.
No worries. Hey, I've got this one ticker I'm looking at. It's heavily institutionally bought, and ticker symbol is Charlie Sam, Golf Sam. Any thoughts here? I've got a nice cross up. I think it's going to keep extending. Just want to get some feedback from you guys.
I can tell just by the monthly chart right off the rip. I have to take a closer look. You might want to just chill out and wait for a pullback on the monthly time frame, because I'm seeing a bunch of dojis. Yeah, I would just wait this one out, because it's heavily overextended, like extreme. And on the MACD alone, I am seeing the histogram bar pull back. So all signs are leading a little bit of a pullback. But let me go ahead and finish the chart on this one. I just pulled up the monthly. Let me see the weekly. Go ahead. Somebody cover.
Another water play that I like, and I'm giving this to you before I even really have a big position in it yet, is VIE. They're out of London. Viola. They actually handle some water infrastructure in the States, even though they're a foreign company. They do handle my municipality. So that's another one to keep an eye on.
VIE?
VIE, yeah.
All right. Let me see this one. VIE. Well, I'll chart that one as well. We got some great ass tickers again. This is all being recorded, guys. Holy shit. I'm definitely not missing out. Yeah, dude. You know, it had a massive rip, bearish divergences here. I'm gonna be biased. I would just wait for this to get back to the 50 SMA on the 3-day, which is roughly around 73. Not financial advice. I'm not a financial professional. I'm not responsible if you lose money. Anyway, that disclaimer out the way. I'm looking at 73 and then 68. So those are areas I'm looking at.
Longer term plays, right? Like water has run a lot already. You got to pick your entries. I agree with you. But that's just a play that I'm stalking. That's why I'm not in it, right? Is because of exactly what you just said.
I was referencing CSGS. That was for the CSGS guy, and I'm looking at V right now.
I thought you were talking about VIE.
Yeah. No, I know how you, man, bro. I know what you're doing. I never will ever question you, bro.
Yeah.
You got your shit together.
I'm looking at 3 to 5 years for a lot of my plays, man. I'm not trying to hit it and quit it.
Yeah. No, I like it. I see VIE. Yeah. Look at that resistance, bro. Holy shit, it's at resistance. It just peeped its head up, and if it breaks that, boy, oh boy. Ooh, very nice. Okay. Anybody else got some tickers? Come to the panel. Speak on water. I think no one's really looking at this. Let me pull up my water watch list. I'm just going to spout them because I was looking at them many months ago, but I haven't looked at them again. So here's some tickers that I have on my watch list. This is all. I'm just going to hand them out, guys. So real quick. AWK, PHO, MSEX, PEGRF, ARTNA, ECL, NWPX, PNR, FIW, WTRGSCWOTDWMOOFLSPR. I don't think Prim. No, I don't think that one's water. Yeah, some of them you might find other things in that watch list, but this is my little water watch list, so I'm just giving them out. Again, it's all recorded in the YouTube live. What's going on? Who just came up on space? Joe, you have your hand up.
Yeah, going back to Blonde's comments on the water, I also have heard that the communities and legislators legally they're trying to use water rights to block development in certain areas. I pop into some of the political spaces down in Texas, and this is a big issue. So, if you're looking to do a big development or something, and if the powers that be don't want you, they can use the water to restrict it. But I'm interested in hearing your thoughts on that as the experts.
So I just want to quickly point out, in the state of Utah, on the backside of Park City, Oakley region, the municipality there has blocked all further development, including homes. So anyone who's bought property there is not able to build a home because of the water scarcity issue. So you're going to see this on a very small level when it comes to individual home building, business building, and then also on development. And the Oakley situation was started about 4 years ago. To give you perspective, so some regions are already drying out, and they are limiting. So if you're looking to buy a parcel of land, if you're looking to build a custom home, and you may want to first make sure before you make that purchase and make sure that the water situation in that region is doing well. I also want to bring up in Scottsdale, Arizona, about 2 summers ago, their water supplier ran out of water and they had to switch water suppliers during the summer of the peak of the heat. So there are regions of the country that are already managing the water situation. There's a crisis out west, but the East Coast is not immune to it. South Carolina was in a drought for a couple of years as well. Mississippi is shrinking. So just be aware of that.
To add to this thesis, something that is maybe a little longer term to think about, if the goal is truly to bring manufacturing back home to the United States, it's also going to mean more pollution, more chemical runoff, more issues with water supply sources. And on top of that, you have the double whammy of Trump trying to basically gut the EPA. So now you're bringing manufacturing back. Their main thing is profit, and now you're loosening the regulations. So add that to the already known problem that water is going to be scarce. Now it's also going to have issues.
That just jogged my memory from years ago with semiconductors. They need super clean water, so it's high purification devices. I don't know if that's still the case, but as we bring the chip manufacturing back into the country, that might be a thesis too.
It is. So the Intel...
Yes, that's still the case.
Yep, the new Intel factories and TSM factories are supposed to use these Olympic-sized pools of ultra-pure water that they recycle. So basically, they have a set of water that they use for that purpose, and then they repurify it. They have things to basically it's like self-sufficient, so that they don't need an endless amount of water. I don't know how well that's going to work yet. There aren't a lot of examples that have been running for a long time on that, so we'll see how that goes. But they are trying to solve that problem that way.
Actually, the company who was doing that for them was called Fix, F-I-X.
Which was the company you were talking about earlier. Interesting. By the way, this company's trading at $1,365. Quite astonishing, to say the least.
Too rich for my blood.
Do they got an ETF? Jesus.
I couldn't even afford to call it.
Listen, guys. Listen, I say it all the time, right? Don't get it twisted. But the greatest companies in this country, they cost. The companies that are recession-proof, they cost, right? And as a new trader, I'm telling everybody the same thing. There's nothing wrong with fractional shares. Every time it go up, right, you wait, take the dip down, you sell it, you buy it back at the dip, now you own a little bit more of it. You do that a couple of times, all of a sudden you get $200, it's bought you a $1,300 stock. God bless America.
God bless, man. I appreciate that. Anybody want to come up? Speaking of back on water, Blonde, I love that you're talking about this again. No one's talking about this shit. I go on Spaces. We're on Spaces every day. No one's looking at water, and I love how you have your whole thesis. I can't wait for that paper to come out. You really are shining a light on this. And then 2-3 years from now, I cannot believe I'm saying this, but the fact that you fucking telling me that, spring water might one day be fucking $3 or $4. First of all, that's fucking scary. Second of all, who are these companies we should be investing in early? Because essentially, again, and I kid you not, no one's looking at water. And it's such an essential need, bro.
Sammy, some people have been looking at it for a while.
Some people, SOME, but I'll tell you what, KP, the big names, big, B-I-G, are not talking about it.
Yeah, as somebody else is on, right? When it comes down to integrated utilities as well, right? So, they kind of fit a few different hats on that, right? So, I looked for those.
I just really...
One.
I'm sorry.
Go ahead.
I just want to quickly say, so the report of 40% exceed, that was before the AI data center crisis, you guys. And we're going to need water for cooling. Though they do recycle to some degree, a lot of it will get evaporated due to heat.
Yeah, there's loss. Yeah.
So I cannot emphasize, we're probably going to look closer to 50% exceeding, maybe even 60. I mean, we there is potentially going to be a water crisis, not only ignoring if certain parts of the region that are the breadbasket in the United States as well as Europe, where weather patterns permanently change and they're not getting enough natural rain, they will need to resort to watering, which then will also drive this further. So, just because someone says 40% exceed, it could actually be much, much more. And this is going to be a moving scale based off of consumption and what we do with recycling our water and the infrastructure built around that as well, right? Especially in major cities where they can recycle sewage and reuse that water.
Ask a dumb question. You might have an answer. Where the fuck is all this money going to come from to do all this?
I mean, that's the problem, right? Like, the joke is that we tend to look at places like Russia and China, and we're like, oh, they're so far behind. But at the end of the day, we've been talking about infrastructure for 10 or 15 years now, and most of the money is wasted. It goes to companies that are doing little work and then just skimming and robbing the money from the taxpayer. And with the debt where it is, it's problematic, man. I agree with you. Like, where the fuck is the money going to come from? And the money that they are spending is being wasted.
Not wasted. Stolen.
That's what I mean. Stolen, wasted, same shit.
I can answer that question. A lot of the public works, right? They can also be municipal bonded out, so they use muni bonds.
Who stole my answer?
Yeah, but that was my forte, my man, and I can tell you.
You got it. I'm just saying
something that muni bonds are. They're basically a worse version of America's debt, right? Like, because they can't print their own money.
I think they can, but the thing about them is the tax advantage.
I agree with you, bro.
The tax advantage there, right? So states that don't have state income tax, you have the federal grants that are usually backing some of these projects, right? The larger ones. So yeah, but those are muni bonded out.
The money comes. A lot of the muni money comes from the federal government.
It does.
and the idea that some of these states are like so fucking poorly run, like you have no fucking idea.
Most of
Can
them.
we not talk about Mississippi? Can we not talk about Mississippi?
I bet you Mississippi's probably in a better state than most places, but I don't know. But like some, like,
they had a scandal that maybe that's what Ken's talking about, like in Jackson and that it's pretty well.
Yep.
Written up.
Definitely.
yeah.
Yep. Can we give them a break, please? I think we done rip their head off enough, right? Mississippi get a pass right now.
So per my credit event conversation half an hour ago, whatever. Like, so munis was my thing, and they are amongst the most illiquid assets on the planet.
100%.
So the reality is they're like the worst run businesses, quote unquote, in the fucking world. And when we get into those events, these things traded like dog shit. So, you know, I can't put the pieces of the puzzle together to make the puzzle say, oh yeah, we're going to have all this infrastructure. It's going to be this wonderful society and blah blah. I don't know where the money's coming from. I don't know who's going to get it.
Where do you think this with this credit event? What's your timeline like, roughly?
Well, the way I can only speak to how it happened during GFC, and I remember it happening so vividly because I worked all throughout that. A very important job during that period of time, and it comes at you in waves. First, something happens. Then 3 months later, something else happens. Then 3 months later, something else happens, and it just keeps coming. And it's like when you did that chart for us of the S&P, and you just said, "Look at the trend has changed," and you drew this big rounding top. And what ends up happening is you see that trend start to change, and then, like I said to you guys earlier, Bank of America is officially in bear market versus gold, which happened right before the GFC, and all the things just start happening, and nobody's going to tell you that they're defaulting, right? Like if somebody at Apollo has a loan out there and they're being defaulted on, they don't tell anybody. So you don't have that information. They don't want anybody to have that information, right? So things are happening and you're 3 months, 6 months behind the timeline, right? And they're trying to behind the scenes restructure things, or they're making deals and they're figuring it out because they don't want to have to report to people, oh yeah, these are not performing loans, like we're fucked, right? Because then, like we just saw, everybody wants their money back all at once, and that's not how this works. And so, like I said, it just comes at you in waves. The GFC took 2 years, right? And it came at you in waves. And
man, I can give you some of the waves, right? Like you first started to see CRE debt come under pressure. You're seeing real estate trade. I mean, the amount of losses that people are taking on CRE debt is absolutely fucking astronomical. Buildings trading for, billions of dollars less than they were bought for. So that was kind of the first wave. And now you have two other waves. You have the U.S. Treasury refinance wall, which is the government one, but then you also have what's going on in private equity, where you've had 3 blowups, Tricolor, MFS, and First Brands. And it turns out that a lot of the collateral that these companies were using as collateral was not collateral. Their shit was double collateralized. And then if you look at the layoffs from some of these larger companies and kind of the acceleration of layoffs, they're trying to basically offset the CapEx. They're so indebted now that they need to cut employees, which are the most expensive. And Blonde's talked about this a lot, but so you're already seeing waves of this shit happen, right? Like, I feel like we're getting a lot closer than we are further away. But timing is not. I mean, if I had a fucking crystal ball, this would be the last time you'd ever talk to me.
I mean, go ahead.
I just want to quickly add, so the difference between in the past and now is we've got a lot of different financial products that did not exist in the last economic downturn. So what we have is a lot of different type of either private credit or other various financial vehicles which are extending the runway of this shit show. Now, if you're interested in learning more about the private equity scandal, I have a pin up top. This is what I was saying. I've listed the top 10 companies
that are complacent in the private equity scandals, and then or private equity firms, and then the top 10 bankrollers of these new financial structures that they've been building to offset their liabilities. So, it's coming from private equity, it's coming from private lending, private credit, it's coming from a variety of different areas, but we're not in the same circumstance. That is why timing feels weird. But timing felt just like this the last time, too. People were seeing things, they didn't quite know how to make of it, because what happens, and I write this extensively if you actually read my Substack, and I apologize ahead of time if it's boring, but it really starts upstream, it starts fragmented in the exterior, and then as money and liquidity starts to consolidate because everyone gets freaked out, it gets concentrated into certain areas, which also can be incredibly problematic, which my Substack on Tuesday comes out, talks about how all this concentration of liquidity into certain areas of the market and other asset classes can be problematic, because these asset classes may themselves be perceived as escape to safety, but actually may be far worse than what anyone else imagines.
Well, yeah, and the other thing too that Blondie didn't talk about, but she knows it, is when you start unwinding this shit, you start seeing frauds, and there's a Bernie Madoff again, and now all that shit starts happening because there's liars out there, there's fraudsters, and if it's a big one, that's a huge problem, because the people that are owed by them aren't getting their fucking money, and those are huge markdowns. So, like, pray to God that we don't have one of those, like, under the cover somewhere, right? That's like one of those kind of, like, one-off events that ends up taking the whole thing under when we're already in a bad circumstance.
Is this reminding you of 2008 all over again? When, it took approximately 2-3 years. Housing prices peaked in around 2006, 2007. Mortgage delinquencies rose. And then around 2007, backed security started failing. And then 2008, we had the CDS spreads, what caused the 2008 collapse. So are we essentially seeing the same shit all over again? Is that what
Yeah, times the 1970s, yeah. It's that a little. It's like Blondie saying, it's that on steroids times the 1970s.
Yeah, the reason I cannot emphasize the reason why it looks kind of different is we've got a different set of tools that everyone's been using, but at some point you run out of the tools that you can use, you run out of leverage, you run out of different ways to manipulate things, and then as the economic pressures continue and the tide pulls out, that's when you're going to see shit really hit the fan.
Yeah,
it'll just capitulate, it'll zipper really fast.
And yeah, well, that's the other thing. Algorithms are much faster now. Like, things are much faster right now. She's very right about that. So GFC took a lot more time, but algorithms weren't pervasive like they are now, So you'll get things just move, and then just you're like, whoop, it's gone. The other thing I would add to the context of this is the first thing that happened the first time was the Bear Stearns hedge funds went under, and it was like June of 2007. And everybody's like, oh, okay, well, they're okay. Somehow they got backstopped and blah, blah, blah. And then, a year later, Bear Stearns went under, right? And then Lehman went under. And what you don't realize is the government pays for that, right? That's what people don't account for. So now the government's been trying to get the 10-year rate down, and they've been banging the table. Trump's going to fire Jerome Powell, right? They can't get the 10-year rate below 4%, right? And now we're in a costly war where we don't even have a goal. Like, we don't even know what the fuck. None of it makes any sense. That's really expensive too. So then, you get to situations where rates start to go higher at a time when people need money, right? But they can't get their money because nobody wants to give them, because everything tightened, because we're in a credit situation, and the government's got their back against a wall. Because why? Because, well, they're already $40 trillion in debt, but the rates won't. They're not. Nobody's using their debt as a safe haven, so you can't get rates back down to zero, right? So it's a very bizarre circumstance if we actually have a problem, right? Which is why I say that real rates will actually go very, very fucking negative, which makes things like gold great, because it's not a negative yield, right? They can't bail you out if they can't borrow the fucking money at their price.
Okay.
All right, and I could bring it to the stock side if you really want to talk about it. Thanks to Star, he made me do a lot of research over the last couple of weeks. So kudos to you, brother. You made me a lot smarter.
Go ahead, King.
All right, so let's look at this thing in a way that traders could understand it, right? Let's look at CoreWeave. We're going to take the lawsuit off the table. We're going to talk about the financial side of things, right? Okay, so CoreWeave was backed by Blue Owl Financial, right? Now, all of a sudden, with everything going the way it's going, Blue Owl tried to go to some of the bigger banks to get a loan for CoreWeave. And they said, hey, I'll use the debt as collateral. Well, you know what the bank said? Shit, we don't think CoreWeave is going to be able to pay y'all back. You think we're about to take on some of their debt? No. Right? So, if you look at it from that standpoint, CoreWeave now can't go build this another huge data center that they're trying to build, right? You have to look at it from that perspective as a trader to understand what they're talking about if you don't understand it at the level that they're speaking about. Once you can't pay, nobody else wants to loan you money. You can't get money loaned to you, then you can't build this certain thing, right? You can't build it, the money dries up, deals go off the table, you go under. Okay? So, now if you look at that in a broader perspective of what he's saying, he's 100% right. Right? As long as we continue to take out loans, as long as we continue to kick the can down the road, at some point the bubble is going to burst. Now, if he's saying the bubble's going to burst tomorrow, I'll let him speak for that. But he's 100% right. Brian is 100% right. We're not looking at all of the things that's going on. And you have to start looking at defaults. Defaults are one of the first things you're going to see, right? But once you start seeing it, that's one of those things where you start ringing the alarm, like, hello, guys, something ain't right here, right? So once that happens, that puts pressure on another sector. And then when those sectors start to fall, it puts pressure on another sector. And that's how you collapse. Star, do I have it pretty right in a simple way of trying to lay it out?
Yeah, but you're not far off. But
I'm trying to keep it simple. You know me.
Yeah, but
keep it simple. But
but think about it this way. Think about a world where nobody wants to lend anybody any money. That's what happens, right? You go from the most liquid environment ever, which was the post-COVID environment, right, to the least liquid environment ever. Right, that's what we're talking about, and we live in a world where every business relies on some form of financing, and that's refinancing. And if you don't have access to refinancing, you don't have a business, right? And then it's there's some gradients there. Like you also don't have a business if you built a business where your cost of capital was say 4%, and now your cost of capital was 12%. That's not business anymore, right? That's called bankruptcy. So what happens is you have a lot of business models that have been created that are addicted to free money or cheap money in some form or facet. And when you get into really tight conditions, they either don't get the money or the cost of the money is extremely high, right? So in either case, you don't have a fucking business, right? And so what happens in those circumstances? Well, what happens is you find out who all the cockroaches are, like the Jamie Dimon calls them cockroaches. Everybody that's a fraud, everybody that's Bernie Madoff, you find out who everybody is. That's number one, right? Number two, right, like those who have money in those times that are liquid, they get to gobble up all the assets for nothing, right? I mean, I'm convinced that this is a natural course of the cycle where the people who have money, that's why there's always huge swaths of money around, they just hang out and wait for this to happen and then just go in and buy everything. Because things get so cheap because only those with money buy stuff. That's it.
I do want to touch. Go ahead. Finish off. I'm gonna post this chart. Go ahead.
So, and just to give you guys an idea of like, sort of like the level at which, you know, we always bail people out. We always hear that kind of stuff from GFC to Silicon Valley Bank. Silicon Valley Bank the bailout used 1/6 of the FDIC insurance to bail out all the depositors in full in the Silicon Valley Bank. I wouldn't call it a scandal. Call it a scandal. It wasn't a scandal. It was really poor trading. They were taking deposits and buying 30-year paper where it was so stupid, and not hedging it at all. But there's, how do I say this? There's not enough money in the system to bail everybody out. It can't happen. So we're in this extremely precarious position where there is a credit something going on, right? We know because Blackstone was 170 in the summer. Now it's 100, right? That's not my opinion, right? So, and there's other companies like it. So now we're in a situation where if we actually need government backstopping, well, they're not getting the rates that they want, right? They've tried for a year and they're still not getting the fucking rate.
They will, though. You know why? They'll do yield curve control because that's the only way they're going to be able to do it, and that shit is coming to America just like it's in Japan.
I would argue. That's where I push back. I don't disagree. I think we've already been doing yield curve control for a long time.
We have, but it's going to be more prominent. You're going to see it. It's going to be much more in your face, right? Than it has been previously. I agree that we're already doing it. There's been a few interventions in the bond market already over the past couple years, maybe a few years.
5 years. But yeah. 5 years. More years.
I just want to touch on also on the TA perspective side. Like, for example, NVIDIA, I posted in the Nest. I mean, once we lost the 200 daily, NVIDIA dropped down an additional 31% in terms of structure, where we are relative strength. This is not looking good, at least in terms of what potentially might brew up in the near distant future, what might lead to a bear market. Now, you guys know the ES is on the daily is a impending death cross, and that could be weeks out. But the further we continue this fucking war, okay, NVIDIA being a heavily weighted stock, that thing can tear market to the downside. Again, look at the chart I posted on the Nest. We lost that 200 looking left. There's 2 yellow arrows. What preceded was a 31% correction. We're now testing. We failed the 50 on the daily, and now we're coming right back down to test that 200 on the daily. We break below that 200 daily and obviously back test and fail it maybe 1, 2, 3 times, triple top it, quadra top it. That's it. Game over, guys. So, go ahead.
Be a better, just in your life, like, I mean, I'm shorting banks. I'm getting long like inverse bank ETFs and triple inverse and double inverse, and I'm actually buying like 95 delta calls. So rather than spending the entire money for like a $45 stock, I'm buying like the 35 calls or the 30 calls, and they're like 80 to 90 to 95 delta calls, but I'm buying like 5 times as many of them than I am of stock, right? So I'm getting leverage that way. I'm not buying out of the money calls, right? And so, you know, I'm also in the things I'm long, I'm trying to be a better seller. You know, like, so thing pops, you know what, I'm in profit. I can take this money and raise some cash. I do it, right? So that way, if it does come to pass where we do get things that are trading 20 cents on the dollar, I want to have money around so that I can buy that shit.
Starpunk, can I ask you something? Because you seem like you're pretty astute. Do you trade a lot of options?
I was an options trader.
Okay, over the past week, let's say week and a half, to the liquidity conversation, I have noticed that there are certain instruments that are typically way more liquid with much wider spreads. Are you also seeing that? Bid-ask spreads?
Yes.
Yeah, and that's a sign of liquidity stress. And I was going to mention that earlier, but I just, I started to see it last week. It might have been going on longer than that. But you got to be careful with options here because it seems like market makers are stepping away.
Well, yeah, and the other thing I would say about options is I'm not using out-of-money options really to do anything. I'll give you 2 examples. So I gave you the first example. I'm doing the Nancy Pelosi thing, the Paul Pelosi thing, where they don't buy out-of-the-money options. They buy deep in the money options when they know something's going to happen. right? I do that. When I want to get long something, I rather than spend $5,000 on 100 shares of something, I buy 5 calls at the 40 strike, out a couple of months and pay like $10 a piece, and I have 500 shares of exposure for the same $5,000, right? So I can either have 100 shares of exposure by paying $5,000 for the shares, or I can go in and buy 10 or 5 options at $10 and have 500 shares of exposure. I'm 5 times levered in that same position with the same money, right? So when I'm getting short things like the banks and I'm buying things like FAS or SKF or SEF, that's how I'm getting my exposure, right? But when I talk about being a better seller, that's the other side of the trade that I'm trying to do. Is, I did the HIMS trade with everybody. I love the trade, right? So I bought a couple hundred shares of HIMS after market. I couldn't trade the options, right? But then what I did when everything opened up and the market pumped, I sold the 25 calls against my position, but then I bought like 5 times as many of the 28 calls, right? And I did a 5-by-1, and then I added when it went down. And then when the stock popped, I was buying those calls at like 30 cents, and I was selling them at like 60, 70, 80 cents. And then I just left my short call at 25 on, and I was a better seller of my options. I didn't like shoot for the stars. I said, you know what? I'm in profit. Take that money off the table and rotate into something else. And all I would say to people is, now more than ever, be much more inclined to take profits, because you're going to love having that money around when shit's trading for pennies on the dollar. Trust me.
Yeah, Starbuck, that was
a fact, my brother. That's a fact.
That was a great explanation of ratio trades there, and it's a strategy that I've been looking into to try and protect a silver position. And if you guys don't mind, I'd like to go into the weeds a little bit and second your opinion about the dollar and the Fed's role and the box that they kind of have themselves cornered into. Do you guys want to go down that path?
Anything that opens up a conversations, absolutely. I'm all for change and different narrative perspectives.
Okay, yeah. So to Starpunk's point, the interest rates obviously are tied to our auctions, right, and the demand for our treasury bonds. So looking at it as a geopolitical situation, you have the BRICS nations and many others that are trying to de-dollarize, right? After we threatened to take Putin's treasury bonds and give them to Zelensky under the last administration, who would ever buy our treasuries? So the position that the Fed's in now with $7 trillion in debt that they have to refinance this year, plus a couple more trillion for the deficit, it's going to be very difficult to get that out there. And I think that's one of the reasons that they're pushing the stable coins, because some of the biggest stable coin issuers like Tether for USDT, they're some of the bigger buyers. So if you listen to Treasury Secretary Bessent, he said that if we don't get the stable coins out there, we're going to lose the reserve currency status. So the demand now, it's kind of an artificial demand, but it's working. And I think their attempt is to try to keep interest rates down. But we talked a little bit about the quantitative easing and the twist, right, where they can go out there and try to manipulate the long-term bonds. But in order to do that, the Fed has to keep printing money. So that's a great thesis for gold and silver, because as they keep devaluing the dollar, we should see silver and gold go higher. And that kind of ties into the manipulation that we were talking about earlier. They use the big banks to go in there and short, huge amounts of futures contracts in silver. So now a lot of the banks are in big trouble.
You're breaking up.
No, he's not. He's fine.
No,
King.
I think that's just you, Ken.
King, it's you. Come back. Just get out and come back in. Go ahead, Joe.
Yeah, so so I think the banks, we don't know exactly what their short positions are and who's holding them, but there's like 300 to 400 contracts for every 5,000 ounces of silver that's out there. So as silver's going up, somebody's losing billions of dollars. So I think that the banking problems that we had, with Silicon Valley, as we mentioned, I think there's a lot of other banks that are probably, teetering on the edge, and this could just escalate into a major situation. And I think that they have already tapped into, and I'm sure you guys have more experience and knowledge in this, but there's these emergency repo funding operations, right, that the Fed can do. And I think they are already printing money and bailing out some of these banks. And you can see that kind of corresponds to the big slams that they've been doing in the silver, silver space.
Estoy live de
So I think we're
host
watching
grande
system,
ahora.
The stresses throughout the whole system, and I'm waiting for something big to happen. I'm also short the banks. I think I'm in that same fund that you mentioned. FAZ is the triple short the financials. I just shorted.
Amor, tú estás live. Hablamos ahorita.
Things might be breaking down, so I'm encouraged by the analysis on the on the Nvidia. And then there was one other headline where I saw that they're looking to add SpaceX, and they're trying to change the rules, right, to allow them to kind of fast track SpaceX to get into the index, I guess, to the NASDAQ. And somebody had speculated that this might be because they need to protect the index, because if a big, one of the big players, let's say it's Nvidia, is going to take a hit and take the index down, they might be wanting to, substitute SpaceX in there to give it some stability. So, yeah, I'm open to any questions or, interested in your guys' take on all of that.
Star, 1 second. Guys, while I'm going to give it to Star, 2 things. I posted the Wyckoff distribution schematic phase on ES. This is the update chart on the Wyckoff events that it's actually panning out very nicely. Again, it's in the chart. And again, it's in the nest. Also, we are live. It's all recorded on YouTube, so certain things that were said or tickers that was mentioned, it's all in the nest, guys. Go ahead, Star.
So essentially, what Joe is hinting at, and this is kind of why I am a big advocate of not just having gold in a portfolio. I think everybody should have some allocation, but I mean having it in your house, right? Having silver in your house, right? Because what he's speaking to is they got their hands in everything, trying to control everything, right? This isn't a free market, right? The beauty of free markets is that the market will handle it. You don't got to fucking worry about it, right? You just got to stay resilient, right? But what they do is they say, no, I don't like the price of that, so I got to do something about it, right? Or, you know what, the S&P, it's in every fucking pension and endowment you can think of. So we got to keep prices up because, pensions rely on being able to, give people their pension and sell what they need to sell to meet their current liabilities at a good price, right? You take the S&P down to fucking 2,500 for fucking 10 years, every pension is broke. They literally can't pay people because they're all invested in it. And you can't look at the chart of the S&P, the weighted average cost of every unit of S&P has been going up and up and up and up and up, right? But now all of a sudden cut it in half or cut it by 3/4 and then start trying to pay people the contractual pension you owe those people. You're fucking broke. So they can't have that, right? And so to what Joe's speaking to is, yeah, they're going to have problems. So now we're going to change the rules. We're going to manipulate the index. We're going to add you. We're going to pump it up. And that's what they do. And what I think, and I'm using silver as an example because Joe spoke to it. I've been in the metals trade. I've been in silver since $22, and I've been learning since $22. And just this last quarter, as I spoke about earlier, the miners realized a sale price of $70 an ounce. Some of them, Hecla and First Majestic, when the Q4 price was 52 on average, right?
Talk to them. Let's go.
But so essentially good. So essentially. The analyst said, well, how can you sell silver at a realized price of $70 when the Q4 price was 52? And the answer is because people are going to them directly. They're bypassing the exchanges. So that begs the question, what's the price of everything when the crooked exchanges, the Crimex, that's what they call it, right? They lose their legitimacy. Right? Now we're in a whole different world. That's a paradigm shift. Now it's what's the price of that? I don't know. What do you want to pay for it? Right? That's real inflation.
Yep.
And that's why I say to people, think about what you own. Consciously understand fundamentally what it is that I have right here. Right? Because we're starting to get into a world where companies are and places are already bypassing the traditional systems.
Right. The one thing I would add to that, you're saying you should have gold at home. And I hate to be this fucking doomer guy, but
not a lot, but something.
You should also have gold abroad. Outside of the system, somewhere you can access. There are plenty of wealthy people that are currently storing gold reserves in Singapore. There's a reason why they're doing that.
I mean, and I for anybody who's, I'm not saying they're go convert all your money to, gold or silver or whatever tomorrow, but go learn about it a little bit. So God forbid you got to deal with something, like what I do is I like the fractional pieces, right? So like a 1/10 of an ounce, a 1/4 of an ounce, they're great. They're affordable. And God forbid you got to trade things with people. Most people can't afford an ounce of gold at $5,000 an ounce. Well, now take gold to 10,000 or 15,000 or something, right? How many people are going to be able to afford that? Not many. But if you have a 1/10 of an ounce or a 1/4 of an ounce, that's affordable. That's tradable, right? So have a little bit at home. So if you got to deal with something and you got to trade something. I mean, I watched a guy come in the other day to the local coin shop, start asking for Russian gold. He was Russian, like old Russian gold, because he has people who want that right now, right? And it's a strange market. I'll give it to you, but the reality is there's a use case for it when people are like, as we're watching in the silver market, when people are bypassing traditional systems, what types of systems are you going to be involved in, right? Well, another one's going to be some forms of crypto. I mean, I've talked to people about Monero, Bitcoin. Like there's people who are converting to Bitcoin, like Blondie mentioned with the Russians a couple of years ago. So there's going to be things that are going on outside the systems. And that's, before I said, traditional correlations would break down in these cases. And where you think things should trade, given what something's going on, might not make any sense anymore. And so what I'm just trying to do is, for the last 5 years, if you were diversified, you got fucked, right? You wanted to be all in on fucking micro strategy and fucking fart coin. And if you didn't do that, you were an asshole, right? But now diversity actually might pay, because it's unclear how this is going to shake out, and so you might want to have your eggs in a couple of different baskets so that you're protected, so that when it's time to buy stuff for 20 cents or 10 cents on the dollar, you have a couple of baskets ready to go to start buying stuff.
I just want to add on the crypto layer of things. I would buy a couple cold wallets, maybe one Bitcoin specific and one crypto agnostic. So you don't need to hold crypto right now, but if you needed to make the transaction and have a seed signer essentially, so that you wouldn't be using the exchanges and go directly peer-to-peer or OTC, you have the seed signer and the cold wallet to do so. And that you have the hardware just sitting in a box somewhere ready to go, and also learn to get proficient in it as well.
Yeah, there is a learning curve, and you can fuck that up and lose all your crypto. So you should learn about that now, so that the learning curves are already completed.
I want to pivot a little bit. We do have somebody in the comment section, the blue pill, purple pill, and this is for Joe. Joe, you still up here?
I am.
Well, okay, and quote, it's in the purple pill. Who would ever buy Putin's Russian government treasury bonds? WTF, who cares about Russian treasury bonds? Question mark. What, if you want to rebuttal that?
Oh, yeah. I wasn't talking about, I don't even know if it is possible for us to buy Russian bonds. But my point is, if Russia invested, we want foreign governments, right, to buy our treasury bonds. And that's why we had the petrodollar, right? After we went off the gold standard, and this ties right into everything we're talking about. When we went off the gold standard, the dollar wasn't backed by anything. And that enabled the Fed to just print money to infinity, which they've done. So we look at everything priced in dollars, right? All of our stocks, our bonds, everything, real estate, it's all priced in dollars, even gold and silver, right? It's all priced in dollars. What I believe is happening is the inflation in our whole society is all the value of the dollar is declining because they just keep printing more and more money, and it's not backed by anything. So we needed the foreign governments to buy treasury bonds to buy oil, so that the petrodollar agreement was the Saudis were going to only accept payment for oil in U.S. dollars. So every country in the world had to buy our treasury bonds and buy dollars in order to purchase oil. As they're moving away from that, and we're even hearing more rumblings about it now with the war in the Gulf, that they're going to try to to use the dollar less and less. So that's the problem, is that our interest rates can really spike if they dump these bonds or just back away from treasury markets and they don't buy any more of our debt. So yeah, I'm not talking about investing at all in in Putin's, any securities that they may have available. But, the point is just that if all of these countries are moving away from buying our debt, we can't, we're going to see interest rates spike, and we're in a position where we can't do anything about it other than print more money to buy our own bonds, and that just it weakens the dollar's value even more. And you can only do that for so long. So when we talk about the credit crisis, in different markets, whether it's private equity and when it's going to happen, everything works until it doesn't, right? It's all a house of cards when you're looking at the massive amounts of debt that are out there and leverage throughout the whole world. And just look at Greece, a few years back, that worked until all of a sudden one day it didn't, and their interest rates went to 13% or more, and then the whole system blew up. So we could see that. I don't know if they can keep the wheels on the bus and if there is a plan to to try to keep us alive. But going back to the value of the dollar and diversifying, in holding assets in different methods, like we were talking about the crypto, right? That you could have it in cold wallets and stuff. Well, just like the gold and silver, there's a lot of different ways to invest in it, right? We could buy ETFs like GLD or SLV. You could buy the physical gold and silver, which I think everybody should have a portion of in their own possession. But then you have to deal with storage, right? You either have to put it in a safe lock box or keep it safe in your own house. Have the security. But there are also brokerage firms that work with depositories, so you can actually hold physical gold and silver in a depository in a brokerage account. And if you need to do that in an IRA or 401k plan, you can actually do that, and it has to stay in the depository until you take a distribution of it, which would be taxable. So I think it makes sense. There's more liquidity, obviously, if you have just GLD or SLV. And SLV has its own problems also, because that's still in the COMEX system, right? That's the silver's custodied by JP Morgan, which was supposedly one of the biggest manipulators of silver. And what they're doing now, and that silver is supposed to be at the LBMA in London. So what looks like they've done is they redeemed shares of SLV and took that silver out to replenish the COMEX supply, because COMEX supply has been dwindling. And I follow guys that look at how many contracts are being, exercised each month, and how much silver is actually leaving. And it looks like, we could be, if they don't get more silver in and they can't control it, the paper price, like as we alluded to before, may be irrelevant at some point. And it kind of is already, because if you look at the price of silver in Shanghai, it's like anywhere from $10 to $15 higher than where it's trading, in our fake paper markets because of the manipulation. So,
Joe,
there's a lot of interesting things happening.
Joe, that little segment of yours, bro, you fucking killed it. Give this guy a follow. Joe, where you been, brother? What are you, hiding under a haystack, under a fucking woodshed? Give this guy a follow, guys. Holy.
I just found you guys.
I'm happy you came on board, dude. Holy crap. That was well said, brother. Beautifully said. Star, I know that's your wheelhouse.
It is, and he's right. The thing that I just can't get away from is the legitimacy factor, right? Like, these exchanges exist to price things out in dollars, right? That's the bank. You put the banks on the one side, and they put all the other little guys on the other side, and then they just have the banks literally just force it down your throat what the price is. But when people just go away from that and start transacting somewhere else at a price that they determine they want to transact at, well, that makes the old system irrelevant, right? And so now all of a sudden we have price discovery on everything. And what I'm afraid of is that it's kind of like trust, right? It's like, oh, I love her, she's great, and it turns out she's fucking your brother. Now you don't trust her ever again, right? It's the same shit with fucking the financial system. It's like, yeah, this is wonderful. Oh shit, no, they were telling me silver was 80. It's actually 150, right? And now you just don't trust them. And then what do you have now that's going on? Like, what world did you just wake up in, and how do you deal with that? And what I'm saying is, I don't really know, but I'd like to be prepared in a multitude of ways. So whatever that ends up being, at least I'll have some eggs in some basket somewhere where, I can buy stuff for 20 cents on the dollar, right? Or do whatever I have to, right? And that, or like crypto makes you mobile, right? If you got a big pile of Monero, you can go wherever the fuck you want because it's not like gold where you got to carry it, right? You don't have to stick your silver in a sack and drag it across the border. You can just go, right? So at the end of the day, how do you protect yourself in an environment where the uncertainty is high and the forward uncertainty looks even higher?
I got a better question, Star, for the new guys that are listening in. What are some tickers? Give me 2 or 3 that we should be paying attention to when shit hits the fan. What should we be looking at where we can pivot? Once we hit this once we hit a target, where do we move to next? So what are those 2 tickers, and what do you recommend in terms of like, a fuck you scenario? Star. My life.
Me and Joe both like FAZ. We both found that independent of each other. It's triple leverage short, like financials, and like smaller financials.
FAZ?
Yeah, I mean, as far as like you're looking at shorts, right? Like when liquidity tightens up, everything on the long side is going to get hit. It doesn't matter whether it's gold or silver or this or that. Treasuries may get bid temporarily. I don't know if it's going to play out. There's not as much certainty this time around that that's going to be the safe haven bid. In my opinion, maybe it is, maybe it's not. But like, cash.
Well, but that's what everybody says. That's traditionally. But what happens when that's not the case?
That's what I'm saying. Yeah.
What I'm saying is, I actually think we might be moving into a world where that's not true anymore. Like where you say, "Oh, gold's."
I do as well.
Yeah. So in stressful times, 1 ounce of gold has traditionally purchased more than 1 ounce of the S&P 500. So like the S&P right now is 6,700 and gold is like 5,000. So what'll happen is the S&P will be at a higher number relative to the gold will be at a higher number relative to the S&P. So like flip them, where gold is 6,700 and the S&P is 5,000.
They'll go 1-to-1. At the very least, they'll go 1-to-1.
Yeah. And they might both go down to 4,000. That could happen too.
100%.
So I guess the way I'm looking at it, the only reason I shorted the banks is because when I was seeing this credit problem, I started looking around at things to short because liquidity, like you just said, everything goes down in price. The one thing that was such a high price were banks. People have been buying fucking banks since like the middle of last year, like crazy prices. I said, the KBW was trading at like 5% off its all-time high. I said, perfect. And I started buying puts in that thing. And then I hit on those and I rotated into FAZ and SKF and SEF. And I just like shorting those, 1, because credit affects banks big time. But 2, because it was still really high. Like I don't want to short something that's down. I'm not shorting a hole. But if it's still high and I can sell it, that's where I want to start. And I want to like focus on things that have a difficult cash position where they didn't refi their debt and they have debt that's coming due, and they don't have any access to capital, so they don't have a company anymore. Like that's why those things get sold off so fast, because if you need money and money's tight, you're not getting your money. So everybody knows their own stocks really, really well. Just take a look at their financials.
I appreciate that, Star. RR, welcome to the building.
What's up, my man? Sorry I'm late.
It's okay, brother. Talk to me. You always get these great tickers out of left field. What do you got going on right now?
I have a quick question for Star, if I can.
I'm getting to the desk now. I'm on the way home.
All right, go ahead, do that. I know you're driving. Go ahead, Parabolic.
Star Parabolic here. Thank you for all the alpha. Quick question: How do the bailouts affect a position like a 3 times leverage on the financials? And thank you.
Oh well, you made me think of something else too. So thanks for saying something. Bailouts could fuck you up, but it depends on how the bailout works, right? It's all specific to the details, right? Like who gets bailed out, right? And if you look at these 3 times levered and 2 times levered ETFs and some of these other inverse things, the ETFs actually, they have swaps that are structured with other banks. So like UBS will do a swap with Goldman, or Goldman will do a swap. Whoever's hosting the ETF will do a swap with Goldman, and they promise to pay out, the returns that the ETF is promising, given that something happens, right? Well, as we know from GFC, Bear Stearns went under and Lehman went under, right? Okay, well, what happens when your ETF has swaps with the banks that owe and they're not paying because they're defunct, right? You got a problem with your ETF.
Yeah.
So what you got to do is, like I always say to people, be very conscious of what you own, exactly what you own, and be honest with yourself. And if you're starting to make a lot of money in one of these things, what I would say is, there's a point where they might, it might not be a good idea to be greedy anymore and take your money off the table, because what you don't want to do is be holding that bag when it turns out that you're not getting paid. Follow?
Yeah, thank you.
I appreciate that.
Yeah, I mean, to that point, like, you don't want to overstay your welcome in some of these things, because eventually they will get bailed out. They have to, especially if they're structurally important. And a lot of people overstayed their welcome in bank shorts in 2008, 2009, and they got absolutely fucking wrecked when everything went the other way. So,
does anyone have any information on the bail-ins versus bailouts? I know vaguely about this, but I don't know exactly what act it was that that brought this about. But what they're actually going to do is, if we had to have another bailout, they're actually going to use the depositors' money to bail in the banks instead of the system, and the government stepping in and bailing them out. And that's a pretty scary thing that they don't really talk about on the financial channels.
Oh, why would they ever talk about that, Joe?
They would never. Empty, real quick. If somebody wants to go ahead and answer Joe real quick. Go ahead, Joe. Finish.
Oh, I was going to say, yeah, to your point, there's no reason they would want to tell us that. I mean, just like they don't want to tell us the limitations on the FDIC insurance, right? If people knew how little protection there actually was, they wouldn't have the confidence in the banking system. And to the girl's question about the FAC, my only concern with shorting, and everybody should be, aware of the risk there, is we can be right long term, but they can stay solvent, longer than we can. And, these shorts, it costs us money, right, to stay in a short position. So the timing is really critical. And that's the hard part to get right, is when are these things going to fail? So it's not easy, but we all know trading isn't.
The other thing I want to mention to Parabolic is these levered ETFs, inverses and stuff like that, they have a built-in time decay. So you can't just hang out in them and expect to just maintain your value if nothing's happening. You actually lose money every day that you're holding it. It's just like an option. So
thank you for mentioning that. That's very important.
Yeah. So just anybody who's holding a levered ETF, know that, long or short. And just remember, this is it's a tactical thing. And the reason I'm holding my shorts is because it looks like we're just getting going with this credit thing. And I'm willing to gamble my theta versus my, expectations to the downside.
Hey, Empty, real quick, if you have something to say it now, because I added you once, but you didn't say anything. Go ahead.
Yeah, I had bad connection. Sorry about that. I'm with Joe Anon and Star Punk when it comes to the financials. I think we're in agreement there. I would just like to offer another opinion in regards to gold and the dollar. I think it's very much same with the U.S. Treasuries. I think it's all very much tied to oil and the inflation shock that came from oil. It is of my opinion that we're going to see a strong reversal in this. You can especially observe that with deaccelerating oil volatility. Similarly, there's a reflection of this in gold and silver, where those volatilities are falling, and so is the price. We also see this reflected in with the dollar strength, which has been going strong since, all that FUD about, dollar debasement and all this nonsense back in the end of January. And now it's broken out. I put a chart down in the comments. You guys can check it out. That's the weekly. And a lot of this is because what we've seen, in my opinion, is when the oil price hit, you guys need to look up the structure of oil. I'm not going to spell it out. And you also need to look up war premium. It's dual tail risk is a very special case. It's a very special instrument. So this is why oil players play oil, and it's an important aspect to understand. Anyways, so you have this price of oil spike, which rippled through the emerging markets and got a lot of people wrecked. And it got them wrecked because they got to cash out on everything to get more dollars to buy oil at a higher price. That also was a tailwind for the dollar to rise higher. Still, either way, the dollar's been going up, and in my opinion, is going to stay going up. It's the new trend. That's my opinion. And then, so that's also puts a lot of pressure on precious metals. Now, how do we tie this in with oil? You have to understand that dual tail risk, that we saw it before. They fucking were talking about aliens to try and keep war premium going, because oil will respond to headlines. It's extra sensitive in this way. But it grows tired unless actual supply and infrastructure and these things are verifiably changed. So without that, unless the worst case scenario happens, you're going to get an equal and opposite crash in oil prices. And Trump can taco anytime. So I think that's also going to, and I think that goes the opposite way with treasurers. I think Drunken Miller is going to end on the precipice of getting screwed. That's my opinion. I'm cool with being out there. I put my money where my mouth is, and I'm talking my bag. So I'll be just straight up about it. I'm short oil. I'm short gold. I'm long TLT.
Thank you for that segment. Star, give me 1 second. David, welcome to the building. How are you? If you can hear me.
Yeah, I can hear you. Sorry. I'm doing some work right now. Someone mentioned the leverage, and the decay in them. I mean, if you are going to play them from an option standpoint, you're better off buying puts in the longs, right? So if you're looking at SOX S or SOX L and you're going to play options, buy the puts in SOX L because it's going to have decay, right? That's the long. Does that make sense? So the decay is going to work in your favor.
That's not priced into the option now? I think it is.
Well, it probably is, but if you're looking for the movement, if that movement goes the other way, the options is going to pay better, right? You're still going to have decay, especially if it's going down.
Okay.
But I agree with everything that you guys are talking about. I reduced my precious metals. I'm more U.S. centric with the dollar going up, but a strong dollar is not going to help exports. That's 100% sure. You can see the emerging markets like South Korea is getting, is coming down hard. Any country that has exposure to Middle East oil, I'm less enthusiastic about it. I want to find, if the dollar, when it peaks, I want the commodity rich countries. I still see that the commodities are going to continue to go north. I know oil will get a correction. I'm looking for, if we get to 75, I'm a buyer of oil. Going through our international product right now, looking at, stock, I should say sectors, by geographic region, by sectors and individual stocks globally. And I mean, it's uncanny that everything that's been happening globally is breaking out in other markets well before ours, and that's because the dollar had already hit its peak, right? So if you look at our group chart in the refiners, I mean, they were breaking out in European refineries 6-7 months ago. They were breaking to multi-year highs, so, and that's just with the thought process being the dollar peaked, all the emerging markets, all foreign markets, out of 42 markets last in the since the beginning of 25, the U.S. ranked 35th. Just to give you an idea, we were one of the weakest markets by far. And a lot of people are jubilant on our market, and yep, you can get jubilant on it, but if you get high yield spreads to break out, it's going to be multiple compression across many fronts, and that's what I would be more concerned about here. It's interesting if you look at the U.S. Total market in terms of equity, it's about 74 million or trillion. Do you know how big the derivatives market is? It's to the tune of 368 trillion to 420 trillion. So it's the tail wagging the dog. The U.S. does a great job of, democratizing financial paper when it comes to, counter trades. Someone mentioned the Bear Stearns thing. Having gone through that, I had a client that had paper with Bear Stearns, and they hedged it with Lehman Brothers, and then realized that Lehman Brothers may go under. So it's like they had to find a third party to hedge their bets that they had with Bear Stearns, right? Because of the counterparty. So you can get into a really big rat's nest of things that you can't even comprehend if that happens. I've been, discussing financials for months. I mean, XLF is at 5-year relative strength lows versus the SPY. This isn't something new that's happening, but when you have financials underperforming by that magnitude, it tells you something's wrong. I was highlighting Hood at like $130, as it was rolling over, and now you got major tops on JP Morgan, Morgan Stanley, Goldman Sachs, so it comes cascading, from one name to another. You see Jefferies looks absolutely horrible. Raymond James, same thing, breaking down. I look at the IAI index, which is the broker dealer index. I have played FAS so many times in my life. I can't tell you that's a great trade if you're making that bet on financials. So love what you guys are chatting about, and great information for anyone listening.
Hey,
so I appreciate it.
What's going on? So give me 1 second, David. If you can recall back in 2008 or right around 2007, 2006, does this remind you? I mean, I see you're a chart guy. Does this remind you sort of the same sentiment happening from then till now? Like, everybody, sort of scared, credit swaps. Like, does this element where we are now sort of speak on 2006, 2007, and right before the 2008 crash? Is it similar?
There's a lot of rhyming with it. I don't think that anyone can with 100% accuracy say that, it's exactly the same by any means, but I do see so many similarities. I think the average retail investor doesn't understand what credit spreads are and how credit is really, the key to the entire market, right? If you don't have credit, you don't have anything. And you're seeing, did you see the Go Easy, the Toronto-based company that does subprime auto loans? Last week it was down. It hit a high of somewhere around 245. I think last week within a period of 4 months. I think it was Monday or Tuesday, was down 57%, down 18% the next day. They were double collateralizing loans. It's a BNPL name. You see Klarna, whose valuation a year and a half ago, they were going to come public, and they had to push it off because they had a messy earnings shortly after the original IPO was slated to come out. I think it IPO'd. I think it hit a high of 50, if I recall. Now it's $10, right? Like the private equity in Wall Street just continues to pound valuations in different series and tell you this is the valuation. What IPO right now has been really successful, right? I mean, you had MSTR. I think Cantor Fitzgerald lowered their target price to $250 from $450 only 2 weeks ago, right? The stock's at $150. This whole scenario kind of brings back memories of when, the public was so jubilant and so enthusiastic about the next big thing. And that's what, you had names, like the nuclear stocks, just go rampant. I was early on them. I sold out mid-cycle thinking, hey, maybe this is I didn't short them, but, they went up way beyond my comprehension of not even having a design, not even approved by the nuclear regulatory agencies, not even having sold one. Like the enthusiasm to push a stock to 60 billion market cap without a product is unlike, this is like, you know, changing your name to vacuumcleaners.com during the internet bubble. I mean, that's what it mimics to me personally. You know, when so many companies would change your name to .com and it would get up, you know, go up 1,000%. And there's some similarities, right? And it might not necessarily be AI, but look at, you know, the analog chip names. You know, they've left the AI names for dead, and you have, you know, Deer Report by 5 cents jumps $70. I don't know anyone in their right mind. You could be a great company, but not a 5 cent beat, raise guidance, and go up $70. You just built in years worth of you know, future beats, right? And you're trading at, you know, 40 times earnings. Like, this is the market we're in. You have to respect it and understand it. But, you know, some things are just, you know, crazy out there, and realize that at the same time.
Hey, do you mind if I step in for just 1 second? I have 4 minutes. I'm actually on my way to a skate. I just wanted to normalize two schools of thought here, just so that the people that are listening understand the difference between Starpunk and Empty Cup. So what Empty Cup is talking about is short to medium term. So that's why buying gold and silver here might not be the most prudent decision that you can make. You should own some, but you have to be price sensitive, because in a liquidity crisis, everything gets hit. The dollar will rally and bonds may rally. I'm not sure I believe that on the David Levinson thesis, but we'll see how it plays out. What Star is talking about is a much longer term thesis. So you have to take into account, like, oil is typically the last thing to run in a cycle. And usually when oil does this, it will suck liquidity out of everything. So what Empty Cup is saying, that's what he's talking about. But on a longer term perspective, you're going to get good buying opportunities in silver and gold, and that's going to be the longer term play, commodity focused countries. So I just wanted to kind of square those two things, because I only have about 3 minutes. Hopefully that made sense and clears some of that up a little bit.
And I agree 100% with that thought. That's what I see.
To clarify with Sol, you are saying that we are going to see a decrease in pricing on precious metals, but for later in the year will be at a valuation point for buying in.
Well, I mean, the time to buy those things at this point, if you're either not already in them or whatever, I would have very small positions in them. Physical, you could probably start nibbling on the way down, but until that liquidity crisis hits, where you know, liquidity starts to dry up, because the reach for those assets as margin calls come in will drop the value of those assets, and that's when you want to start buying back into those assets, because liquidity is fucked right now. Like, you started to see it in November. Liquidity has cycles. We're on the down end of that liquidity cycle. So anywhere where people can get cash and liquidity, they're going to sell those assets in order to get that cash.
Thank you.
Real quick, guys, all this is being recorded, but YouTube's on the nest, so if you guys miss a certain segment, it's all being recorded. I yield the floor. Go ahead. Somebody had their hand up. Empty.
Let me speak to that real quick.
Go ahead.
It offers there's one other component of that I don't think anyone's taking into account, and I haven't heard anybody say it in any space. But we're at a different point in the world at debt limits and how much money people owe people. Okay. And that's not even just on a sovereign level. All the countries are like that, but companies, you name it, everybody's fucking leverage to the fucking help. Okay. So this may not be the typical playbook, right? Which is why I'm saying to people, have a couple of eggs in a couple of different baskets. So that way, whichever way this fucking thing turns, you have something going over there. Because the United States, you talk, well, we're going to have to bail these people out, but you might not be able to get the fucking money for people to bail you out, right? Nobody knows how this is going to go, right? So gold and silver in your house is very different than gold and silver in some trading account in GLD or whatever, right? Those are different things. And what I'm saying is, I mean, and I've been buying gold and silver from 1900 and $22, so I have no problems buying some gold and silver right now because I've been buying the whole time. But when it comes to a world where nobody's paying attention to the COMEX anymore because they're irrelevant, because the people are literally bypassing them, that's a whole different conversation than what happened in GFC. And what I'm saying to people is, while it may transpire the way it was just described 5 minutes ago, and the difference between my thoughts and the other gentleman's thoughts, there also might be a breakdown in traditional correlations where things start trading in places that you never anticipated. And what I'm saying to people in terms of know what you own and diversification, right? That right now will protect you more than it ever has. That's where I'm coming from.
Go ahead, Empty. You had your hand up. 1 second. He's had his hand up for quite some time.
I just wanted to follow up and ask Mr. Nikowski a question and his thought, because Starpunk had brought it up in the comments, and I thought it was valid. He pointed out Conagra Brands, and me and Ray and I know the pain of that one, because it got punked basically by the spike in oil, which affected, I think soft commodities and grains and such, which are, so prices of, I've seen it on the front end because I'm a chef and I ordering, like the price of bacon has gone up significant percentage wise. So it impacted these soft commodities because of the oil spike. And what I'm curious of is anybody else's opinion about how far along that puts us on the inflation shock. Because first there's an inflation shock and then there's demand destruction. And I just wanted to hear Mr. Nikowski's opinion on that.
Yeah, I mean, the ones that are benefiting them are like Bunge and Archer Daniels Midland. The fertilizers, I think the chemical stocks are going to do really well, especially when a majority of the world that provides chemicals doesn't have access to the naphtha that comes from the Middle East. U.S. is pretty much non-dependent upon Middle East oil. It may be raising our price, but if you're going to get chemicals in, the other ones aren't going to have it, right? You have a high likelihood of declaring force majeure with a lot of foreign chemical companies. So that's what I think is going to happen. I think the soft grains are all viable, from wheat, corn, soybeans to rice. I think that's going to be an issue. And with where fertilizer prices are now, even if they came down 10 or 20%, the price of the crop has to rise substantially to make it profitable for many farmers, right? Either they use less fertilizer, which means the yield comes down, which means you're going to not have enough crops. So I'm a buyer of the soft grains themselves, and then look at like an Archer Daniels Midland or a Bunge. I think those are the ones that are going to stand to benefit. There's a lot of staple stocks that are just being taken to the woodshed. You look at Kraft Heinz, I mean, you got a potential double low. I took a position on that on Friday, and it just, from valuation, I mean, it's 7.3% dividend yield. It's going to be a trade for me. I don't love it in terms of it. Is it breaking the downtrend? No. Does it have a potential double bottom? Yes. Does it look like capitulation? Yes. General Mills, I don't like at all. Even if this is the capitulation, I need it to, get, like, I'd rather see a double bottom, triple bottom, or something like that. But the one is a trade for me. I'm going to focus on chemicals Monday. I think that's probably the best place to, pick up names that have come, some of them have come down substantially. You have names like ASIX, which is does some ag chemicals. So something like that is where I'm looking. I'm more convinced that everyone thinks that the market's rolling over on the war, and I really think, with high yield spreads now taking out, I think we're back to the June 6th level of last year. Go look where the market was on June 6th of last year and where it is today. If we blow this thing above 350 basis point spread, you'll certainly see it in the banks, and the banks are certainly, very heavy right now. So in my view, I think we could open up to multiple compression. I know everyone has a bet that, that they're hedged. And, the question is if they're hedged to this degree, are they also buyers on any pullbacks? And if you take out that magnitude of insurance, it feels to me like most of them are going to say, you know what, I'm going to see if my insurance pays. Why get long? Does that make sense? It's contrary to a lot of people are saying, oh, there's, record amount of shorts out there. Well, then are those shorts also going to be buyers unless there's enough money to lift this market? That's a pretty big, and I don't know which way it's going to go. But if I was looking at the S&P and I woke up from a coma I was in 10 years and came out of it and looked at that chart, I'd be like, this doesn't look good. And then I pull up the financials and I didn't know there was a war going on, didn't know anything. It didn't have any emotional attachment. I'd be like, hey, this is a great time to short. So that's the way I have to look at it from just a chart perspective, is erase any emotion, erase any thought, and act like I just came out of a coma that I've been in for 10 years and was presented with 50 charts, right? And what's my thoughts on them? I think that's the best way to analyze the market without knowing anything other than the market is a voting mechanism done by the majority make the charts, right? So that's how I'm going to view it. I saw some headlines. China's, got 26 warships off of Taiwan now. They haven't done anything in 2 to 3 weeks. It'll be interesting to see where that goes before Monday's open. So I'll be paying, attention to that between now and Monday as well. So hope that helps with what your question was. But I would be a buyer of soft grains.
Thank you for that.
Yo.
Appreciate it.
Sam, can I add to that real quick?
Go ahead, King. Yeah, you're up, and then Code.
All right, so David, I want you to think about this too, right? We were looking at
Lock and loaded. I'm live right now on Spaces. You got to join in, brother.
Industry.
Okay, I got you.
And do you know who had one of the greatest quarters ever? Deere. John Deere. So everything that you guys talking about with grains and farming, for John Deere to have one of his greatest quarters in history is spot on. You guys killed it. We've been talking about it for 2 weeks. So your analogy is equaled out by how much John Deere beat earnings. Y'all are spot on.
Thank you for that, King. Code, go ahead, answer.
Yeah, thank you. I am a little bit concerned about John Deere just from a financing perspective. Those are several $100,000 machines. I live in a rural Midwest where there's a lot of farmland around me and have farming in my family. That's my only concern. But I would like to ask Blonde Capital's perspective on where she thinks the money will flow and what her expectation is of the flow of trading over the next year.
Once she's done, or you're next.
Sorry, can you re-say that? I had this space lowered in volume as I was still working on my taxes. Sorry about that.
Yeah, just curious what your thoughts are on the flow of capital and where you would expect this market to trade in the next year, like through 2026.
It's going to get more and more concentrated as there's fear as to where it's going to be mostly in things that are perceived to be safe, so infrastructure, manufacturing, things of that sort. But yeah, that's all I'm going to say for now. But it's going to get concentrated, so it's going to get very, very, very obvious. And I'm not even talking the stock market. I'm just talking in general where capital investment flows will be going into. So where, private equity will move, where some of the larger banks will be moving their money and all sorts of other stuff, investment firms.
Thank you for that. Go ahead, R.
Finally at the desk, finally at the computer. Lovely conversation between everyone. I'm happy we got Nikoski in here. I have a question for you.
good sir, kind sir. The things that you are saying make sense. That's why there's a CMT at the end of your name. It's incredible to see the tacticianary in his element. I have a question also about the yields. I love staring at the 2-year note and the 10-year note. Given where they are right now, do you continue seeing yields rising?
Yeah, I think yields are well, the dollar's rising for one reason. That is, that this geopolitical event in Iran is taking a lot longer than anyone expected, or at least the administration. So the dollar is a safety area. So globally, everyone will invest in the dollar. When it comes to yields, I think what you're seeing is the market's again a voting mechanism to say that inflation is rearing its head. You're seeing it globally, right? It doesn't matter if a country, cuts their interest rates. The long end is going up. You have the Mag 7 are issuing debt that's competing with people owning treasury. Like, there's only so much excess capital around that can acquire that debt, right? Most people in this room are probably not going, hey, I'm going to buy, this bond tranche that Meta's offering, right? Like, most people in these rooms are equity people. You're seeing some insurance companies go straight down. You look at Erie was added to the S&P 500, I believe it was in November of 24. That thing has been obliterated. I mean, straight down. So some insurance companies are just must be absolutely piled deep into private equity, is my guess. And you're seeing, the names like Chubb is way outperforming a lot of the other ones. Goosehead Insurance, GSHD, straight down, been on my short list. Erie's been on my short list. But you're finding the cracks, and I let the market figure out which ones are the bad ones, and they make the charts for me. I mean, anyone that doesn't believe in technicals, it's kind of like I can look at 1,000 charts a day. A fundamentalist can look at one company a day, maybe 3, right? But you have to do a lot more in-depth research, whereas I let the fundamentalists make the chart for me. And so I look at it that way. Mine's the shortcut to the truth. Theirs is a long cut because they could spend hours and hours and find out they don't want to own the company anyhow because of something they found. So I think the charts help to a great degree to get, keep you out of major problems. And that's how I look at it.
I love that you said that.
So,
Star, you got your hand up.
Yeah, I just had a question about the yield curve is, like a 2-year is very different than a 10-year is very different than a long bond, right? And I've always been a bigger proponent of owning something like the TLT because it includes deflationary scenarios, right? Like 30 years is a long fucking time. Like, think about 30 years ago what you were doing, right? Think about how much life has changed. Right, so the TLT, it actually, I would make an argument, I'd rather own the TLT than some of this, like, middle shit, right? Because you can get fucked in the middle shit, but you might not get fucked in the 30-year, right, if you have it for 30 years. But when I think about, like, how do I say this? Like, what's going on because you watch what people are doing, right? And so what is our government doing? They're actually right now they're affecting the yield curve in the short end. So Powell came out in November and said they were going to be buying about $40 billion worth of short bonds between then and April, right? So April's coming up in a month. So it's going to be very interesting when that comes to fruition what the next version of yield curve control is going to be. Right? Because now they're buying the short end, which is kind of interesting, right? They always talk about the long end, but they're buying the short end, right? And I think what they're betting on is longer yields coming down, right? So why do they want to focus here? Well, because they want to refinance everything up front and not have to sit on it for too long and give the system time for longer yields to come down so that they can spend out the debt when they get the chance, is my guess. Does that make sense to anybody? That they're waiting for 10 years to come down. That's why they're focusing on buying 2 years.
I think they're coming into, here's the problem, where people say they don't get hurt by doing 30 years. Go look at the Australian 100-year bond. I think it's down over 80%. They're going to have to bail. You saw this in the gilts too when they issued their long-term bonds. They had to come in and bail out insurance companies that bought those, and then they started raising rates, right? Because you're bringing that to present value, and rate yields are going up. So, I hear a lot of people saying we should have issued 50-year bonds, 100-year bonds when rates were low. On the other side, you're going to be bailing out firms that didn't think the Fed would raise 500 basis points, right? So you can create, risk on either side of that. And look at if you had bought 30-year bonds and went through the last 5 years of the previous administration, where inflation ate into that significantly. You would think, well, 30 years I'm safe, but go look at the zeros, Z-R-O-Z. That thing has been bludgeoned to death, right? So there's consequences of what the Fed does or the Treasury does in terms of these issuances. I think at some point we have to get to yield curve control, but that's going to be really based upon inflation. I was talking with a friend of mine earlier today regarding this, in the bond structure. What I don't think, we broke 40-year downtrends in yields, right? When did we do that? We did that, in the midst of, 2023, right? When you break 40-year downtrends, you do not return to a normal trend for years. And I said this at the time, breaking a 40-year downtrend doesn't mean things will be okay in a year, 2 years, or 3 years. It is going to be higher for longer, right? Just like if I said the market broke a 40-year downtrend, you'd be like, this is remarkable, right? Look at Japan, makes a top in 79, finally breaks a downtrend. Look at the run that it had. When you break, the longer the trend being broken, the more significant it is. Every single time.
Well, I'm glad I asked that question, because you helped clear things up for me in my mind. The other thing I wanted to say was, we've been talking a little bit about how the dollar rallied, and I actually thought it was kind of a miserable fucking rally, right? So there was more short interest in the dollar recently than in history, number one. So the shorts probably covered. Number two, rates are higher, so the dollar should be stronger. And, I don't see much war premium in the Dixie. And the idea that they said the dollar rallied, well, the Dixie is a measure of the dollar versus other fiat currencies, right? Gold didn't, do much, but it didn't really sell off like that hard, right? It went from 5,200 to 5,000, and silver went to 80. But those are much more representative of the dollar, like the price of the things that are denominated in dollars. That's the measure of the dollar, not the Dixie. The Dixie is what they created to change the conversation. But the reality is, gold is the dollar, right? Silver is the dollar, right? If there's a really strong dollar, gold's $200 an ounce, because people are selling their gold to buy food, right? But the Dixie conversation, to me, the Dixie conversation is just a farce. It's something that they created so that they could talk about something other than the reality that, commodity prices are really fucking high. That's all. To me, this wasn't much of a Dixie rally whatsoever, given the current level of chicanery that's going on in the Middle East.
Yeah, if you look at when the U.S. dollar index was made, I believe, in 71 or 72. It has not changed since then. 7 currencies in it total. How much has the world changed in that since 1971, right? The only change they made was moving from, individual currencies in Europe to the euro, right? So that happened in, the 90s, early 90s. So in reality, you're not taking into the impacts or effects of China or India, which have grown substantially since 1971, right? So to me, it's an archaic, and I would rather look at individual currency crosses than just look at the dollar index. Right now, I think the dollar is going up because of fear in the geopolitical realm, especially with this war. There's always a flight to dollar, period. It doesn't matter. Look at any single war, what the dollar does, okay? We are the best insulated against anything in Iran, believe it or not, when it comes to energy or oil or natural gas, right? There is some countries like South Korea, Japan, India that are really, I'm looking at marking up some of the Japanese stocks and the chemicals, and you get these are to me major blow off tops, especially if the Straits of Hormuz don't open. And that's why I say, I would rather own U.S. chemical stocks. You go pull up a chart of 4099-JP. This is what I'm seeing overseas, 3407 JP. They're just absolutely vertical, and our chemical stocks aren't anywhere near that, but I know that our chemical stocks are actually safer. But again, it comes down to, if you starve the rest of the world for dollars, and I think that in this case with the dollar jacking up, again, it's war, it's brought on by war. I don't think it's the strength of the economy. GDP came in a lot lighter than anyone expected. We've had downward revisions on every single employment report for 2 years, except for one month, right, where we didn't have a revision down. But those revisions are pretty substantial. I would have thought that we were looking at Chinese news every time they did the revision. So, as much flack as everyone gives China, I was on a trip on a vacation in the Caribbean, stopped at 6 different islands. 3 of the islands just opened up brand new Boyd dealerships, and the locals loved them. I hired a driver to take me around the island, and they were like, "Oh, China's just throwing money in here. They're investing. So I hear one side of the story. Listening to the major media outlets here and people in spaces, they are getting into every market. In what was it, 18? The U.S. was about 18% of China's exports. Today we're 7%. So you look at the Brazil and Mexican auto markets in 2018, they had a 1% share. That number today in both Mexico and Brazil is 18%. Do the math. Growing from 1% to 18% in a period of 8 years, less than 8 years. That's pretty, and it's their market share is actually greater than the U.S. now in both of those markets. So sometimes it pays to look at facts instead of just media headlines and just come to your own conclusion. What was I think China in the first 2 months of this year, their semi-exports were up 48%, I believe it was. That's pretty substantial. I don't think our exports, other than, if you pulled in video out, I don't think we're anywhere near 48%. So.
Thank you for that.
Other thoughts, thanks.
David, to second your point, I've heard for decades the phrase that the dollar is the cleanest shirt in the laundry. So with the war going on, Europe is in a real bad position right now. All of a sudden, we have to relieve sanctions on Russia to get oil, or they're going to run out of energy. So I think it is a safe haven right now with the turmoil that we have in the world. I don't think it's going to go on, forever. This war, and things will probably settle down. But the other thing that's happening with this higher oil prices, as we all know, oil prices filter through to the whole economy, and I don't see how this doesn't lead to greater inflation. And I think that just further ties the hands of the Fed. How can they cut interest rates to stimulate the economy if inflation is picking up? And I know it brings on the term stagflation, which we really haven't ever seen during my lifetime, I don't believe. But can you comment on that? Does anybody have any thoughts on the likelihood of a stagflationary situation, and describe to the listeners what that would entail?
Yeah, well, the perfect example would be the 70s, where a lot of companies had pricing powers because other companies couldn't make it. And if we get a lot of companies around the world to go under that compete on a global front, then you're going to put the strength. It's kind of like looking at the top seven, the mags, right? You're putting all the power into the Microsofts, Googles, and Metas of the world. And the same thing would happen within the structure of commodities, be it chemicals, be it energy. There's a lot less energy companies around today than there were in the 70s, right? So you're concentrating that into the ones that have the biggest ability to, navigate the market or influence it. And that's a market that was, most people would tell you it was a horrible market, right? You were being eaten alive by inflation. I think the 30-year bond got up to the point where it was, just about 18% yield. Think about that. Like, you think you're making money, but you're also being eaten alive by inflation. So my view is that, all currencies globally are weakening, because you can run a chart against every currency on the face of the planet against gold and silver. And you can certainly do it on oil now, right? But look at the chain of events that, have unraveled here in the last, year and a half, where, gold and silver and precious metals start to rally, and then it takes up, energy, takes up ancillary metals. Aluminum's at, 5-year highs here in the U.S., and equivalent, getting close to that level at which the Fed unleashed, 5 to 6 trillion during COVID. We're approaching those levels again, and one could argue, and say, is this economy strong? I said this 3-4 years ago. Look at the companies where a lot of consumers spent money, be it boating, be it campers. Go pull up a chart of Camping World, Winnebago, Malibu Boats, Marine Max. Like, big ticket items are not selling when it comes to, the spend through for the consumer wanting to finance something and marry it for 5 years in payments. It's not happening. You see it in the housing industry, right? And right now, everyone knows that there's concerns in the real estate market, so everyone's being focused and concentrated into equity markets to make money, because we know that the housing market is dead. So it's like you run out of places to invest, so you invest in the one place that can make money, and once everyone gets in there, I heard for years that, just buy the Mag 7, these are going to rule forever. The same thing was said about, Eastman, Kodak, and Xerox in 1973, right? And I'm not saying that companies are going away, because guess what? Xerox still trades, Kodak still trades, but it's technology changes fast. Every week it's a new update of which AI is gaining market share. You would think that, like, we're watching a wood tick race, right? And it's like no one knows which one's going to win a year from now, because there's going to be 5 more iterations of a new AI program. The one thing that—
Hey, David, question for you.
Go ahead.
Hey, and just so, like, here's the thing. When we look at, everyone's talking about, it's inflationary, obviously, in the short term, and it gives, puts the Fed in a box. But, like, if we do have sustained oil prices that are higher, and let's say they're north of 125 or even close to 150 for even the next, 4 to 6 to 8 weeks, and yields continue to press higher. On the flip side of that, when that comes off, it's going to do damage to the economy, and it's likely that yields probably end up lower later if that's the case, because it's going to stifle economic growth, and it probably causes the consumer to pull back as you have higher gas prices and sentiment, etc. So we could have a short term where rates continue to press higher and oil presses higher, but it's going to do some damage if this isn't resolved in a short order. Because if we get into the summer months, we call it next 2 months, and we still have oil north of 100, you're really going to start to bite into the consumer. And ultimately, that probably puts more pressure on housing, that puts more pressure on big ticket items, just like you're saying, on autos. And here, look at the auto sector, where you have subprime auto loan delinquencies that are 250 basis points in delinquency higher than they were in 2008. So is the consumer in a good spot? I kind of agree with you. I think that these big ticket items are going to be softer, and higher rates are only going to make that more difficult for the economy. So I think short term, rates could press higher, and they're going to probably go lockstep with the price of oil. But once oil does come off, I think rates probably fall more dramatically, and they start pricing in more cuts due to the economy probably having some more weakness due to the cost of the consumer. What do you think about that?
Well, I think the one way to get rates down is equity market multiple compression. Staples are expensive, utilities are expensive. I mean, even the safe areas are egregiously expensive relative to historic norms, right? That's the one way to get the market or get bond yields down, is scare the crap. Like every major market correction ended up people moving into bonds. Right,
like exactly.
I mean, there's never been a time that hasn't happened. And the question is can you slow down the economy? Do you slow the economy down by a recession? Now, I'm going to say I don't think the U.S. government can afford a recession, and now that burden of spending is only going to increase. Now, we're at a very intricate period, but I throughout my career, when we had 10 trillion in debt, everyone was, oh my God, this is unsustainable, right? And then you get up to 12, and then you get up to 15, then you get up to 18, and there's always a doomsdayer out there. We are compounding this thing. I don't know what the magic number is. I do not know. I will follow charts. I don't call recessions, but if you're looking at a lot of the consumer discretionary, it's certainly not saying the consumer is strong, right? Tesla is the biggest chunk of that. Walmart's trading at 46 times. This is, like I said, in the Jordan Noble space, we're kind of in that nifty 50 environment, along with the 70s and stagflation. But, and then we got a high yield problem. I don't know which one's going to win out, but those three things as headwinds don't say really great things to me.
Yeah, the other thing is, even if the oil situation in Iran calms down, the high yield situation and credit spreads widening, that's not going to change overnight. And if that continues to deteriorate and credit spreads continue to widen, even if the market does rally on some sort of Iran, de-escalation, I still think the economy, with where the jobs are and the jobs numbers that we saw last month, the revision down in December, and what do we see in the next few months going forward, that could create a trend that would not be good. And the private credit situation and credit spreads widening is not going away, even if Iran gets solved. So I think that's something that the market's still got to contend with.
Yeah, I would agree. I'm skewed bearish. I have plenty of shorts on. Let me just say that.
Real quick, guys. This is all being recorded. The YouTube is live. It's in the nest, guys. David says some tickers, so you guys won't have to miss it. Again, it's all being recorded. So we'll go. We have some raising hands here. We got Starpunk, then RR, then KP. Go ahead, Starpunk.
Question for you. Do you see a scenario where people don't rotate into bonds, and that's not the trade when equities get smashed?
I think it's going to take a while before this current market, in the way that it rotates, is going to while before people throw their hands in the air. And
sorry, David, what do you mean by a while? Sorry, if you could just elaborate.
Well, it's going to be through time. Most market bottoms, happen on apathy, right? In March 6th of 2009, we came out with a buy on the market. We had been bearish, through the GFC. March 6th of 09 came out with a buy. This is the bottom, right? All of your semi stocks were hitting 26-week relative strength highs versus the S&P 500. Okay. If you can be in the highest beta area of the market and outperform and be at 26-week highs relative to the market, in other words, you're still losing money, but you're losing a lot less. Does that make sense? If the market was down in that 26-week time period 15% and you were down 3%, why wouldn't you want to buy them? Does that make sense?
It does.
March 9th was the bottom. 3 days before we called the market bottom, we were wrong by 3 days. But that was the bottom, March 9th of 2006 on the S&P 500. So I think in this market where people get so jubilant and want to catch every bottom, this is going to take a while. Just like most bear markets. And again, I don't want to say this is the bear market. I'm finding plenty to be long. I'm finding plenty to be short, to be straightforward. But I think that, everyone pinning this market decline on the war is not really truthful. It's hiding the absence of, high yields could have the potential to blow out the private equity side, which has, is only going to strain it further with this war, right? Like a lot of these private equity are invested in companies that if you get a recession or this war slows down anything in terms of spending, be it software, be it HVAC, be it because the prices are escalating so fast that any something that in any of those business models which private equity invested in, if they slow down, I mean, this thing's going to get pinched more, right? And I think that's the cascading effect that leverage has. A lot of them are highly levered, and you're seeing, the BDCs, I think they're down like an average of 53% in the last 26 weeks. In a bull market that's 4% from its high, right? So, you have to keep it in context, because everything to me is relative. That's the way my mind works.
Well, the other thing you can use to get rates down, for those who are wondering, is take the price of oil down. Take the idea that inflation is coming away from, the inflation side of real yields, and yields will come down. But if you keep oil higher, you can't have a lower 10-year because your inflation expectations have exploded and real yields have collapsed, right? Like in the sense that the yield from 2 weeks ago at 4%, is not the same real yield anymore when the 10-year's at 4, because oil has moved up to 100, right? So if the long end of the oil curve starts rising precipitously, they're telling you that inflation is going to become embedded, and then yields have to go higher, right?
Yeah, well, and the other thing to keep in mind, energy is like 3.5% of the market. Average over the last, 60 years is 8%.
Okay.
The high in 1980 was 30%. I'm just saying it takes very little capital to be allocated to energy or materials to move those things 25%. I made the call on Russell 2000, 3 times since the 22 low, that it would take very little amount of capital. If you look at the size of the Russell 1000, it's 95% of the total market cap. The Russell 2000 is 5%. If you had 1% leak into a market that's 5%, you get a 20% move. You had a number of them off the lows that the Russell, again, it wasn't the call at that time wasn't that the Russell would go on to outperform at those periods. In terms of duration, in other words, they could have a 20% move and then fizzle, right? And that was our call 3 times, and we hit every single bottom. So the same analogy holds true to, those that thought the Mag 7 would be, the only thing you ever need to own, right? And now we're finding out that we're in that Nifty 50 environment. There's other markets globally that had a higher concentration of stocks with the biggest market cap that were far greater than. So if you took the top 10 stocks, some of them were 50-60%, right? Not 30 and 40% like our market. Those have mostly fizzled out in other markets. Korea, you have Samsung, you have HK, Hynix, and those ones are still. But I went short Korea, the right day, and but I'm just saying every market globally got extremely concentrated, like a Nifty 50 environment, and that most of those markets are unraveling as we speak from that concentration, and it's going underneath. I pointed out like ASHR in China is hitting a 52-week relative strength high against the S&P 500, but you don't see it in the FXI. Why? Because the FXI is that actually 50 stocks in China that everyone wanted to own. The Shenzhen is at new relative strength highs versus the S&P, but you won't see it in, looking at FXI or the CWeb, right? So you are getting a leaking, as I called it my call with George Noble, I call it the Olestra effect, right? Remember the Frito-Lay potato chips? Just you ate them and you had leakage, right? So just so anyone's clear about what that was about, but that's what you're having in a lot of markets globally.
Just real quick, guys. So markets, yes, is open right now. We are literally just, actually we're down 0.03%. 0.03%, and oil is up 1.69%. Go ahead, KP.
I was going to just add to what a few people have been saying, right? So materials and energy actually are growing, Dave, when it comes down to their percentage of the S&P. Tech has come down, right, from its peak of 35 down to, I believe, around 32 and change. So communication services, I think we talked about this more than like 2 years ago, right? Just those two, when it comes to communication services and tech, make up, over 46% of the market. So, when people say there's dispersion or there's broadening out, I've been looking at the spreads between value relative to growth, right, on small, mid, and large cap. Right, and that's pretty telling there, along with other factors. So, really doing those scans and seeing where you're seeing that relative strength, as you've talked about for so long. That's pretty integral. Our old infrastructure, grid, water, it's played out. It took it some time to get going, but it played out as somewhat themes or thematic. International is still outperforming. I don't know if you've taken a look at some of those, but they've come down, right? Some of those emerging markets have definitely come down. But Japan, you were talking about earlier, as one of the better developed markets outside of Canada. Canada still has some good strength in it as well. So, well, let's see what happens these next 3 months with the risk building.
I would be careful on Japan. Because they get so much Middle East oil. I want to stay away from the countries that are dependent on the Middle East right now. I want to see washouts. I want to see, like I said, I'm working up Japan's chemical stocks, and they look like SanDisk. Yeah. Literally look like SanDisk. I'm not a buyer of them at these levels, and I was bullish, months ago on them. And they've had enormous moves. So I'm staying out of those areas. I want to find a bottom in Brazil if my thoughts on the commodity structure is right. Nationalism here leads to nationalism everywhere. You're seeing China now put tariffs on Canada and Japan. You're seeing them put tariffs on tires from those countries. You're seeing Brazil putting a 15% export tax on oil-related products, oil and oil-related products. So again, we're taking something that has been intact for 50 years. U.S. is moving to nationalism, and other countries are going to do what is best for them. And so they're going to charge a premium for any product that the world needs that comes from them. Yep. You're seeing Oman, out of Oman, the oil price is what, $134 a barrel? Yeah, Oman, they're different grades. Yeah. You got Arab Light Sweet too, so there's Kuwait's prices are interesting. So so when it comes down to those four major markets, I think I heard you talking in Georgia space. I don't get to hear all of it because I'm trying to get my parents home from India because they flew via Doha. So playing some musical chairs, they're flying them back through Japan. But Japanese banks, they've shown weakness, right, as well. But those four major markets, right, Japan, South Korea, India, and China. China is the most reliant, but they're also, when it comes down to their stockpiles, as well as how much they have waiting to offload, they have a significant amount. Japan's heavy when it comes to their LNG requirements. They built out their LNG infrastructure for over 8 years. South Korea, same thing there. India, I would say, is, and I'm not just saying this because of my origin, they are actually a little bit more resilient at the present moment with their current stockpiles, but where they're having problems is LPG, not as much in LNG and oil, right? But LPG. So those are the two tankers that did get through Iran's agreement with them. So
they're trying to navigate it. The size of their population and the heavy usage of that in cooking and day-to-day activities, that's what's putting stress on them right now. So yeah.
KP, thank you for that. Real quick, common investing. I see you if you have something to add here.
No, I just wanted to come up and just kind of piggyback off what David was saying. Agree with David most of the time, normally 95% of the time. I just wanted to say, like, I've been long emerging markets for like the last, I'd say, over a year and a half, and I've done pretty well there, but I've really trimmed my position on those because I think we are going to see a strong dollar with everything going on. I know that's probably, one of the debates out there, and I'm sure there's still a few dollar bears that are here, but
they're almost dead, Common. They're almost dead.
They're getting there, but on the flip side, though, I actually think that gold will still do really well. I think gold could come back here and even hit 6,000 by September is kind of what I have, and I think oil will keep going up. So that's kind of my position right now. Is I've trimmed back on a lot of the emerging markets. I see a strong dollar, and I think even with a strong dollar, I think because of everything that's going on, we'll see a lot of structural issues with the supply chain. And I do think that there has actually been a structural shortage of gold and silver, and I still think that is there, and I'm not like some Peter Schiff, dollar to zero gold bug type of guy. So that's kind of where I'm at.
Go ahead, R.
Remember, before I speak, I'm very, very about charts and TA. I know a lot of people love macro and fundamentalists out there. At the end of the day, they don't know, their mother doesn't know, their father doesn't know, and the president doesn't goddamn know. Anyone who's looking at a dollar chart on a monthly, it's very hard to think that was kind of bearish. That looked like it was going to squeeze. And on a monthly chart on a dollar, on the Dixie, it's hard to find the dollar move 7% in a month. So halfway through the month, when you're up, let's say 3%, that is a monster move with 2 weeks to go. Okay? It moves slow, but when it gets going, it starts crippling other things. All right? And gold, I'm on local time frame. I do not want to give a time frame like a month, but I've seen a change of behavior on gold. Not even on a volatility aspect like all these block traders will start talking about, but just off of price action. That was a huge change of behavior, and you're starting to see gold, come down. I understand oil is very high, but things are always the weakest right when they're done being the strongest. And I think if you're not in energy or did not catch that squeeze, right, when we were at $60, it's best to sit a little bit, protect your capital, right, because it gave everyone an entry already, right, when it retested, when they decided to release, right, from the STR. Just be very careful, right, because things change. Price action changes. It is not the same. Things come up to retest and they get smoked out of the sky. Emerging markets, Common, way to take your money. There's people now entering Common into emerging markets, all right, and they are getting killed. You got to understand, when you make money in the market, please, guys, do not give it back. Do not give it back. It is the worst thing to do. But again, dollar up. Oil definitely helped the dollar, but the dollar was moving up before it even started moving, right? You had a monthly inside bar followed by a pop. You're still not done. It looks like it wants to go a lot higher. Anyone who looks at the Dixie chart and tells me it did not want to, I don't need fundamentals and I didn't need the news to tell me it wanted to go higher. That is a catalyst that just pushes price action faster into where it wants to go. All right. In all things, you can always go back and look. I'm sure Nikovsky was looking at agriculture and he said, this is looking kind of funny, right? While everyone's staring at oil, he made way more money in the other thing. Right? It's like the gold rush in San Francisco. Instead of going there with my boots on, right, looking for gold, someone sold me my shovel and someone sold me my boots. So it's really nice to get into the markets, and you always fish better in ponds where no one else is fishing, right? You could be wrong and still make money, because this game really isn't about being right or wrong. It's about how much money you made while you were right, or while even when you were wrong, right? And I'm not a genius. I tell people before they speak to me, I'm half retarded on fundamentals, but when it comes to TA, I can definitely bang with the best of them.
Amen to that. Amen to that, bro. I'm more of a chartist myself. David, I do have a question, though, pivoting a little bit from the macros. Do you use Fibonacci's on your charts? That's all I want to know.
I do not. I don't tend to come out. You know, earlier in my career, I determined that coming up with price targets, and I measure a lot of price targets, but the one thing that everyone will remember your price target was wrong. You know, if I said this stock is $20 and it's going to 40, and that's where my measurements come up to, you know, and it gets to 37, and there, you know, you get a call back from, and that's one reason I just stay away from mostly retail and work with institutions is, you know, if you get close, you know, to me, going up $17 is pretty damn good on a $20 stock. So, you know, I have my own internal price targets, but I don't lay them out in terms of, you know, to clients or speak about them on spaces or anything like that, because they'll remember that you were wrong, but you were right on the call. It just didn't hit the target you were expecting. So I do put, you know, I do have internal systems but I don't tend to just stick to Fibonacci. I look at, you know, size of bases, ascending triangles, and project them up and that type of thing, more for, you know, pattern measurement. So, and it's not to say that Fibonacci doesn't work, right? I have a lot of belief in Fibonacci's. I just don't use them. There's so many different facets of technical analysis. My bread and butter is relative strength. Why? Because you can actually back test it. You cannot back test an Elliott wave.
Bingo.
Impossible, right?
Yep.
So there are rules too, right? When it comes to those Elliott waves and the retracement levels that they're supposed to follow for the wave cycle analysis.
I love it. I use the RSI. I mean, if I can use, when I first started off, I started using like 7 oscillators, but then it really comes down to 1. I mean, the RSI really just gives you everything. You got the moving averages, you got the divergence, you got 8 different types of divergences. I mean, you can literally see everything on the RSI. I see Blonde has her hand up. Go ahead, Blonde.
Yeah, I have a quick question for David. Much earlier on, you mentioned about the lack of quality companies IPOing, and you touched a little bit on private equity. What are your thoughts on the current state of continuation vehicles being created by private equity to offload some of their aging companies into a new fund with some new cash to accelerate that runway?
Yeah, I'm not a fan of it. I'm not, especially rolling it out to retail, which, you know, you don't never know when they need access to capital. And retail doesn't have a good understanding what it is. I'm not a fan of retail partaking in private equity deals to offload them. That's just me, right? Wall Street just does a great job of packaging and selling you dreams that often don't happen. Doesn't mean to say they haven't done some that did make dreams come true, right? The problem is I've done, you know, private equity investments in the past, and, you know, 9 out of 10 are failures. Yep, you can hit a home run on one, but you know what? I found that if I can redirect and deploy my capital into the equity markets, and I can leave when I want, and you know, not marry a stock and think it's the best thing since sliced bread, I would rather have that. I want liquidity, and I want liquidity when I want it. Because Wall Street doesn't price these things, you know, thinking a recession is going to happen this year. And I'm not saying a recession will happen, but I can get a lot of good companies at very reasonable prices in a recession and have liquidity. So I don't like what private equity does, but it's, you know, for a certain clientele. So, you know, they're going to do what they're going to do. It doesn't, you know, I'm not dismissing that private equity doesn't have some good within them. It's just that right now, I think private equity is trying to get out of it, and that's why they're trying to create retail product, right? Yeah. If it was so good, you wouldn't sell it to someone.
Precisely. Yeah. Yep.
Looking for bag holders.
So, Sammy, when it comes to J. Wells Wilder, I believe he had a nice background outside of technical analysis. Check out some of his other indicators.
Okay. I got it
I will
recorded,
tell
so I'll
you,
take a look
Sammy,
at
when
that.
you
Yeah.
use indicators in general, right? Never treat one like it's gospel, right? Learn which ones work with, others. So you have trend momentum indicators, you have the oscillators that somebody else was mentioning as well.
Fine confluence.
I'm sorry, brother.
I said fine confluence. That's what you're looking for.
Yeah, but you want to use at least two of them, and your MAs are going to be so important when it comes down to your 250. If we do have further correction to go, or on an individual sector, industry group, or index basis, right? So you want to always stick with what works, right? And patience.
Absolutely. There is a Dixie chart on the NAS. If we have anybody else that wants to come up and ask questions, please come up and please follow the panel here. Everyone has their own niche. I mean, Blonde, she has a Substack. Please follow that. I'm more of a chart maxi, strictly charts, and now we have a new addition to the team, Joanne. Yeah, I see you know your stuff, bro. Pleasure to have you. And RR, love all the weird tickers he brings out, but it's always the banger. It's always the ones no one's looking, and KP always with the knowledge. Star's definitely on my Discord. He's so good. He just knows his stuff when it comes to what's happening in terms of like the bid ask spread, in terms of like is everything gonna go down or is it gonna go up? Are we gonna see a recession? This guy knows what he's talking about. I see a lot of people coming up. Listen, Cartech, I'm not gonna invite you up. I don't know who you are. You might be doing some porn dumping. I don't know. You need some credibility there. I do see Andrew. Please come up on stage here. Sorry, Cartech. Go ahead, Andrew. Go ahead, Andrew.
Oh, hey, what's up, Sammy? Hey, what's up, guys? Good space. I just had a question. I don't know if you guys talked about it. So the market sold off a little bit. We're like 40 bips from the 200-day moving averages overall. I mean, everybody's coming in this week pretty negative. I think it's likely we probably can see a bounce 66 or 65, 75. Thoughts on that?
Well, my opinion is as long as we continue with this war, I mean, look at ES on the futures. Just strictly on futures alone, we have a rolling death cross. Almost there. I mean, it's a couple weeks out, but that 50, it keeps pointing south, and I'm not liking the sentiment. I mean, as long as this war continues onward, I mean, we're literally in a Wyckoff distribution schematic phase on top of that, which I posted in my thread. The point is, long story short, if we continue onward with this trajectory, that 50 converging with the 200, there's a lot of pain to look forward to. And if we're not ready, people are going to be hurting. So this whole bearish sentiment, which, it wasn't technically bearish or doom and gloom, but it's sort of like, hey, you just got to prepare yourself for what's coming, right? I mean, David's bringing a lot of alpha. We have Star bringing up a lot of alpha. So there's a lot of confluence when people are speaking up here. Listen wisely, because they definitely have skin in the game. They've been here for years and years on end. I've been doing this for technically 3.5 years, but these guys have been doing it for 15, 20 years. So I see the charts. It's screaming bearish.
Yeah, I don't disagree with that. That's fair. But I was listening to Space the other day with Deere and somebody, and he kept saying that the U.S. economy is weak here, and I don't know if we're there yet. We're weakening and we're slowing down for GDP. But there's still a lot of people that like the memory space in South Korea. There's pockets of strength, but yet a lot of I did see last week construction and the paper stocks. There was a lot that was corresponding with that GDP print, the slower one.
Star.
Yeah. For me, it's 39 years, by the way.
39 years. Thank you so much for that.
What I'm going to do is I'm going to go like double leverage, 0 DTEs, out of the money, BMNR call options, because I think business is back, baby.
Well, I feel like, tech is a great opportunity to short, especially. Just saying, it's not looking good.
I'm fucking with you, man. I ain't got no interest in that. But I do believe that the overall market, like, we're going to have ups and downs, bips and bops, and all the fun stuff. But I think industrials, manufacturing, engineering, like the American defense production is going to be a solid place to live. I don't see anything that's shaking myself out of my thesis and out of my investments of any time soon.
I'm gonna take a hard look at OCC, ticker OCC, just one more time. Maybe I might have to go a little deeper on the pockets there.
Yeah, I'm still irresponsibly long Ondas even in this environment. I'll tell you that much. We're going to have some pretty good earnings news, I believe.
I hope Ondas does its thing, man. I really do. Any more questions? I've been live streaming for almost close to 3 hours now.
Hey Jay, sorry, Sammy, I got one for you.
Go ahead.
This comes from a fellow Canadian friend of mine. All right, so this wasn't my specific ticker, but when someone sends me something and we both like what we're looking at, 4 eyes is better than 2. David Nikoski, can you look at TOU?
GOU. Let's see.
No, T
like
T. Tommy.
TOU.
Tommy Opera University.
Is that tourmaline?
Yeah.
Canadian Energy Oil.
Yeah, TOUTTO on the Toronto Exchange.
No, I like it. You're the second person to ask me today, by the way.
Oh wow, yeah, I heard about it. I think it was late last week. At the end of Friday's close, just to see where the weekly closed, right? Because you don't want to sit in something too long. I want to get in right before phase 2 starts, or I want to get in when phase 2 retests. But continue, please.
Yeah. No, I like it. Apparently, you gave that name to the person I'm talking to, so. I was asked about it earlier today, but yeah, I like the Canadian oils. The best time to buy the Canadian oil is when they got Maduro, by the way, because Venezuelan oil is shit. And the Canadian oil we can process, right?
I find it funny, David, that they put all the fundamentals, sorry to cut you off, and they said, oh, U.S. doesn't like Canada and all this stuff, and then I was looking up all the charts when it was mentioned to me, and I'm just like, what the hell is really going on here?
It broke out of resistance 64.18 roughly. It's inside an ascending wedge, so that's a good sign. Plus you got that weekly. Oh my God, you broke above the weekly 50 and above the 200. That's actually
sorry to cut you off, but when you stopped, you were saying Venezuelan oil is terrible. Keep going.
No, I mean, as soon as they got Maduro, all the Canadian stocks corrected significantly on that, thinking we were going to get Venezuelan oil. And in reality, it's going to take 6 months, if not 2 years, to get anything out of Venezuela that's worth anything, right? And their oil has a lot of metals in it. Go look at, the quality of their oil. It's got heavy metals in it, and it's slower than molasses, right?
Our refineries aren't big.
Would that be considered sludge oil?
I don't even know if it's that good.
Yeah, I was gonna say.
That's a question for Razor. I mean, that's Razor's specialty, right?
Gotcha.
I mean, he's the one that developed and has patents on, pulling out heavy oil from the ground.
They were exporting over to. They'll be exporting to South Korea. Okay. As well as they have an agreement that they're working out with China and then India as well, right? And that's on uranium as well when it comes to Canada. So their Western terminals, they've been trying to build that out. I was trying to tell this to Razor the other night, but it's exhausted working as much as I've been working, and then, well, whatever happened. So I did try to mention some of the midstream as well when it comes to Canada. So they're still expanding. Kinder Morgan's one of the companies up there as well, KMI, so they're still expanding.
Where's this gentleman here? He just came up on stage. Empty, go ahead.
I did want to, real quick, I did want to get David's input on Almonte and see if it's like a little bit, if it's overbought right now or if it still might be a good opportunity going forward. The IR firm for them also does Copin and Lightpath, and I've been given a chance to interview the CEO on that one, but I just, not exactly my bag. I do like tungsten. I do like the miners, but I'm not in that sector very heavily right now. But I do think it'd be worth having a conversation considering like tungsten's applications in PCB manufacturing, drilling vias. You got the oil, pipe tips. You got every machine tool cutter known to man is tungsten carbide. And if there's still room to run in that one, or if we're
I am out of Almonte. I bought that just right around $6 and sold it last week. I still like the chart, but I want to raise cash and put some shorts on, and that's what I did last week.
Bingo.
So I don't hate the chart. I think tungsten is going to be a big issue, and you're seeing that is the hottest metal, by the way, in the last since the beginning of 25. That is the number one metal for the biggest price move. So anyone that's not aware of that, it's used in drill bits, cutting tools. If you're going to run a shipyard and build a ship, you're going to use a lot of carbide, right? Every drill bit, every saw, every land driller, every offshore driller, that is one of the hardest materials on the face of the planet next to a diamond. But you're seeing that China is curbing that, and I think I think they have well over 90% of the market on that, and they're limiting how much they export of it. So
Thank you for that, David. I do want to put this one on your radar. Ticker OCC. I see you're a chart guy. In terms of what you see, you like pattern trading. I see that rounding bottom on the monthly. Once you take a look at that, I'm sure you'll be interested. But anyway, it works in the industries: oil and gas, mining, industrial, broadcast, military and commercial enterprises, fiber optic cable company. So anyway, I'm just putting this one on your radar. Again, from a pattern TA perspective, I really like that monthly rounding bottom. So
I like that. That's got a good chart.
Yeah, thank you. We do have some hand raises here. Andrew.
Oh yeah, just had a question. We mentioned Ondas before. Just want to know what you guys think. They had this Palantir news last week. It didn't move on the day, which was surprising. AVAV, they had a rough quarter, and the market's saying, show me the contracts now, because they lost some of the backlog, and that stock's been cut in half from the highs. I think drones are in a tough spot here. I'll be careful, but
AVAV though, it wasn't a show me the contract. They took their contract back. They got it reversed on them, so it was a little bit of a different story there. But the Ondas isn't moving on news as much as it used to. You know what I mean? But I think the Mistral acquisition was much more significant news than the Palantir worldview kind of partnership for the ISR satellites. What I'm watching for is in the earnings, they're going to be talking a lot more about the M&A activity and the forward guidance compared to other earnings reports, because they've already released their Q4 and their 2025 results they pre-reported. So that gives them a lot of bandwidth to focus on M&A. So that's what I'm watching for on that one, is the forward guidance and the M&A activity. And the contract, they did just get a good contract for demining in Israel. You got to watch the internationals on that one. But I'm still waiting for the Department of Homeland Security to open up, and for those, that's going to be the major prize that they're operating for, as well as Gauntlet 2 this summer.
One thing I would add, right, I own both of those names, and the one thing I would add as sort of a macro comment, if you're in names and you get good news and you don't understand why your stock didn't pop or why it didn't stay popped and it sold back off, you just keep seeing that in your different names or in different names that are getting good news and they're just getting hammered, that's liquidity tightening. That's what that looks like. And that means there's a problem somewhere in the plumbing that's not in the news. And that means you need to be a better seller of your stocks of whenever they're popping, because the world is a better seller because liquidity's tightening.
Amen to that. I do want to know real quick, the ticker OCC chart is in the nest. That's the chart. Anyway, RR, you mentioned McDonald's the other day.
Mm-hmm.
I thought we were not going to buy shitty foods. What is happening?
I just see price action coming into a level that we closed at that looked beautiful. You finally broke to all-time highs after consolidating at the highs. People would consider that a stage 3, right? So you're getting swung back and forth, whipsawed, especially for late investors that are just trying to, catch something that's been moving. And sometimes those stocks continue higher, and it does fall into, that retail, but also consumer staples as well. And I'm finding a fine line between them where they're catching flows. I know people always say, where's money going? Well, open up your sectors, open up your ETFs, go on a monthly or quarterly chart, click them all open, all sectors, it'll let you know where the money's going. It's not hard. Then take that sector, right? Take that ETF, break it down. I don't care if you use Google, ChatGPT, Claude, or any of the other names, and start going through those charts. Yeah, it's going to take a little bit of research, but the more charts your eye see, the easier it is to analyze. And if it's not a really sexy chart, throw it out. I think David probably goes through, he says 1,000 charts a day. I can't handle 1,000 charts a day. I'm still a newbie. I can do about 50 to 75 charts in the morning within like 30 minutes. I'll take the best 5 to 10 out of them, and then I'll attack them. But yeah, I see it gaining some love. I even saw Walmart stopped at a great level. I know people are saying these names are overpriced, and they might be overpriced. But if price action wants to continue, what the hell do I care? I really don't care. If it's getting love, it's getting love, and I'm going to stay in there until it tells me otherwise. I think people read the headlines too much and are diving into like all the military stocks and all of that, and that's great. And you do great fundamentals, Crispy, and you really, you do your interviews and stuff. I just see on this, whether they get good news or not, people are selling into the pops, and they're selling extremely hard, and you're seeing all that wick come in, right? Everything is getting wicked out, and people are saying, what's going on? Just always be careful. If you've been in something that's changed, part of your life and your investment portfolio, you start taking some off. And I always tell people this all the time. When I get involved in something that's starting to move, say I only have $1,000 to buy the stock. I like to do 100, test the water on my entry. As it starts showing me that it is a nice move, I will start adding to it. No different than if I'm on a poker table and my hand is only developing better as flop, pre-flop, flop, turn, and river come, right? I don't want to be overcommitted with too many things happening. And then as it comes into the final blowout tops that we like to see, I will start removing the same way I added at $100 or $200 at a time. And I think that's the real experience of buying stocks or buying commodities or buying anything. The worst thing you want to do is just jump into something when the euphoria has hit and you end up getting stuck, because nobody knows where the hole is on stage 4 of a chart. Because when the chart starts turning against you, a stock can fall on its own weight. All right, it does not need anything. It'll just fall very fast. And to stick around through the downtimes, you do not know how long your capital can be stuck there. And the worst thing, like I said before, as a trader or investor, is to round trip something that really changes your portfolio.
The major thing about Ondas here is like there's tourist actions and then there's investor actions. But I've been in it since a buck. I'm fine. I know what I hold. I've been following this company for more than a year. Debt to equity ratio is under 1%. Like their cash position is $500 million. The primary movements in the chart action, like these people who come in and be like, why isn't it moving on this good news? They don't really understand how ineffectual that Palantir news is compared to the other M&A activity that they've had. And it's moving just fine for me. I'm very secure in my position there. So one of the major aspects of this is this company is up 900% for me. And I can sit and I can draw it down to 500% and be just fine. But if somebody just bought this at $10, they're gonna be looking at this stock a lot differently than I am at a buck.
I love that. Code, real quick, you got your hand up?
Yes, I just wanted to thank RR for the advice on how to get out, or the mentality of getting out when you're up. I am up on the metals and the miners, and I'm just so reluctant to, phase out of them just because I've done so well with them. But I do appreciate all the information. I was curious, and this might be very dated or elementary question, but does anybody have any feedback on the news with the work that NVIDIA is doing with Palantir on the AI project? And thank you.
I think they've been I wouldn't know too much, but just looking at the charts in NVIDIA, I would just be, I would not lean very bullish until this overall market gives you that sign, because we are right below the 50 DLE SMA. And, if you roll down under that 200, look at the charts. We roll down 30%. So, there might be a correction coming. I don't know. I'm not a Houdini, not financial advice, but I would just tread lightly, especially during these times. And I will say this, I keep a very simple rule when it comes to trading or holding. 3% a day keeps the 9-5 away. I'm very humble with my trades. I'm in and out. I'm not greedy. I am in and out. 3% is all I need. I don't care if it runs 10%. I really don't give a shit. Just get your money, get out, and look away, especially in this market, because this is technically Trump's market. Think about it. He sends one fucking tweet. Everything goes up and down. One tweet goes up. He's not going to let his market die. So when we have this war summit, he can go right tomorrow morning, say, hey, we're done. Market's going to react to that. Then the next day, probably roll over or might probably move up. We just got to be careful. Have stop losses. Don't go in too crazy, guys. And I yield the floor. Empty, go ahead. I know you had your hand up for quite some time.
No, I just wanted to respond to Parabolic from a fundamental standpoint. If you've seen, I don't know if you read Dr. Burry, but he makes a good case against Palantir. It's very long-winded, but the long and short of it is they're basically feigning profit from share dilution. And then you can go and check out Kalkashi's Substack. He's got some really great work about NVIDIA, and I mean, now the round-tripping accusations are going mainstream. I've known about it for a while. I mean, this is like a couple years coming and going, but examine. Do you really think that Microsoft is going to be buying all this stuff when they're not doing so hot? What happens when CapEx get cut? Like, from a fundamental standpoint, nah, not bullish. Just saying. And also for the oil thing, I put up a little graphic down below about just who likes it light and sweet and who likes it dirty. So a little visualization helps you see, what's going on. I mean, to me, it's helpful. I don't know everything, so I think it's a good factor to when you're examining it.
Can I ask who was speaking? Anthony, which account, please? Who was speaking?
His name is, I'll tell you right now, his name is Empty. It's Empty.
It's empty. Got it. Thank you.
Yeah.
And to Palantir itself, I sold my Palantir position on. That's really what brought me into the market, was to invest in Palantir with the legislation, with the executive branch changes. Like made a good amount of money on there. I saw them as a bit toppy. I pulled out of that position entirely because I did not see another 2x coming for Palantir. But as far as Palantir's position in the market and their penetration within commercial, government, and international, I think they're going to do just fine. But I don't think you're going to see another 2x on Palantir.
I'm in spaces, brother.
Next, but I think they're
We'll talk later.
Burry, he's been wrong more than he's been right, but I do appreciate his perspective, and the things he wrote about Venezuela were top shelf analysis. I just don't always put a lot of stock into what he says, but I don't position against it or for it.
Well, I wouldn't fade Palantir, I'll tell you that much, especially during these times. We were literally at a death cross, and price action kind of technically moves right before the cross or the convergence of a death cross. But look at that movement to the upside. I mean, right now we're forming a descending wedge. At the end of the day, Palantir will fit suit during these times, especially war. I mean, I wouldn't argue against this.
The thing you got to look at is not necessarily Palantir itself, but look at the network and the relationships that Palantir is building in the supply chain, in the governments, in the military. You're not going to get super crazy growth for Palantir, but you're going to get a lot of crazy growth for the companies that Palantir enables. I work as a data analyst. I'm quite familiar with the technology that they offer, and that has been the secret sauce behind Ondas for this entire year. They've been running on Palantir in the back end. Everybody looks at Palantir for the ISR, for this worldview thing. Okay, that's interesting. But what Palantir really did for Ondas was pretty much unify their back end and allow them to copy paste essentially the entire financial and business infrastructure for all these roll-ups. They give the companies a back end, a supply chain, HR, finances, all that stuff. They connect their data right in, and when you're coming to implementing new companies or integrating new companies, a lot of that work happens on the data side, and that's what Palantir did for them.
That's awesome. Yeah, Palantir looks really great, especially, I mean, wow. They smacked the 50 on the daily. They had a nice little rise, and, it's obviously got to pull back a little bit, but I wouldn't be surprised if we come back around maybe 147, not financial advice, but all I'm saying is this thing is looking nice. But anyway, one last... anybody have additional questions? I mean, I've been streaming for literally 3 hours or something like that. Please hit the follow button. Follow the analyst here. Follow the panel, please. I am streaming. Everything's being recorded. If you miss anything in this segment, it's all in the nest. There was some great alpha from David, obviously. Blonde has some great segment on water. And Starpunk absolutely shining today. I love what he has to say in terms of, what's happening in terms of the back end or the plumbing in our economy. So give him a follow as well, and everybody else here. Any other additional question, guys? Go ahead, Joanne. Oh, yeah, I forgot. Joe is a gem. You just came out of nowhere, Joe. I gave you a follow, brother. Go ahead. You have your hand raised.
Yeah, I was just going through the comments, and I wanted to respond to somebody. I don't know if they grabbed the mic and they got to ask it earlier, but I don't think we really addressed it. I've learned a lot, about the looking at the value of the dollar, right, and the effects that has on the metals. And one thing that I wanted to discuss is that silver, it's not necessarily looked at entirely as as a currency, right? It doesn't have the same monetary value that gold does. And I think the big thesis there kind of is a differentiator, is that the demand has just been, through the roof, right, on silver. And we've been seeing COMEX being depleted. I think it's to the tune of about 400 million ounces a year is the shortfall that we have between what's coming out of the mines and what's being used by, all of the industrial uses of it. You have Samsung coming out with the solid state battery, and the EV solar panels. Everything is increasing, and they need more demand. So I think that we could see a divergence here between the price of gold and silver. But any last thoughts on there? And hopefully that answered the question of the person in the comments.
Yeah, if you look at a solar panel, most of the silicon, polysilicon, monosilicon solar panels, that little grid that you see, that's solar. That's silver. That's primarily what they're doing, the interconnects on those. So there's a lot more industrial demand for silver than there is for gold, even though there is a lot of industrial applications for gold, but the commodity prices out using those in industrial capacity. But as silver runs higher, they're going to be looking at other alternatives for utilizing silver in industrial capacity where they can get away with it. Defense, like space, will always utilize material inputs regardless of a lot of cost pressure. But I think people are looking for alternatives to silver in a lot of applications where it made sense with silver in the 30s or 40s, but it's not going to make sense for silver in the 80s or 100s, So I think there's a lot of pivoting technologically, is being less reliant on that particular commodity for the inputs necessary, and transitioning to copper or other kind of alternatives where you might have, where the supply constraint and the price constraint might not make it feasible for your long running operations.
We have a new member on the stage. Go ahead, Abhay, if you have something to say. Abhay. 3, 2, 1, removed. Go ahead, RR. I really don't have patience for people that just come up here and do nothing. Go ahead.
I just want people to not lose track of time, all right, when they're investing or when they're trading. A lot of times within a monthly candle and price action, 1 to 2 weeks literally means nothing within the month, all right? You can have accumulation and consolidation, and you can get tricked into thinking that's what's going to happen. Third week, you will have a lot of manipulation, and then finally you'll have distribution, and it takes time. And I think a lot of people, when stocks tend to counter trend, they get lost in it thinking that was the bottom, especially when you look at IGV, and then you come back to Palantir. I understand it had a big pop recently, but it had to have a big pop for it to continue to where it inevitably will go. So be wary of the levels, all right? You broke significant levels, all right? You had a huge head and shoulders on a weekly. This is not financial advice, but I don't want to see people buying things and then getting smoked, okay? Because the name sounds sexy, or the fundamentals, or whatever garbage they're putting out. I've seen the best analysts in the world uptick a stock, all right? And that stock go almost to goddamn zero, all right? And I'm not saying something like this is going to zero, but there is a lot of room down all the way to $89 on this thing, all right? And it held for about a month, and it popped. Now you're coming into a very indecision moment in it, depending what's going on geopolitically, all of that combined, all your commodities, everything. Just be wary, know what you're buying, know what you're holding, and please open up a chart, all right? I'm not going to tell you where something is going, all right? Like David said, you can be right 99.9% on a price target. The 0.01 that you get wrong, someone's going to call you a fool.
Bingo.
Yeah, and I'm not in Palantir. I'm not interested in buying Palantir at these levels. Like, I could see a light path going to 20 way before Palantir goes to 300. So even if they are successful or they are going to draw down, it's like it's not. I care about the technology they enable rather than the price of the stock. But yeah, that's all good perspective there. And like everybody in these markets are like chasing the next big thing. They're holding on to stocks for days or weeks. They see a little bit of a meltdown or a little bit of a melt up. They take it off the table. I try to be in a 1 year time horizon. Like at least if I'm not going to be willing to stay in a stock for 1 year, I'm probably not considering it. But I will swing. I will like take some hits at some like minor plays, but those are not the ones that I really have conviction in or build conviction in.
I will say this. Hold up, real quick update. There is a Marabuza opening on oil right now. No wick on that opening. Holy shit! Pay close attention to that candle right now on the daily, guys. That is an interesting candle.
We have the Fed meeting. We got OPEX. We got more Iran frothiness. Like this is going to be another crazy week, but OPEX is going to be a pretty significant headwind or tailwind, depending on how you want to read the tea leaves. But she's going to get frothy this week, so hopefully it's not as choppy. But we're going to see how it plays out.
Yeah, no, it's well, technically the daily candle right now is like bearish on neckline. That's a candle setup, but obviously we still have 22 hours to close this candle. But that opening to the bear side, at least no wick on that tail end. Oh my God, that's a sign. Potential reversal, slight reversal. Who the fuck knows? But I like that. I like that little candle on that daily.
Overnight futures are so thin to kind of like put any regard into it.
Yeah.
I find an hour before open is when the data really kind of starts to sink in, but you really don't know anything until an hour after open when like the dust settles and you really see the movement. I like to wait 12 hours and then confirm where the price action may or may not lead to. But I really like seeing. It's hard to see Marabuzas because they're so rare, too far in between. But I love when price action opens up. Very, very strong conviction, either up or down. That candle is a psychological candle. And when I see stuff like that, I pay close attention to that. What's going on, Butters? Go ahead, Butters. You don't even have to raise your hand, bro. Can anybody hear me?
Yeah, we hear you.
Butters?
He might have fallen back out. Like, I do know you give people like 10, 15 seconds to like stay their piece before you boot them out, but a lot of times the app doesn't even refresh their audio for like 30 seconds,
I agree with you, Chris. Yeah, 100%. You also, when you select someone to speak, sometimes this app, when it gets, popping in a room, it'll naturally just boot them out.
That is annoying. Go ahead, Butters.
I had that happen on many occasions where I'll have like a decently sized room and I'll bring somebody up and then it'll get all wigged out.
Go ahead, Butters.
Yeah, I wanted to ask David. David, this ticker that I want to bring up is NTCT. NetScout. I don't know if you know this one. It kind of reminds me of an oldie but a goodie that you found a while ago called INOD.
INOD.
No. NTCT.
Yeah.
Gotcha.
The chart's great on it. Yeah, it's a nice looking chart. It's in the Russell 2000, so yeah, I see it every week.
Yeah, I just wasn't sure if you knew of it. Great looking chart. I was talking to a friend of mine, Ralph, about it.
Yeah, I think I know him. Zach Reckett, dude.
Yeah, Reckett.
Gotcha. Yeah, I like that. That's a nice chart.
It is above the golden pocket. Anyway, that's irrelevant. Really nice chart too. Really nice chart. Let me see. There's our harmonic up here. Any other tickers, guys? I might close the space in about 10 minutes.
TEL, TE connectivity.
TEL.
They're kind of a analog to Amphenol. I like them for their ICs and sensors for the semi.
TEL, that's a new one from Crispy. I never really hear you talk about this one.
I don't have a position. It's what I'm exploring.
Whoa, Crispy, give me a chart that goes up and to the right. Go ahead.
Exactly.
Somebody said something. Go ahead.
Waiting for a bit more.
No, I don't like that chart at all.
I know why. It's overbought. Way overbought.
Yeah, I'm waiting for a pullback in this sector, and I'm looking at TEL as the one I'm watching the closest.
Yeah, there's there's a bearish engulfing on the 3-month. It's a clear sign of a reversal. I don't know. I would just, wait for something to consolidate once it finds a base here. So, and find your happy candles. Obviously, not financial advice. So, definitely more down. Looks like it's going to be more downside. Very nice.
Yeah.
All right.
The other one I'm watching is Neocorp NB. That's another one I'm considering. That's just on my higher tier watch list.
NB?
Other than that, I'm just staying in my positions.
Yes, and boy.
Nancy Bravo, Neocorp.
Neocorp.
They're the miner I was telling you about with the Elk River deposit. They got the assays back last month. I'm waiting for it to fall a little bit more, but it seems like it's past its first bubble on the Lassonde curve,
Right.
but it hasn't quite hit the valley yet.
Arguably on the monthly, you got a cup and handle. That's nice. We'll see what happens, but looks really good, at least on the monthly. But there's a little bit of a more downward pressure about to ensue, in my opinion.
Yeah, these guys won't be producing anytime soon on that deposit, but I am looking for like some more potential Department of War or like government contracts. They did give them a $10 million like little strategic investment.
Right.
But I think we're going to see some more double dipping into the sector if the China relationship gets more frothy as far as the rare earths, the critical minerals. These guys are primarily for scandium, niobium, titanium, tantalum, but with a little bit of rare earths on the side. I think these particular segments or these particular materials are going to be critical for space that aren't really getting a lot of limelight since that October meltdown.
I'm gonna keep an eye on that 458. If it breaks that, bro, shit can get ugly on this thing.
Mm-hmm.
Yeah, for sure. It's a nice chart though, in terms of like I see the cup on the monthly. Let's see where the handle goes. Let's see where that handle goes. This is a new one from you, bro. I never really hear you talk about this sort of stuff.
Well, I've been out of the mining space since summer, and I'm looking for some of the areas where not everybody else is looking, and that's primarily tantalum is the material that I think is really interesting for capacitors, for shielding, for microelectronics in space. There's a lot of like interesting applications for tantalum, particularly in space and high-tech electronics industries that we're kind of starting to bootstrap here in America.
Love it. Love it. I see Pepe wants to come up here real quick. R, knock yourself out, bro. You never have to raise your hand.
Always respectful, man. Your space, your time. Thank you for staying on for a while. This is another one for David, man. When he's in the space, I love to go at him because he's just a wealth of knowledge. And anytime someone is giving you knowledge and it's free, you take it, ladies and gentlemen. I'm looking still at the note, the 2 and the 10 year. It's just something I love staring at. To see reflective of the yield, especially since we opened, and they were just in very, very interesting areas on a weekly and on a monthly. If you could touch upon that, what you're seeing possibly, that would be tremendously helpful.
2s and 10s. I mean, the spread has been coming down a little bit between the two of them. I'm gonna say it's a bull, tightener on that. I just bonds is not where I want to be now, but that's gonna be a switch that's hit if what I'm expecting on the equity market it does happen, and that's breadth is deteriorating, financials are succumbing, high yields are blowing out, and that's regardless of the war, right? Like that's what the economy's doing. So I'm going to wait on making any prediction on what that spread does on the 2s and 10s. I think it could come in. I think that I believe that we're going to get, if we are heading into stagflation, you're going to get the 2s to actually move up in yield, and perhaps faster than the 10.
Okay, because I was looking at the note, the 2 and the 10 year note. Futures, they just were left off on a weekly at such an interesting place. And I know they'll work inverse of what that yield will do. And another thing I wanted to mention was, are you looking at the yen basket? All right, because it swept the lows and we came up into a very interesting position recently. And given what the dollar is doing, what are your thoughts about that?
Well, I think Japan has to defend their currency at some point, and that may result in them actually peeling back some treasuries. That's what I think they're going to have to do.
Thank you.
They again, when you create nationalism here, every country has to look out for their best interest, and by doing so, they're going to try to stabilize their currency. They might not be successful, but there's going to be attempts at it, is what I think is going to happen. So I'm expecting more volatility in the currency market. And again, I don't think the dollar is going up because, it's going up because we're the best, dirty shirt in the world, someone said, and that's a common term, but I think that's why you're seeing the dollar move up, because in reality, you could, if you look at GDPs in like Kuwait, I mean, they're talking about a -8% GDP in Kuwait, right? Like, we aren't going to have a -8. Like, if we have access to energy, you're seeing that in a lot of the Middle East countries are being downgraded. I mean, look at real estate in Abu Dhabi. Like, what is it, down 34% in 2 weeks? That people are trying to get out of there. Like, that is, again, things may not be rosy here, but it's better here than it is there. And I think that's what we're seeing on the emphasis of the U.S. dollar. GDP numbers came in really weak relative to what was expected.
The GDP numbers that came in was also heavily influenced and changed by the governmental shutdown, no?
Yes, but most of the numbers that also came out, whether it's CPI or PCE, doesn't even have the war in it yet, right? So, everything we're looking at is in a rearview mirror that is taking out data that would probably reflect that the consumer is definitely, getting shell-shocked by driving to the pump and seeing that it takes $20 more to fill their car or anything else. So it'll be interesting to see the ramifications of that over the next month as that data, comes out. So every economic number we've seen so far is really not reflective of what's happened in the last 2 weeks.
Absolutely.
Yeah.
Go ahead, Pepe. You have your hand raised.
You earlier said to send you some stocks, or for people to call out stocks. I just sent you something on the DMs. I also posted a picture of it in the comments. If you're interested in looking at any of those, I think that the results of how I drew that screener are pretty good, because it shows you the notional traded as a percentage of market cap, prioritizing highest percentage first. So I might yield some interesting results for some trades.
I appreciate that. Yeah, I see it.
This is just from Friday, I think it was. So, this thing refreshes daily.
Appreciate that. Yeah, it's in the comment section, guys, in the Purple Pill, Finwiz. Thank you so much for that. Also, I posted in the Nest oil, and I see 2 candle structures happening right now on the daily. Obviously, there's 22 hours left. I'm just giving you guys the insight of what I see when I spoke on this earlier. Obviously, again, 22 hours left to close that candle, but I always like to digest the setup before it even happens. So I'm just posting this for those guys, for those TA traders, those candle guys, what I'm looking at, especially on oil, which is obviously what's driving the markets as we speak. So obviously not financial advice, and do what you will with that information. And last, any questions, any last commentary, closing? I've been streaming for like 4 or 5 hours. We've been hosting the stage for 4 or 5 hours or something like that, so it's been a pleasure. Any other questions?
I just got here. Tell me everything that happened that I missed.
The good thing is, Pepe, everything's recorded. It's on my YouTube, bro. It's the YouTube.
Just kidding. You can leave. I'm just planning.
I might as well just end it with this. So I do have the YouTube posted in the nest. So a lot of things were talked about, and it's all recorded. The link is in the nest. Shout out to Blonde Joe, Crispy, RR, Star Punk, and everybody that was up here, asking David questions. David, thank you so much for joining up here, man. I do these every other 2 weeks. Every other 2 weeks has been a consistent thing for me. So
every other 2 weeks, is that once a month then? If it's every other 2 weeks?
I'm sorry. I'm just honestly, I'm moving around as I'm talking, so I don't know what the hell I'm saying half the time. But anyway, I am moving around. But yeah, every 2 weeks. Every 2 weeks I'm doing these, and it's been actually successful. I'm not gonna lie. So I look forward to the next one. What else? I think that's pretty much it. Hit the follow button, and if you're into TA specifically,
don't forget a plug. We need a word from our sponsor, Krispy Kreme.
That's coming, Pepe. That's fucking coming, baby.
Donuts. Go to Krispy Kreme.
Dude, Pepe, you're blowing my long game. I'm still in negotiations for the sponsorship.
God damn. All right.
As soon as I change the CH to a K, you'll know the bag is in.
I hear you, brother. It's always a pleasure to have you on the panel. Anyway, God bless, guys. Cheers, and I'll see you guys later on tonight. And Blonde, look forward to that space. Cheers.